Joel, since Kansas, we've taken our own path. We've never done what everyone else did. We took on the fear. We ignored the doubt. We loved the excitement. We believed. Even when our path didn't make sense to everyone else, we kept going. We keep going until our path is the one they wish they had taken.
When the market feels toppy, investors may want to switch to low PE stocks with rising earnings. They're hard to find in the US, but not in many other markets. But you can't compare and buy stocks trading in different currencies, right? You can now, with Interactive Brokers Global Analyst.
Interactive Brokers. Invest globally in stocks, options, futures, currencies, bonds, and funds from a single integrated platform.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Yo, dude, you need some help?
Don't worry about me.
Yo, there's no shame.
No shame? You don't know my family, man.
It's okay to ask for help. Find a licensed therapist at BetterHelp.com.
Selling a home is expensive and stressful, so we set out to create a better home selling experience with a network of the most successful real estate agents in America that'll sell your home for as little as a 2% commission.
The icing on the cake with the Ideal Agent was that we saved $12,000 in commissions.
We would definitely use Ideal Agent again. The whole process was so positive for us.
Excellent service.
Getting right to the point, hiring Ideal Agent, I wish we would have done that sooner, and we would have saved 6 months of time and mortgage payments that would have probably never happened if we would have just gone with them first.
They were so stress-free. The whole process was amazing, and I would definitely recommend them.
We certainly recommend Ideal Agent now to all of our family, all of our friends. It's just a great experience.
We are not a discount brokerage. These are top local agents that'll get you the best results.
Do you listen to the TV on high volume or have trouble hearing conversations? Then you would benefit from hearing aids. Don't waste thousands on expensive hearing aids when you can get Nano's revolutionary technology for just $397. Don't be fooled by higher-priced hearing aids. The CIC Recharge is a true hearing aid, not an amplifier. With rechargeable technology many customers say is superior to more expensive models. Call now and get not one but 2 Nano hearing aids for just $397. Plus, we'll add a portable charging dock and ship your order absolutely free. The CIC Recharge has a tiny in-the-ear canal design that is nearly invisible. Why keep missing out on important conversations or waste thousands of dollars? Call and get 2 CIC Recharge hearing aids for only $397 and free shipping.
800-833-9735. Again, 800-833-9735.
You're watching Daybreak Asia, coming to you live from New York, Sydney and Hong Kong.
We're counting down to Asia's major market opens. And the top stories this hour. The Fed chair gives his most explicit acknowledgement yet that the U.S. could face recession, saying a soft landing will be very challenging.
And activity in the housing have made it more difficult for us to achieve what we want, which is 2% inflation and still a strong labor market.
That warning is set to play on Asian markets, along with losses on Wall Street and a rally in treasuries. Also ahead, China's president slams the suffering caused by sanctions, accusing some nations of weaponizing the world economy. U.S. futures continue to extend those losses after we saw the S&P 500 fall in the New York session. That warning of the risk of recession not sitting well with the markets. We actually had energy leading the declines, and oil continues to extend those declines that we saw in New York, already at the lowest in about a month. Of course, we also had the former New York Fed President Bill Dudley saying that a recession is actually inevitable. So Treasury futures at the moment not doing much, but Bell, the 10-year yield, actually fell towards that 3.15 level.
Yeah, that rally in Treasury, Sherry, certainly setting the tone here for trading in Asia as well. So we're looking ahead to a mixed start here. We do have ASX 200 futures pointing higher this morning, but we will be watching the prices of key commodities closely. You were just mentioning oil, but there's also the contracts of key metals like iron ore, copper, and declines in both of those could limit any rebound that we do see here. Chicago Nico futures, meanwhile, they are pointing lower this morning. 21 of 33 sectors closing in the red in the previous session, and Toyo Securities saying that we can expect more fluctuations ahead. Markets here likely to move up and down in a considerable range. Now, speaking of volatility, that also, of course, takes us to the yen. It does remain the major currency with the highest potential for swings here. So traders also betting, Heidi, that it's not going to lose its crown anytime soon, because demand for low delta exposure in the yen, it is by far the highest among its G10 peers.
Belle, let's get some more on those comments out of Jay Powell at the Senate Banking Committee. Take a listen.
It is our goal. It is going to be very challenging. It has been made significantly more challenging by the events of the last few months, thinking there of the war and commodities prices and further problems with supply chains. And the question whether we're able to accomplish that is going to depend to some extent on factors that we don't control.
Well, joining us is Bloomberg Economics Chief U.S. economist Anna Wong. So, Anna, what did you, or how did you interpret those comments from Jay Powell?
Yeah, I think Jay Powell is being consistent with his what he was saying last week, the hawkish tone from his comments last week, that the Fed is serious about getting inflation under control, whatever it takes. And I think in this testimony, he demonstrated a newfound openness about acknowledging that demand played a role in generating the uniquely high inflation in the United States. Previously, he has mostly blamed it on supply chain bottlenecks. But the implications of him acknowledging that demand play a role is that with the Fed being mostly in control of demand tools, it means that the Fed has the calling to be more hawkish about rate hikes in order to bring down demand to lower inflation.
We've also been hearing a lot of Fed speak today, including from Patrick Harker and Charles Evans, not to mention the former New York Fed President Bill Dudley as well. What were some of the key takeaways, especially when it comes to the potential recession ahead?
Yeah, so Bill Dudley is actually Bloomberg Economics advisor, so I know his view quite well. Bill is saying that recession is inevitable, but he does see that there are still some momentums in the U.S. economy, such that recession is not right around the corner. But he thinks that given the inflation challenge, the Fed will have to go higher, and that would be why the U.S. economy will likely enter into recession 12 to 18 months from now. Whereas Barkin and Evans, I think it's noteworthy that those two who are rated in our spectrometer as either dovish or being leaning toward dovish, both of them are now on board with hiking rates all the way beyond the neutral of 2.5. Just a month ago, they were saying that, well we're going to hike up to 2.5% and stop and look around. But I think that ship has sailed. All of the Fed participants are now on board with rates being at 3 to 3.5% by the end of this year.
Bloomberg's Anna Wong there joining us from Washington with her take on Fed Chair Powell's Senate testimony. And of course, we also heard about global economic pain from Chinese President Xi Jinping. He criticized sanctions for stoking those pains in a speech kicking off this year's BRICS summit. Take a listen.
是一再证明。
Politicizing, instrumentalizing, and weaponizing the world economy using a dominant position in the global financial system to wantonly impose sanctions would only hurt others as well as hurting oneself, leaving people around the world suffering.
President Xi also looking to bolster relations with emerging markets amid strained Western ties. For more, let's bring in Bloomberg's Greater China Senior Executive Editor John Liu. John, this is a really interesting grouping, right? I mean, we call them BRICS because they're emerging economies, but at the same time, geopolitically speaking, and how they're aligned, especially with India being a close ally to the U.S. What sort of message was President Xi trying to send?
I think China sees geopolitics, no matter where it is around the world, in the lens of Beijing vis-a-vis Washington. And I think with the invasion of Ukraine, Xi Jinping is using this opportunity to speak to this audience in the emerging markets, which maybe didn't have that much skin in the game when it came to the Ukraine, but is now feeling the repercussions of not only the sanctions, but of higher commodity prices, higher food prices as a result of that invasion, and trying to speak to that audience and trying to gather some support for China's position, which is sort of diplomatically supporting Russia, but also trying to put much of the blame for the conflict on the U.S. when it comes to NATO and its expansion in Eastern Europe.
John, we know that there are expectations for a Xi Biden call sometime perhaps this summer. Are the tariffs on China likely to be reviewed at this point?
I mean, all the noise that we're hearing out of Washington at the moment is that, yes, they will be reviewed, and very likely some portion of those tariffs will be removed in a way that will help the U.S. in terms of inflation, but then leave President Biden some room politically, domestically, as we come to the midterm. That should be a point of discussion when the two leaders meet. Obviously, China would like to see those tariffs lowered, especially with the economy as weak as it is right now.
Yeah, let's talk a little bit about the economy, because it seems China wants to continue to ease up on regulations, especially around the fintech sector as well. What do we know?
So Xi Jinping, in addition to the BRICS summit yesterday, also spoke at a meeting of the Commission to Deepen Reform. And there he talked about supporting the platform economies, which is sort of a way of talking about big tech. And obviously, companies like Alibaba, companies like Tencent have really suffered from this crackdown in terms of anti-competitive behavior and other regulatory things. But they are really large, important employers. And as the economy slows, as jobs become scarcer, China needs those companies to step up and to help with that employment situation.
Bloomberg's Greater China Senior Executive Editor John Liu there. Let's get to Vonnie Quinn with the first word headlines. Vonnie.
Heidi, thank you. European Union leaders are planning to give Ukraine the green light to become a candidate for membership of the bloc. It follows an intensive campaign by Ukrainian President Volodymyr Zelensky. A draft statement seen by Bloomberg says the EU is also granting candidacy status to Moldova. The formal decision will come at the EU summit in Brussels starting Thursday. The Bank of Korea says negative impacts on growth from rate hikes will be limited. A senior deputy governor has told an economic forum that prolonged inflation remains a risk and it must be tamed through preemptive policy. South Korea's producer prices rose at a quicker pace in May, jumping 9.7% from a year earlier. More economists now see the BOK hiking by 50 basis points at next month's meeting. Sri Lanka's Prime Minister says the country's economy has completely collapsed and the only path forward is an agreement with the IMF. Ranil Wickremesinghe told Parliament Sri Lanka is now unable to import fuel because of heavy debt. Officials are speaking to the IMF this week about support. Plans are also underway for a summit with India, China and Japan to help secure aid. Officials in Afghanistan say the death toll could rise after an earthquake destroyed thousands of homes. At least 1,000 people were killed, with 1,500 more injured. The magnitude 6.1 quake sets off a new humanitarian crisis in a country already facing a crumbling economy and hunger. The Taliban's supreme leader made a rare public appearance to plead with the international community for aid. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Vonnie Quinn. This is Bloomberg. Sherry.
And still ahead, China's growth policies are failing to spur property demand. We'll look into how that's stoking fears of a steel glut later this hour. But first, a look at the Bank of Japan's options as speculators ramp up bets of a tweak to its ultra-easy monetary policy. Ed Rogers joins us for that next. This is Bloomberg.
This is Omaha Steaks. This is Omaha Steaks. So's this. And this. And even this. And yeah, this too. There are so many ways to enjoy our guaranteed perfection. Just a little everyday wisdom from Omaha Steaks. Visit omahasteaks.com/TV today and you'll get 8 free burgers. Never tried Omaha Steaks? Save an extra $20 with code SUMMER at checkout.
To adapt in a fast-changing world, you could hire a professional pit crew.
All right. Oh, okay.
They deliver real-time data and business forecasts when you need it.
I think it was fine how it was.
To help you stay ahead of the curve. Or you could use Workday, the finance, HR, and planning system that helps CFOs make better decisions faster.
On the other hand, we had a great fourth quarter.
For an accelerate your decision-making world. Workday for a changing world.
Guests check in, then check out their phones for financial insights from Merrill. This gentleman, he's learning how carbon-neutral investments could energize his portfolio. And with advice from their Merrill advisor, they've decided that the future is women-led startups. She's got 1 million followers, but she's following trends in next-gen tech.
Personalized advice so impressive, your money never stops working for you with Merrill, a Bank of America company. What would you like the power to do?
Reduce carbon emissions, they say. When it comes to our planet, we need to do more. We choose positivity. We choose to change. Tomorrow now. We'll learn, we'll try, we'll do and undo whatever it takes to get there. We don't have to commit, we choose to. We choose Earth. It's up to us, and that's our biggest power, the power to choose. Do you? EDP, changing tomorrow now.
Is it the most difficult job in politics? Your job?
I would say it is unprecedented and unique. I can't find many situations where the head of the government has two bosses.
Is there anything you would like to apologize for to the Hong Kong people?
No.
Ongoing rate increases will be appropriate. Expeditious progress toward higher rates. We know we need to have restrictive policy, and that's where we're headed. The American economy is very strong and well-positioned to handle tighter monetary policy.
If interest rates go too high, too fast, it could drive us into a recession?
It's certainly a possibility. The other risk, though, is that we would not manage to restore price stability and that we would allow this high inflation to get entrenched in our economy. Price stability is really the bedrock of the economy. We must restore price stability, and we will. The public should believe that we will get inflation back down to 2% over time. We are strongly, strongly committed to restoring price stability. We do understand that it is the thing that we need so that we can get back to the kind of labor market that we all want.
Fed Chair Powell testifying before the Senate Banking Committee, and of course we continue to see the Federal Reserve tightening and that rate differential against the Bank of Japan that's really pinning rates down is really what's driving the Japanese yen already to that 24-year low against the US dollar, although we are seeing a little bit more strength for today's session at 136. We also saw it gain ground a little bit against the US dollar in the previous session, a little bit of easing on dollar strength as well, but the Aussie yen continues to gain ground at the moment, trading at that 94 level. Of course, we continue to watch that push and pull factor from monetary policy divergence, but at the same time, the likes of Goldman Sachs, Societe Generale, seeing that the yen is still undervalued and saying that it could be a hedge against the risk of recession amid global monetary tightening. Let's discuss with Ed Rogers, Rogers Investment Advisor, CEO and CIO. Ed, good to have you back. Let me just start with, where do you see the level of the Japanese yen going? Because we continue to see the rate divergence, but at the same time, some people saying that there's still bullish yen.
Yeah. Thanks for very much for having me back on. A little bit short notice, but markets are certainly moving around a lot, as is the yen. So, look, we think that the yen can still weaken. I think for quite some time we've been saying that 125 to 135 is an appropriate level, given where interest rates were. And I think I don't see Japanese changing interest rate policy anytime soon. So that's where we are.
The weak Japanese yen is supposed to help all of those Japanese exporters, right? Does that mean that we are going to get that boost to the equity space?
You know, equities are a little bit tough call because there are going to be certainly some significant losers. There's no doubt with this. I think it's on a sector by sector basis. You want to think about hospitality, you want to think about real estate, you want to think about steady income flows that are going to, steady cash flows that are going to do well in this environment. Other areas are not. I mean, the tough inflation hit stuff will be, food and fuel and things that are the Japanese import is very problematic. Japanese exports, it's fantastic. So it's really a sector by sector analysis that you need to have.
Ed, what's the feeling when it comes to inflation expectations in Japan right now? Obviously, the BOJ is sticking to its view that all of this, in a sense, is supply-driven and therefore perhaps more transitory than they'd like to see in terms of the stickiness of inflation and wage inflation in particular. But what's the mentality?
There are a couple of parts to the answer to that question. The first part of the answer, we've been waiting for not years, but decades to see actual inflation come back in Japan. We've been in a highly deflationary environment, and it's caused endless amounts of grief in political and social and economic levels. So just quietly, I think some in Japan are happy to see this play out. If this is the way we bring inflation, then so be it. In the medium term and the short term, it's actually accomplishing the Abe government goal of 2% inflation. It finally seems to be happening, and it may well take hold. So remember, Japan needs to change decades of economic, downward cycles, if you will, of productivity. So in the medium and long term, of course, if the big question is whether we're going back to the 70s sort of stagflation, we are not at Rogers Investment Advisors a believer in that. I think the situation is being as well managed as it could right now. I think probably they were fairly late to raise rates at the Fed level. But it now seems that the world has cottoned on to this being a significant issue. I just think the Japanese uniquely can afford to sit here and on one level benefit from everybody else raising rates, and they can afford to be a little bit slower.
There's so much wholesale selling going on at the moment. Your strategy currently, you're saying do what your grandmother always said. What did she say to do?
So buy quality on sale. And if you think about it, Japan is now 25% cheaper than it was 3 months ago. Again, the assets, the cash flows that you're buying, they're phenomenal businesses that are much cheaper today than they were 3 months ago. So buy quality on sale. I think this is a great time, frankly, for an international investor who's thinking of an international portfolio to be looking at Japanese equities and a variety of other real asset purchases as well.
And how much more competitive does it get to buy Japanese assets at a time when the yen is low and you have a competitive edge when it comes to exports against, say, South Korea or China?
It's a great question. For almost 3 years now, we've been sitting here in Japan inside this bubble, and no one's come. Nobody could afford to get into the country. The Japanese government really wasn't letting people enter. So what you'd call the normal due diligence process, the normal review you would do before committing more capital, more risk capital, has not been taking place. So how much farther does this have to run? It's a really interesting question. First of all, I think things can still get cheaper. There's no reason why we don't hit 140 at some point in the next month or two, if interest rate policies sort of all the major players stay the same. What does that mean? Assets can get cheaper still, but I think you need to be aware that a whole lot of people would be thinking the same thing right now. So you need to start your due diligence process. You need to figure out how to get to Japan, and you need to figure out how to, if you will, rate, if you will, the opportunities.
There's a lot of talk about support for startups, for tech and innovation in Japan at the moment. What reforms do you think need to take place in order to reinvigorate corporate Japan?
Again, a great question. We think about it every day, and we have been for most of the last 30 years. A couple of important changes that have taken place. The National Endowment Fund is launched. That will be, a $70 to $80 billion vehicle for making new investments and making a different type of investment on behalf of really the Japanese government, the Japanese people. The changes that have gone on in corporate Japan to make Japan more internationally competitive continue to happen, sometimes a little bit under the surface, but sometimes not at all, sometimes very publicly. The changes, if you will, in the Tokyo Stock Exchange, their promotion of good corporate governance, the need for outside directors, the way to run your business better, that has been a very live and active dialogue. And I think it's getting to the point where you can do a little bit of corporate arbitrage, if you will, to see which companies are better run and which are not better run and which are adhering to more, frankly, favorable policies, if you will, regarding ESG, regarding corporate governance. And that's going to create an opportunity because there are, again, very clearly identifiable cash flows. You go to the balance sheet level, you do the corporate due diligence. This is a land of laws. This is a place where most of the accounting works. And you can go and do really interesting due diligence about the business, but also look at the management of the business and start to make some interesting, investments.
And Rogers, good to have you back. Rogers Investment Advisor, CEO and CIO, the outlook for the Japanese markets. In fact, we are counting down to the start of trade in Tokyo and Seoul. Here are some of those stories that we're watching in Japan. The Jibun Bank Japan PMI data is set to be released in just over an hour. We'll bring you those live. Toyota also aiming to boost July-September production by 40% from the same time last year, despite continued fallout from COVID-related supply disruptions. And the Nikkei now reporting that Toshiba is planning to develop motors for electric aircraft. Over in South Korea, we just got the May producer price numbers rising 9.7% year on year. And of course, this is just accelerating inflation. We continue to watch what the Bank of Korea does. The question is, will we see an outsized interest rate hike next month? General Motors says that its South Korean unit plans to raise annual production capacity to 500,000 cars and introduce a GMC branded pickup truck to the market. And the Finance Ministry will release its July government bond issuance plan later today. We're about half an hour away from the opens in Japan and South Korea. This is Bloomberg.
Bloomberg Daybreak Asia is brought to you by UKG. Our purpose is people.
I graduated top of my class in business school. I lead a team of over 100 people. And since I joined the company, my department has increased revenue by 35% year over year. Also,
I make 18% more than her. It's time to close the gap on pay equality.
Let's all do our part.
Right now, we're all feeling a little strapped. But weekends are still all about grilling. And Walmart always keeps prices low on our fresh ingredients, so you can save money and live better.
We empower those who act. Those who see the correlation between things above and things below the surface. Those who navigate risk by meeting every turn with a heightened awareness of what's possible. Constant assessment, Determine the best position. Catch the perfect wave. CME Group, where risk meets opportunity.
Align your portfolios to a more resilient future. Introducing Bloomberg Paris-Aligned and Climate Transition Indices. The new Bloomberg benchmarks are designed to help support net zero investment strategies and to meet the EU regulatory requirements. Be part of the transition to a low-carbon economy with a family of customizable equity and fixed income climate indices. Visit Bloomberg.com/PAB.
We are just getting an alert crossing the Bloomberg Shenzhen requiring PCR tests for people entering public venues. This, as we see China's COVID-19 outbreak really shifting to the south coast. A flare-up in Shenzhen, of course, a key tech and manufacturing hub, really triggering these mass testing drives, as well as a lockdown of some neighborhoods in Shenzhen as well. We also saw in the gambling enclave Macau, just about an hour's drive away, that they're racing to stop the first outbreak in 8 months as well. This is, we see, a subduing of the virus in Beijing and Shanghai, but of course they're starting to move further to the south. Shenzhen now requiring PCR tests for anyone entering a public venue. Let's get you a quick check of the latest business flash headlines this hour. And Tesla CEO Elon Musk says new plants in Germany and Texas are losing billions of dollars as the automaker ramps up production. Musk called the factories gigantic money furnaces in a video interview recorded at the end of May. The comments offer new insights into Musk's recent decision to cut costs at Tesla by laying off employees. The overhaul at Jack Ma's Ant Group may be getting closer to satisfying China's financial regulators. Bloomberg has learnt that Ant is poised to apply for a financial holding company license as soon as this month. Sources are telling us that the PBOC intends to accept the company's application and start a review process looking into its capital strength and business plans. Sources are telling us that Malaysian state-owned firm Johor Corp could look to raise almost $230 million in an IPO of its palm oil unit. The firm's investment arm is said to be asking bankers for pitches for the potential listing of Kulim, Malaysia. Coming up next, we preview central bank decisions coming out of Southeast Asia today. Policymakers signaling they're in no rush to match the Fed. This is Bloomberg.
Do you listen to the TV on high volume or have trouble hearing conversations? Then you would benefit from hearing aids. Don't waste thousands on expensive hearing aids when you can get Nano's revolutionary technology for just $397. Don't be fooled by higher-priced hearing aids. The CIC Recharge is a true hearing aid, not an amplifier. With rechargeable technology many customers say is superior to more expensive models. Call now and get not one but two Nano hearing aids for just $397. Plus, we'll add a portable charging dock and ship your order absolutely free. The CIC Recharge has a tiny in-the-ear canal design that is nearly invisible. Why keep missing out on important conversations or waste thousands of dollars? Call and get two CIC Recharge hearing aids for only $397 and free shipping.
800-833-9735. Again, 800-833-9735.
This is Scribd, an app that gives me access to ebooks, audiobooks, podcasts, and more. With Scribd, I can get in my steps in countless pages. Scribd makes every moment a reading or listening moment. Go to Scribd.com and try it free for 30 days.
Yo, dude, you need some help?
Don't worry about me.
Yo, there's no shame.
No shame. You don't know my family, man.
It's okay to ask for help. Find a licensed therapist at BetterHelp.com.
I kept seeing this shoe brand all over TikTok. It's called Kizik.
Look at this.
Bam! Bam! Look at that. These are absolutely amazing. The whole purpose behind the shoe is that it's completely hands-free.
Oh, no! That's so cool!
They're so easy to get on.
No tying, no pulling, no heel crushing, no hands.
Kizik. They are no ordinary shoe.
Time to step up your shoe game and step into Kizik's. Get 15% off today at kizik.com/TV.
And I would even say with the announcements, with the right announcements of the central banks now to increase the interest rates, and that I think quite in a steep way, in particular when I look at the steps announced at the Fed. And again, I support those steps clearly. I think that it's always hard to put a percentage, but at least I would say we have a 50% likelihood of a recession globally, but also in Europe.
You really get a deep downturn when things in the financial system break and the ability to supply credit to people becomes impaired. I don't expect that to happen this time. So I would expect a mild recession like 1990 or 2001, not a deep recession like 73, 74, or of course the great financial crisis.
Bloomberg Economics advisor Bill Dudley and Deutsche Bank CEO Kristen Saving there on the odds of a recession. Let's get more analysis on the Fed's policy direction. Our Bloomberg Chief Asia Economics Correspondent Enda Curran joins us now. So how do you read this warning from Jay Powell?
I think it's an explicit acknowledgement from him. I think it's the first time, actually, Heidi, he said that there is a chance now, or at the very least, it will be very hard to secure a soft landing for the economy. And obviously that means there's a chance that it does fall into a recession. Now, he didn't say that explicitly. He didn't say it was, a done deal, so to speak. He also said there is a trade-off. The alternative is that you allow inflation to become entrenched and inflation expectations become entrenched, and obviously with all of the consequences that has. But at the same time, though, it was certainly noteworthy because the talking point at the moment among most watchers is that it's inevitable now that the US probably will fall into a recession. There's a risk that the global economy will fall into a recession. Citigroup putting those chances 50-odd%. So the Fed chair, Mr. Powell, came under a lot of questioning at the Senate testimony, and he did seem to acknowledge at the very least what people have been saying for a long time now, that when you're hiking rates at the pace that you are, pulling off a soft landing is going to be a pretty tough task.
You mentioned the global economy's potential to fall into a recession as well. How bad could it get?
Well, there are two things at play at the moment. You've got both the US economy slowing down and under the pressure that it is, and at the same time you have China, the world's #2 economy, in the hole that it is due to the COVID-0 restrictions. So, that kind of offset that was there in previous downturns, i.e. when the rest of the world would slow, China and Asia might rev it up a bit, that can't be leaned on this time. So there is a lot of concern about a global slowdown. As I mentioned, Citigroup talking about 50-odd% chance of a recession. And I think most importantly, this time around, a lot of central banks, a lot of governments around the world are actually pretty spent in terms of what they've done to support their economies, even as they raise interest rates, for example. Interest rates are already still quite low by historical standards. Obviously, governments have borrowed and spent a lot of money, so it's not clear where the public support would come from the next downturn. So I think all the indications are that the world is in a fairly tricky spot at the moment, and I think 6 months from now could be in a fairly precarious position.
We also have the Indonesia and Philippines rate decisions today.
So Indonesia, they're trying to balance a weakening currency. That would suggest you want to have higher interest rates. Inflation, at least core inflation, isn't a major concern there. So economists think that they could hold off on raising rates. That's interesting, given what the Fed has been doing. You would think Indonesia would have to be jacking them up too. Philippines, a bit of a different story. Their inflation is at the highest since 2018. They do have a job of work to do, so they are expected to, Benjamin Diokno, it's his final meeting before he goes off the finance ministry. He is expected to raise rates there. So, but net, you'd have to say neither central bank are showing the kind of panic that you might have thought would be likely to raise interest rates, given the pace that the Federal Reserve is raising interest rates.
Yeah, which is why we continue to see the downside pressure on their currencies, right? The Philippine peso at that 16-year low. And the current Bloomberg's chief Asia economics correspondent with an outlook on monetary policy and the global economy. And of course, when it comes to those inflation fears, rising prices, a lot to do with that surge in commodities prices that we've seen recently. But at least for today, it seems that oil futures are taking a pause in New York. They fell to the lowest in more than a month. And the pullback continues in the Asia trading session. We're also seeing copper and iron ore extending severe declines. Bloomberg's Sue Keenan joins us now. And Sue, not really that surprising, given that we're afraid that we might fall into a recession and we're going to see that demand destruction.
Yeah, demand is the key concern, and that's why we had West Texas Intermediate oil down about 4% in the latest session, and Brent crude down as much as 6%. Oil really has been under pressure. This is the second time we've seen oil fall sharply in less than a week. And we're also seeing fewer major investors trading oil. You've got to remember the price of trading got a lot more expensive after Russia's invasion of Ukraine caused liquidity crisis. And in the Wednesday U.S. session, we did have Fed Chair Jay Powell testifying before Congress, doing little to dampen fears of recession. And so prices of oil and were down. Gold held gains in the U.S. session, although it's giving back some of those gains at this hour. Notably, copper tumbled to its lowest since March 2021. And these are, again, concerns about demand. Also, China adding to this, the rolling Chinese lockdowns, slowing demand over there, as well as the slowing global housing markets have really weakened sentiments, investors and analysts say. Drop into the Bloomberg one more time and you'll see a pattern with oil, that the spikes we've seen in oil, and you have to remember it was just 2 weeks ago, oil was at 120. These spikes often precede recessions, and you've got Citigroup's Ed Moore saying that you can expect oil to go lower from here and to be a lot more choppy from here. The path ahead, he says, will be bumpy.
Iron ore, in the meantime, extending that route.
Yeah, China's pro-growth policies have done little to sort of tamp down the concern that the market is much more fearful now than it was before, that there's going to be a glut of steel amid all this slowing demand. Futures in Singapore have lost about a quarter of their value over the last 2 weeks, and this is as the Chinese economy struggles to emerge from the lockdowns. Weak demand is also impacting a lot of these steel companies. At least 18 blast furnaces have been idled as companies put them in a maintenance, and that's triple the rate we saw just from 6 days ago. By the way, molten iron output falling by the most, more than 54,000 tons a day. Analysts say prices have much further to fall here, and there's somewhat of a bit of irony because China has seen a lot of improvement on the COVID front. The number of cases has really fallen in the last few weeks. However, this is a concern that traders are now really focused on, the crimp in demand that currently exists. Back to you.
Bloomberg Sue Keenan there. We are just less than 30 minutes away from the market opens in Japan, Korea and here in Australia. Belle's taking a look at the outlook when it comes to Aussie stocks.
Thanks, Heidi. Well, of course, we've lost around 15% off the ASX 200 off its peak of this year. But what's interesting in this market is that we've also seen earnings revisions upwards over the past 6 months. So that's as things like COVID controls ease, also commodity inflation as well, really boosting underlying expectations for company earnings here. But when Bloomberg Intelligence has been looking into why we're seeing that drop, but not corresponding with the earnings estimates, and what they're finding here is that the market is becoming a lot more dependent on the direction of bond yields rather than the underlying fundamentals. So you take a look at this chart here. This is the weekly consensus PE ratio, and we're seeing it now trading at 12.4 times forward earnings. So you compare that, it is below the drop of the worst of the COVID crash and off around 40% from November of that year. Now you compare that to what we're seeing for the Aussie bond yield. We're now around that 4% level, up from 0.7% on October 2020. Now that is as we've seen positive earnings revisions of around 25% over the past 6 months. And you take a look at which sectors have really been benefiting from that. Well, as you would expect, the energy and utilities benefiting from rising commodity expectations. But meanwhile, these rate-sensitive sectors, so areas like discretionary, real estate, technology, steep drops across the sectors here. We're not seeing that reflected in the EPS revisions. So what is really contributing most to the declines here? Well, that is actually the Aussie banks. Again, interesting here, Sherry and Heidi, because Aussie banks, of course, can really benefit in a rising rates environment with higher net interest margins. But we've got Commonwealth banks are off around nearly 12% year to date. It's made up around 10% of the total losses on the ASX 200. Steep guides, of course, across the whole sector. Heidi.
Let's get you to Vonnie Quinn now in New York with the first word headlines. Vonnie.
Heidi, thank you. Chinese President Xi Jinping is criticizing sanctions for stoking global economic pain. In a speech at the BRICS summit in Beijing, Xi did not explicitly mention the U.S., but said some nations are politicizing and weaponizing the world economy and causing suffering. He also cautioned against confrontation and suggested that NATO was responsible for antagonizing Russia. U.S. Trade Representative Catherine Tai says tariffs on more than $300 billion in Chinese imports provide significant leverage and are useful in negotiations. Tai made the comments as Biden administration officials debate whether to keep the duties in place. Speaking to lawmakers, Tai also said there's a limit to what can be done to ease inflation through tariff changes.
The China tariffs are, in my view, a significant piece of leverage. And a trade negotiator never walks away from leverage. We need to use our tools more effectively. We need new tools. We need to bring an entirely new approach.
China has approved a plan to promote what it calls healthy development of the payment and fintech sectors. A meeting chaired by President Xi Jinping also backed enhancing regulation of major payment platforms. Beijing has promised to unwind a sweeping crackdown on tech companies that ensnared every sector from online education to gaming. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Bonnie Quinn. This is Bloomberg. Sherry.
Hi, Bonnie. Coming up, we hear from Qatar's Minister of Finance about how the war in Ukraine and surging energy prices are affecting the economy. That exclusive conversation from the Qatar Economic Forum is next. This is Bloomberg.
At Lovesac, we design furniture for life. Real life. Messy life. Life that changes and brings us together for movie night. A life where batteries run down and get charged up again. Because now, Lovesac Sactionals can be upgraded with Stealth Tech. And immersive surround sound by Harman Kardon hidden inside. Upgradable, washable, and guaranteed for life. Don't just hear it, feel it at a Lovesac showroom near you.
Guests check in, then check out their phones for financial insights from Merrill. This gentleman, he's learning how carbon-neutral investments could energize his portfolio. And with advice from their Merrill advisor, they've decided that the future is women-led startups. She's got 1 million followers, but she's following trends in next-gen tech.
Personalized advice so impressive, your money never stops working for you with Merrill, a Bank of America company. What would you like the power to do?
Join the savvy customers who for decades have been using RockAuto.com to access the info hidden behind parts counters. Take advantage of reliably low prices.
All the parts your car will ever need, RockAuto.
Time-saving element of Tovala has definitely changed my day, my night, and just makes life easier for me. Tovala is my personal chef.
Tovala. Browse this week's meals at Tovala.com.
The fuel price is going to be a little lower, but we don't have a crystal ball. We don't know what's going to happen. What is true is that we have a hedge position. This year we have above 70% of the fuel hedge. Next year we only have 25%. The most important thing is your competitors, how they are. You have people that they hedge. You have people that they don't have any hedging. So I think if at the end we arrive to a situation with high fuel price and no hedging, for sure we will transfer the cost to the price, to the fare.
That's IAG CEO speaking to us at the Qatar Economic Forum on how airlines are handling fuel price swings. Well, we are tracking the fallout of the global supply chain crunch, and these are the top stories today. Boeing sees supply issues for the aviation sector persisting until at least the end of next year. CEO David Calhoun says part suppliers have been affected by staffing shortages. That's adding pressure to an industry facing or racing to keep pace with the rebound in travel demand. Meanwhile, shipping costs for fuels like gasoline and diesel have soared in the wake of Russia's invasion of Ukraine. Baltic Exchange data shows that clean tanker freight rates have more than doubled this year. Ship owners for one key route in Asia are now earning over $49,000 a day to transport energy products. That compares with just $98 a day prior to the war. And London's luxury department store Harrods has delayed its famous summer sale as the new season's goods have been caught up in the global supply chain snags. Harrods Managing Director Michael Ward told Bloomberg that their supply chain is running 2 to 3 weeks behind schedule, Sherry.
And Heidi, take a look at the commodity space. Of course, it's been all that talk of potential recession that's really been felt across the commodity space. Oil prices, even in the Asian session, we continue to go lower already at that 1-month low. Copper falling to that 15-month low on potential concerns that we might see a recession here in the U.S., also where the Chinese economy is headed. Iron ore has fallen significantly earlier this week. More Chinese furnaces idled. We saw a little bit of a rebound there, up 3%. Gold unchanged at the moment, but this after gaining a little bit of ground in the New York session on that haven demand. Bloomberg Terminal users can read more about those stories in our newsletter, Supply Lines. That's on NI Trade NL. Despite the swings in oil and gas prices, Qatar says it's sticking to its fiscal policy plan. Finance Minister Ali Al-Kouari told us exclusively that the Gulf state is not isolated from inflationary pressures and is looking to diversify its sources of income.
Oil prices is good news, of course, for any finance minister, for us, we don't look at it this way. We look at it like we have a very disciplined, fiscal policy plan, a medium-term plan for the country, and this is based in a long-term planning and spending, and we are very disciplined about our spending and our fiscal reforms. So we're not changing our plans as a result of this high oil prices. And we should not forget, 2 years ago we almost had negative oil prices, so it's not far away, and so we should always remember this. So we are sticking to our plans, we are sticking to our fiscal policies, and we look at it like, this is something we need to use, surplus to enhance our reserves and enhance our investments.
Are you changing where the money goes in terms of the government? Is more going to QIA in this environment? Is more going into infrastructure or social policies?
We have a fixed, as I said, fiscal policy. And the fiscal policy itself has a certain formula, decides how much it goes to pay debt, how much it goes to enhance the reserves of Qatar Central Bank, and how much it goes to QIA. So, and we are sticking to that formula. Regardless, tax reforms is part of our plans. We're looking to that taxation, policies here and what we can do. And diversification of revenues is in our plan. Of course, this is also goes in line with what I was saying earlier about the fiscal policy framework. And we will look to the right time, to apply such taxes. We have to be very careful. Don't forget today there is inflationary pressure, going on, in the world, and Qatar is not isolated from that inflationary pressure. So we will have to really select the right time, because sometimes when you apply taxes in such inflation cycle, the results are not.
So essentially, what you're saying is now is not necessarily the right time. Yes, the next 6 months, not the right time.
We'll have to assess the right time for it.
Okay. There's been a lot of real estate, a lot of hospitality built, and there isn't a massive population here, just 2.8 million people. Is there any way you can avoid a real estate slump?
Yeah. Well, okay, real estate business goes up and down, we know that. But what's going to happen, I think we have to look to the Qatar national vision and diversification plans for Qatar. Qatar embarking in a huge diversification plan, and we should move away, what we have done in the past for the last 10 years, we spent so much in the infrastructure, in the construction sector, and they drove the economic growth. The way we see it for the next 10 years, we're going to be seeing the priority sectors, of the economy, moving in, like, investing in the financial sector, the fintechs, in the innovation, technology, in food hub, logistics, and Qatar has a great position to apply this position. So we're going to see a huge shift, in the economy from.
And that would bring in more people. Ultimately, That's the hope. I want to shift gears. Last question here. You've invested money in, or you've talked about investing money in Egypt as they go through their own inflation crisis, high energy prices, high food prices. Does Qatar and does the Gulf generally have a responsibility to put money into MENA economies in order to prevent them from collapsing essentially under the stress of the economic situation right now?
Okay. Of course. Qatar has been a major investor in Egypt, and this has been going for many years. We enjoy an excellent relationship with Egypt.
Now,
Yes, even these things comes and go, but always brothers. They remain brothers, for a long time. And the way we look at it, we look to the future, and the future is promising. Egypt is a great economy, is a growing economy, and has many opportunities, as we go along. So when we promise to invest in Egypt, because we believe, in the future of the economies, so we'll continue to do this investment.
Qatari Finance Minister Ali Al-Kawari speaking with Simone Foxman at the Qatar Economic Forum. Be sure to tune into Bloomberg Radio 2 to hear more from the day's big newsmakers. You can get in-depth analysis from the Daybreak team there, broadcasting live from our studio in Hong Kong. You can listen in via the app Radio Plus or BloombergRadio.com. Lots more ahead. This is Bloomberg.
Enjoy the magic of freshness from nuts.com. Fresh nuts, dried fruits, sweets and treats, freshly roasted, freshly dipped, freshly seasoned, and delivered fast with free shipping. Nuts.com. Fresh snacks from our kitchen to yours.
Feeling good. You know me. I'm all about my business. No apologies. I run a life fitness. Can't believe in this moment. I'm free.
Tommy John, this is what confidence feels like. Go to TommyJohn.com.
This tiny payment thing is a giant pain.
Hi, ladies. Alex from US Bank. Can she help? How about a comprehensive point-of-sale system
that can track inventory, manage schedules,
and customize orders? That's what US Bank Business Essentials is for.
What about a new oven? Can US Bank help us there?
We can serve loans in as fast as 12 minutes.
That would be a big help. Huge.
Jumbo. Ginormous. Woo! Woo!
Finding ways to make your business boom. That's what US Bank is for. We'll get there together.
This feeling of certainty comes from inspiring your customers and expressing heartfelt thank yous with promotional products people love from the experts at 4imprint. Enjoy that feeling of certainty at 4imprint. 4imprint, for certain.
And here's a quick check of the latest business flash headlines. JP Morgan Chase is laying off hundreds of home lending employees and reassigning hundreds more. Bloomberg's learned that the total affected will be more than 1,000 workers. Rapidly rising mortgage rates have driven down demand in what had been a red-hot housing market. Goldman Sachs is expanding further beyond its base in New York. The firm plans to station 5,000 employees in a new office tower in Dallas. Goldman and the developer Hunt Realty are investing roughly $500 million in the project. The bank already has almost 4,000 employees in North Texas. Crown Resorts has finally gained permission to open its flagship Sydney casino. The news comes just days before Blackstone takes over the troubled Australian operator. Regulators have allowed Crown to conditionally begin supervised operations. The casino's opening has been on hold since late 2020. Blackstone won its $6.2 billion takeover bid for Crown in February.
The stocks that we're watching. Toshiba, of course, one to watch when it comes to the Tokyo session. Yomiuri reporting that the company received a proposal to take it private from government-backed Japan Investment Corp. We're looking at these Asian energy names as well. Recession worries pushing oil, of course, to its lowest in over a month. A lot of those are based in Australia, including the likes of Santos, but also watching Japan Petroleum, S Oil Corp and SK Innovation as well. Also looking very keenly as to action when it comes to the bond markets. Australian bonds jumping earlier in the session to follow from rallies from global peers. These fears of a US recession really sending investors back into the depths of government debt there. We saw the Australian 10-year dropping to 3.84, and we're seeing really that play out across the other parts of the curve as well. The 3-year tumbling 12 basis points, that 10-year yield with that 15 basis point slide set for a 4-day decline now. And this is what we're seeing really outpacing Wednesday's drop in similarly dated US yields amid appeal for haven security securities. Really, we've seen the highest yields that we have had in years, Sherry, and all of this is really kind of encouraging that relevance of sovereign bonds back into the balanced portfolio.
Yeah, the 10-year yield really rising to that 3.5% last week, just to fall to 3.15 right now. But yes, you talked about those haven assets. Well, take a look at that, because really we are seeing that risk-off sentiment sort of spreading across Asia, right? I mean, Nikkei futures down 0.6%. This would make it a second session of losses if we open and close to that downside. We are seeing U.S. futures also extending declines. We had seen it in the New York session, reversing earlier gains, especially after Chair Powell testified in the Senate, really reiterating that commitment to curb inflation. What does that mean? Perhaps faster rate hikes. Also that he's talking about the risk of recession, that soft landing will be very challenging. All of that really being felt across markets right now. Although Kiwi stocks, I gotta say, they're rebounding from yesterday's losses, up 0.5%. Of course, we continue to watch what's happening with the RBNZ right there. Coming up in the next hour, Hartman Issel of UBS Wealth Management gives us his defensive strategies amid rising rates and warnings of recession. Plus, Teresa Kong will share her insights on China's credit market woes and possible contagion risks. The market opens in Sydney, Seoul, and Tokyo are next. This is Bloomberg.
Choose proven quality sleep from the Sleep Number 360 Smart Bed because it can gently raise your partner's head to help relieve snoring. Ah, that's better. And can help you get almost 30 minutes more restful sleep per night. And now the Queen Sleep Number 360 C2 Smart Bed is only $8.99. Only for a limited time.
Joel, since Kansas, we've taken our own path. We've never done what everyone else did. We took on the fear. We ignored the doubt. We loved the excitement. We believed. Even when our path didn't make sense to everyone else, we kept going. We keep going until our path is the one they wish they had taken.
It's such anxiety. Sometimes it felt like I couldn't breathe. Fortunately, one of my friends told me,
"You've got to relax. You're going to get yourself sick."
Say hello to Truebill, the #1 personal finance app, packed with tools to help manage your money, like canceling unused subscriptions with just a tap. If you're ready for an all-in-one money management solution, then download the Truebill app today.
Is Fubo TV. It's a better way to watch live news, shows, and sports without cable. Watch multiple games at once with Multiview. Try free at FuboTV.com.
Script is my time to listen.
I can listen at home, in the car.
It's a way for me to stay informed, get entertained.
Script is ebooks, audiobooks.
Magazines, podcasts, Script, it's awesome.
Selling a home is expensive and stressful, so we set out to create a better home selling experience with a network of the most successful real estate agents in America that'll sell your home for as little as a 2% commission.
The icing on the cake with the Ideal Agent was that we saved $12,000 in commissions.
We would definitely use Ideal Agent again. The whole process was so positive for us.
Excellent service.
Getting right to the point, hiring Ideal Agent, I wish we would have done that sooner, and we would have saved 6 months of time and mortgage payments that would have probably never happened if we would have just gone with them first.
They were so stress-free. The whole process was amazing, and I would definitely recommend them.
We certainly recommend Ideal Agent now to all of our family, all of our friends. It's just a great experience.
We are not a discount brokerage. These are top local agents that'll get you the best results.
This feeling of certainty comes from inspiring your customers and expressing heartfelt thank yous with promotional products people love from the experts at 4imprint. Enjoy that feeling of certainty at 4imprint. 4imprint, for certain.
This is Daybreak Asia. We're counting down to Asia's major market opens and the reaction to Fed Chair Powell's acknowledgement of the risk of a potential recession. And of course, this as we see that safe haven demand play out, global yields are falling, Heidi, at a time when we have a couple of rate decisions across Asia as well.
Yeah, really kind of solidifying the concern that this soft landing is going to be a tricky one to land for not just Jay Powell, but by extension, most of these global central banks that are on the same path, right? Let's get you straight to the market opens. Belle.
Yeah, Heidi, recession risks are certainly the order of the day here in Asia as well. We're just a few seconds away now from the opens in Japan, South Korea and Australia. We'll also be watching the open of treasuries because we do have cash markets just starting for a few seconds from now. We have seen that move toward haven assets, and we'll see that reflected in trading as well this morning with the open of the yields there. How that's also playing out against other haven assets, we're keeping a very close watch on the yen this morning, strengthening against the greenback here at its strongest or highest point now over the past 3 sessions. Nikkei, meanwhile, coming online fairly flat this morning. That had been reflected, or unchanged rather, at the moment. But the point here is that Japanese stocks likely to reflect some of these recession risks. And we'll be watching particularly the energy and the machinery sectors. If you flip the board now, let's check in also on how the market has opened in Korea. So we do see the KOSDAQ just inching a little bit higher at the start of trade here, but it did drop around 3% in the previous session. It still is below that key 2400 level. Looking at how also we're seeing the KOSDAQ, this is the tech-heavy index here. It is mostly in line with what we're seeing in the KOSPI, but it was the biggest drag in the previous session. Institutional investors in Korea, they have also been part of that selling pressure that we're seeing from the foreign players. The won, meanwhile, just pretty flat now, but we are at a 13-year low against the greenback. Turning now to the open that we have in Australia today as well. So the ASX 200 coming online lower. It is a staggered start here as well, so it does take a few minutes to get warmed up. But we are just going to be tracking, again, that energy sector very closely with what happens in oil prices, other key materials today. So we've got Brent crude also coming online to the downside. Further losses here. That certainly does really weigh heavily on the biggest commodity giants in Australia. The Aussie dollar, meanwhile, little changed against the greenback. Heidi.
Let's get some analysis now on the Fed's policy direction. Bloomberg's chief Asia economics correspondent, Enda Curran. So, Enda, how serious do you take this warning from Powell when you sort of compound it against everything else we've heard from the Fed chair so far?
I think it's significant, Heidi, that he has admitted now pulling off this soft landing is going to be difficult. He said a recession isn't inevitable, but the fact that the Fed chair is even having to answer questions on that topic shows you how far we've come. This was in a testimony to lawmakers. At the same time, though, even when he warned about the risk of not pulling off that soft landing, he made it clear that the trade-off would be allowing inflation and inflation expectations to become embedded. And of course, that would mean longer-term economic damage. So he made it clear interest rates will have to go up and go up further from here. It's a question of balancing those trade-offs. But for now, I think, despite his comment on the recession risk, I think the big takeaway remains that they're jacking up rates and they don't plan to slow down on that anytime soon.
It's really interesting because we continue to see this policy divergence with an aggressive Fed, or potential signals of a very aggressive Fed, against perhaps some of the Asian central banks not moving as fast. We have a couple of decisions today.
That's right. I mean, the textbook would suggest if the Fed is going at the pace they are, that the rest of Asia would be matching those rate increases. It's not quite playing out like that. We do have the Philippines today, like you mentioned. They are expected to raise rates. Inflation there the fastest since 2018. It will be Governor Diokno's last meeting before he goes to the finance ministry. So a rate hike is priced in there. Indonesia, slightly different. The thinking there is that core inflation is still under control. The growth story still needs some support. On the other side, though, the central bank does have to keep an eye on the cheaper currency, and you would want higher interest rates to keep a floor under your currency. So some economists are saying maybe a surprise hike is likely, but the majority are saying on hold. And you're right that policy divergence is playing out in Asia. Let's not forget that, of course, China and Japan are heading in the completely opposite direction to where the Fed is going.
Bloomberg's chief Asia economics correspondent, Enda Curran there. Our next guest says is building up defensive strategies as he sees bond yields rising and growth slowing. Let's bring in Hartmut Issel, head of APAC Equities and Credit at UBS Wealth Management. Hartmut, always good having you with us. So Tell us a little bit about the repercussions to the Asian market if we do in fact see a U.S. recession, and what parts of the market are defensive enough for you to feel secure?
Yeah. So in APEC, I'll make at this point anyway a big distinction between China and sort of almost all of non-China. So starting with all of non-China, I think to some extent the slowdown I'm beginning to see in the U.S. For the most part also going to see that here. So in that sense there is probably a bit in lockstep, and we also have recently for many of the central banks also assumed that they're not trying to stay too far behind the Fed, because also especially where you have current account deficits, you have the currency as the only wealth. Then China on the other hand is different, right? If we compare also from a market point of view. And so U.S. just passed the growth peak. Of course, the inflation issue, consumer inflation as well, and you have to tighten. Right? China sort of already did. China over the last couple of quarters has already traveled in that sense down to what we think is maybe 2% handle on growth. In the current quarter as we speak, and consumer inflation at least not that much of an issue, so they can lose. And therefore, it is not surprising actually to see that right now that the Chinese market is about the only one. If you look at the last 2-3 months. That is actually going up.
Yeah, it's been pretty resilient despite the global sell-off. And talking about China, Beijing also hosting the virtual BRICS summit. I love your call on your notes where you say position for an era of security. Tell us how you factor in China and its warning about sanctions and global economic pain as well.
Yeah. Well, is this just a general global observation that many countries now rethink their strategies, or where do they get their energy from, potentially also where they get their food from, whether, and this is perhaps not even such a new trend, but many countries, right, whether it's EMs, DMs, doesn't really matter, have already, even before the Ukraine war, started to think about whether their military spending also is sufficient or not. So these are areas where we see shifts, where we see things moving, and also growth in that sense. And this is something also as an investor one can exploit.
In terms of how much you're hedging for inflation at the moment, what sort of opportunities do you see given just I guess the unusual construct of the inflation risk? Are you still looking for inflation hedges?
Yes, to an extent that, and also in conjunction with what has also been discussed on the program before. I mean, the economic slowdown that comes with the inflation fighting. So we need to look at both, and we imply sort of a toolbox, right? And there the discussion whether we're really going to hit recession or just a slowdown is almost a bit academic, right? Because the way you need to invest for that is somewhat similar. So starting with equities, yes, we have, for example, clear overweight on the healthcare sector, which is not that sensitive on the economy. Also in terms of input costs, right, is not really that sensitive to energy or even food for that matter. Hedge funds certainly one of the parts in the toolbox that tend to thrive or have a better opportunity set in an area like this. And then last but not least, also bonds, right, which for the last couple of years really, especially the safer ones, weren't really on anybody's radar. Now you're getting here in APEC investment grade bonds, right, 5%, not difficult to find. So combination of those.
But you're also quite constructive when it comes to Australia.
Yes, I think especially commodity-related, also countries or currencies in this case, is also something we certainly, especially when you think about inflation, is an angle that is valid or has to be considered an investment, and especially, of course, the Australian relationship with the supplies towards China, which, as we know, you can argue about the pace, but is starting to reopen from COVID, even if it's perhaps in some cases a bit cautious, but it is happening. So when that happens and China's stimulus on top of it, that is certainly also an angle investors should explore.
Carmen is still there from UBS Wealth Management. Let's get you to Vonnie Quinn with the first word headlines. Vonnie.
Heidi, thank you. The Bank of Korea says negative impacts on growth from rate hikes will be limited. A senior deputy governor has told an economic forum that prolonged inflation remains a risk and it must be tamed through preemptive policy. South Korea's producer prices rose at a quicker pace in May, jumping 9.7% from a year earlier. More economists now see the BOK hiking by 50 basis points at next month's meeting. European Union leaders are planning to give Ukraine the green light to become a candidate for membership of the bloc. It follows an intensive campaign by Ukrainian President Volodymyr Zelensky. A draft statement seen by Bloomberg says the EU is also granting candidacy status to Moldova. The formal decision will come at the EU summit in Brussels starting Thursday. Sri Lanka's Prime Minister says the country's economy has completely collapsed and the only path forward is an agreement with the IMF. Ranil Wickremesinghe told Parliament Sri Lanka is now unable to import fuel because of heavy debt. Officials are speaking to the IMF this week about support. Plans are also underway for a summit with India, China and Japan to help secure aid. Officials in Afghanistan say the death toll could rise after an earthquake destroyed thousands of homes. At least 1,000 people were killed, with 1,500 more injured. The magnitude 6.1 quake sets off a new humanitarian crisis in a country already facing a crumbling economy and hunger. The Taliban's supreme leader made a rare public appearance to plead with the international community for aid. Global news, 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Vonnie Quinn. This is Bloomberg. Sherry.
Right, let's now turn to Bell, who's following one stock in Japan very closely. Bell. That's right, Sherry. This is Toshiba this morning, so it's surging at the open here just a few seconds ago. Now, this is on a Reuters report. Basically, the bidders here are considering upping the price per share offer to take the company private to 7,000 yen. Now, Smart Karma, they've got a report out on this, even though, of course, it's still in the preliminary stage, these talks. And they're saying no real need right now for the stock to reach that 7,000 yen level. And the reason for that is that there's still quite a long way to go in this and that the price could very easily be lowered in the second round of bidding here. So analyst Travis Lundy, he's written about this, saying still lots of terms and conditions here to work through, and some assets they could actually be needed to be spun out in the terms of this deal, like Kioxia, and because of that the deal price could be lowered in the second round of bidding. But today we are seeing it, Heidi, trading up around 6%.
And with oil falling to the lowest in over a month, we're watching some of these energy stocks and that downside.
That's right, yeah, and we're also keeping an eye on some of the machinery stocks as well, because we did see Caterpillar off around 5% in the previous session as well. But we are just keeping an eye. These are some of the energy names as well. We did have that oil drop. And then if you flip the board, we'll just check in on the machinery stocks. So we did have, as I said, that drop in Caterpillar. And we are seeing also some declines across most of the region here today. Sherry. Yeah, those recession fears really being felt everywhere. Bell still ahead. Matthews Asia tells us why China's COVID-0 policy will keep investors on the sidelines of the country's credit markets. Aretha Kong joins us later this hour. But first, China's president blasts sanctions for stoking global economic pain, but stops short of blaming the U.S. We'll look closer at the message it's sending. This is Bloomberg.
Welcome to Lenovo Late Night IT, where insiders share stories straight from the trenches. How much did the cyber criminals pay you to write that article?
I think we're actually witnessing the end of ownership.
AI by itself is actually fantastic, but doesn't really do the job.
Yeah, it'll be like a robot dance.
Like this?
This is Lenovo Late Night IT.
Reduce carbon emissions, they say. When it comes to our planet, we need to do more. We choose positivity. We choose to change. Tomorrow now. We'll learn, we'll try, we'll do and undo whatever it takes to get there. We don't have to commit, we choose to. We choose Earth. It's up to us, and that's our biggest power, the power to choose. Do you? EDP, changing tomorrow now.
This is Omaha Steaks. This is Omaha Steaks.
so's this. And this. And even this. And yeah, this too. There are so many ways to enjoy our guaranteed perfection. Just a little everyday wisdom from Omaha Steaks. Visit omahasteaks.com/TV today and you'll get 8 free burgers. Never tried Omaha Steaks? Save an extra $20 with code SUMMER at checkout.
In my new film, I'm creating a lot of transmutants, but I think this is the era coming in. We are mutating ourselves.
It could be so amazing if we were to biohack with care.
Because of the biotechnology has advanced to this date, the big thing is actually changing your whole body construct.
Hyundai Motor, connecting art and technology.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special Equality Series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month and all year long.
Chinese President Xi Jinping has criticized sanctions for stoking global economic pain in a speech that began this year's BRICS summit.
Politicizing, instrumentalizing, and weaponizing the world economy using a dominant position in the global financial system to wantonly impose sanctions would only hurt others as well as hurting oneself, leaving people around the world suffering.
Xi is also looking to bolster relations with emerging markets amid strained Western ties. For more, let's bring in Bloomberg's Greater China Senior Executive Editor, John Liu. John, this is pretty fascinating when you consider the cohort that the messaging is being sent to. What is he really trying to say with these latest comments?
So sanctions, especially American sanctions, in which the United States uses its dominant position in the global financial system to levy those sanctions against other countries, that's an old bugbear for Beijing. Obviously, China, when it comes to Hong Kong, when it comes to Xinjiang, has been the target of sanctions like this. And Xi, in this venue, is looking for some sympathetic ears. And he's more likely to find that in the developing world, among the BRIC countries. Russia, obviously, sort of stands in line with China on sanctions. But even India, which is growing closer to the U.S., has been really hesitant of supporting American sanctions against Russia. India has wanted to continue buying oil, continue buying arms for Russia. And so you see that divide in the developing world, and China's trying to take advantage of that.
And yet when it comes to setting up that alternative to the Western-dominated global governance order that we're seeing with China and perhaps the push by Russia as well, how much of a divergence is there within BRICS, especially with the likes of India, as you mentioned?
I think there's a general consensus among the BRIC countries that the developing world should have a greater voice when it comes to global governance. I think when you look at the IMF, the World Bank, the UN, these are all the outcomes of post-World War, a post-World War II world dominated by the United States. And as China, as India, as other countries begin to develop economically, have gotten stronger militarily, economically, they've wanted a bigger voice. And that was essentially why the BRICS sort of cohort formed about a decade ago.
When it comes to the issue of tariffs, we know that the Presidents Biden and Xi are likely to have this conversation at some point. Is there an idea that this is still being seen as pretty crucial leverage by Washington?
I think if there is something that can be done with the tariffs that's good for both the U.S. and China, for both President Biden and President Xi, I think that will be likely to happen. Obviously, lowering the tariffs would help the U.S. when it comes to inflation. As we heard from Catherine Tai, the U.S. trade rep, though, those tariffs are a form of leverage when it comes to discussing trade and other issues with China. And so I think Washington will be not wanting to take too many off the table too quickly. But for Beijing, I think any lowering the tariffs will be very welcome given the weakness of the economy. And I think Xi Jinping will be looking for every way to shore up growth going into the second half.
When it comes to those tariffs, though, given the political agenda in both countries, how likely is it that we'll see any movement? We have the midterms here in the U.S., and of course, we have the Party Congress in China as well.
I think it's a difficult calculation for Washington because on one hand, obviously, no one wants to be seen as weak on China. But at the same time, I think the voters are paying more at the supermarket, more at the pump for their gas and for the groceries. Trying to do something to help them with that, I think, will be very welcome. And so it's a rock and a hard place, unfortunately, for President Biden.
That's Bloomberg's Greater China Senior Executive Editor John Liu. Take a look at the Asian markets right now. Of course, we had sort of a negative lead when it came to Wall Street. Of course, we had those U.S. stocks reversing earlier gains. Right now, though, we're seeing a little bit more positive sentiment across the board, with the Nikkei reversing those losses that we saw in the previous session, and the Kospi actually unchanged. Interesting, you have to look at the Korean won. We're talking about weakness at around the 1,300 level against the U.S. dollar. I can't remember the last time that I saw that sort of weakness. I believe it's a decade low against the U.S. dollar or more. So we continue to watch that, as the Japanese yen, though, is holding at that 136 level. We, of course, have seen that 24-year low against the U.S. dollar as well. The ASX 200 up 0.2%. We're watching those yields in Australia and the rest of Asia, because global yields are under pressure, given, of course, that haven demand. We have seen treasuries also rally, the 10-year yield hovering around the 315 level, given those concerns about recession, Heidi.
Let's check in, Sherry, on how futures in Europe are opening up this morning. Stock 50 futures are down about 0.6%, to the tune of the same when it comes to the MSCI Europe index. DAX futures in Germany down by about 0.5% as well. We did see stocks in the previous session pairing some earlier declines after we heard from Fed Chair Jay Powell really saying that they would keep raising rates to quell runaway inflation. But still, we are really seeing the concern that with inflation pressures and looming recession fears, that the pressure on margins for European stocks could herald another downturn, both in terms of estimates and in prices. We did see European stocks snapping that 3-day rebound on these concerns about a broader global recession there. So in particular, watching some of those minor and energy names, given they were the big losers and could continue to extend declines given the fall in oil prices to the lowest in more than a month, Sherry.
Right, Heidi, and coming up next, Boeing CEO sees supply chain pain for the aviation sector lasting until at least the end of next year. Our exclusive conversation with David Calhoun is next. This is Bloomberg.
Guests check in, then check out their phones for financial insights from Merrill. This gentleman, he's learning how carbon-neutral investments could energize his portfolio. And with advice from their Merrill advisor, they've decided that the future is women-led startups. She's got 1 million followers, but she's following trends in next-gen tech.
Personalized advice so impressive, your money never stops working for you with Merrill, a Bank of America company. What would you like the power to do?
This is Sandra. She gets her financial advice from her mother. This is Tony, who gets his financial advice from his old college roommate. And this is where Frank used to sit. He got smart about retirement at smartasset.com. They matched him with vetted fiduciary financial advisors to help turn his retirement priorities into a retirement reality. Everybody sure misses Frank.
Can someone get that?
Smartasset.com. Take our free quiz and be matched with up to 3 vetted financial advisors. Get smart about retirement.
At Lovesac, we design furniture for life. Real life. Messy life. Life that changes and brings us together for movie night. A life where batteries run down and get charged up again. Because now, Lovesac Sactionals can be upgraded with Stealth Tech and immersive surround sound by Harman Kardon hidden inside. Upgradable, washable, and guaranteed for life. Don't just hear it, feel it at a Lovesac showroom near you.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Boeing CEO is warning the supply chain constraints in the aviation sector could persist even into next year. That's as the industry is already racing to keep up with surging travel demand. He spoke to Bloomberg about whether the post-pandemic travel boom is sustainable.
The increase in demand and the bookings, as articulated by pretty much every customer we have around the world, suggests that when a flight gets canceled or supply is reduced, that the bookings just move out another month. Yep. In other words, the demand remains, and it's really supply trying to keep up with demand.
Well, let's talk about supply. It has been a major issue, not only for your customers, but also for you. When is this supply chain shortage of labor, bits, you name it, we're short of just about everything. When do you think it's going to be fixed?
Well, it's not clear to me when it gets fixed, but the planning horizon that we have to attend to would suggest it doesn't get fixed until probably the end of next year. Wow. And the real issue, we have a very large, sophisticated, and somewhat fragile supply chain behind the airplane manufacturers. And just as fragile, it turns out, are the operators themselves, the airlines, and the ability to staff up with pilots, the ability to staff up the ground crews, maintenance crews, et cetera. Hardly a week goes by where you don't see some implication of them not being able to keep up with that supply side. And so I believe this is going to last for a while.
Fed Chair is going to be joining the Congress a little bit later on. He's going to be giving 2 days of testimony on Capitol Hill. The emphasis at the moment is on the Fed. The president's putting the emphasis on the Fed to deal with this inflation that we're seeing right now, this supply side problem, the bottlenecks that we're experiencing. Do you think we need a recession to fix some of this?
I won't use the word recession. I'm not sophisticated enough to do that. On the other hand, slowing things down a bit, I think will be helpful to a lot. Now, it doesn't affect every industry equally, but like in our case, where you do compete with other industries on certain disciplines, software development, data analytics, computational work, et cetera, in those instances, if we see a softening of demand, it will be helpful to us with respect to the retention of our people, as well as the recruitment of new people to deal with growth.
You've had some huge operational challenges. The MAX program obviously has been one of them. The 87 program, we still don't know where the 777X is ultimately going to go and when that's going to be certified. Dave, have you got a grip on this? Do you feel you've got a handle on what is happening and the kind of timeline you're looking at to fix some of these problems?
I absolutely feel like we have a grip on it because we've been very deliberate about the fixes and our attention to detail and documentation with the FAA, our counterparty. And we've made steady progress every step of the way. Most importantly, we've been transparent with everybody every step of the way. Our customers, the FAA, EASA, regulators around the world. And while that's uncomfortable, that was always necessary to regain the trust.
Boeing CEO David Calhoun there speaking with Guy Johnson at the Qatar Economic Forum in Doha. A quick check of the latest business flash headlines this hour. Tesla CEO Elon Musk says new plants in Germany and Texas are losing billions of dollars as the automaker ramps up production. Musk called the factories gigantic money furnaces in a video interview recorded at the end of May. The comments offer new insights into Musk's recent decision to cut costs at Tesla by laying off employees. The overhaul at Jack Ma's Ant Group may be getting closer to satisfying China's financial regulators. Bloomberg has learnt that Ant is poised to apply for a financial holding company license as soon as this month. Sources tell us that the PBOC intends to accept the company's application and start a review process looking into its capital strength and business plans.
And coming up next, Matthews Asia says investors are reluctant to put any capital into China credit until there's a clear recovery. We'll discuss. This is Bloomberg.
Yo, dude, you need some help?
Don't worry about me.
Yo, there's no shame.
You don't know my family, man. My parents or brothers or sisters or cousins ever found out?
Dude, this weight is pretty heavy.
I just need some time and I'll figure it out myself, okay?
Sometimes you just need some help. So if you need therapy, find a licensed therapist at BetterHelp.com.
Nobody does anything perfectly the first time, or the second, even the third. We learn from mistakes. But when it comes to retirement planning, who can afford mistakes? Smart Asset can help you avoid those unpleasant mishaps with a free guide, The 7 Crucial Mistakes of Retirement Planning. We also match you with up to 3 vetted fiduciary financial advisors who can help you achieve your retirement goals. Using Smart Asset is free with no obligation. Discover what others learned the hard way at smartasset.com.
This is Scribd, an app that gives me access to ebooks, audiobooks, podcasts, and more. With Scribd, I can get in my steps and countless pages. Scribd makes every moment a reading or listening moment. Go to Scribd.com and try it free for 30 days.
Pay over $100 a month for cable when it's half the cost for Fubo TV. Get all the channels you want with all the entertainment you love for the price that cable can't beat. Try free at FuboTV.com.
All I need is more. I will want more minutes, one more chance for me to win it. Yeah, I want more. Every time I dream, I catch it. I know how to.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
We're getting PMI numbers out of Japan for the services. June preliminary numbers coming in at 54.2, which is a big improvement from the previous month and a third consecutive month of expansionary territory. The composite number at 53.2. Manufacturing surprisingly easing from the previous month, coming in at 52.7. Perhaps some forex dynamics could be at play. Of course, we are seeing Japan coming out of the pandemic, and that manufacturing number a little bit softer than expected. But Bell, of course, is following everything on currencies and the Japanese yen after it fell to that 24-year low against the US dollar.
That's right, Sherry. Yeah, we are just seeing, though, the yen decline, just pausing its drop this morning. Rezona Holdings, though, saying that we could see it push back to that 137 level if we see yields rebound and also oil prices as well. But, of course, we've seen them dropping this morning, and that is the order of the day. This risk of aggressive Fed hikes here and lower yields certainly in play this morning. So we just saw the Korean won opening at the top of the hour below that 1,300 level for the first time since 2009. That foreign selling as well that we're seeing in the Kospi, another factor playing into this as well, because that does put further downward pressure on the local currency here. But no currency in this region is certainly immune to the Fed's hiking path here. So even Hong Kong's currency has been, or de facto central bank has been forced to sell its local currency at the fastest pace on record this month. But you look at this chart here and we can also see other currencies in the region that have been particularly hit by being seen as being slow to tame inflation. So we have the Indian rupee now at its lowest on record, and we also have the Philippine peso at its weakest since 2005. Heidi.
The former New York Fed President Bill Dudley says the U.S. economy is headed for a hard landing as the Fed tightens policy to tame inflation. But he told Bloomberg he expects the recession to be mild and to come within the next 12 to 18 months.
They're very much focused now on inflation as opposed to employment, because the labor market's too tight as opposed to not tight enough. So I think he'll reiterate the message that we heard in his press conference last week. I think also, though, he will not talk about a hard landing. The Fed is still going for a soft landing. Of course they should. The problem is it's just going to be very difficult for them to pull this off.
Bill, a lot of people in the market right now are trying to draw a distinction between a soft recession or a shallow one and one that is much more damaging. What is the characteristic of the hard landing you envision?
Well, I think it's going to be a relatively mild recession at this point because the Fed, the financial system looks like it's pretty solid. Household and business balance sheets look like they're pretty solid. You really get a deep downturn when things in the financial system break and the ability to supply credit to people becomes impaired. I don't expect that to happen this time. So I would expect a mild recession like 1990 or 2001, not a deep recession like 73, 74, or, of course, the great financial crisis.
A lot of people would push back, Bill, and say that this Fed has no appetite for causing a recession. They don't seem to want to do that, and that they will eventually pivot away from raising rates as much as people currently expect. Why do you think that's not the case? Why do you think they're going to take a page from Paul Volcker?
Well, I don't think they want a recession. The problem is that if you're going to get inflation down, you need more slack in the economy, and it's very hard to generate more slack in the economy without actually generating recession. So that they're definitely going for a soft landing. It's just going to be almost impossible for them to pull it off.
But is the assumption you're making, Bill, that they're not going to blink even when the data turns more dramatically than we already have seen it having? I mean, Larry Summers was talking about a 5% unemployment rate over the next 5 years. Where do you think their tolerance is?
Well, I think what Larry's talking about is certainly reasonable. I think the reason why they're not going to blink at the end of the day is they know that if they blink and don't get inflation down, then they have to do even more later. Procrastination is not a great option. We saw what happened in the 1960s and 70s when the Federal Reserve was slow to tackle inflation. What happened was inflation got out of hand, and Paul Volcker had to come in and put the U.S. economy through the ringer. So the Fed wants to do what's necessary in the near term so they don't have to do a lot more in the longer term.
But it is in the longer term that you really see the full effects of monetary policy taking shape. It operates with a lag. We all understand that. So I guess the question is, if they're front-loading and aggressive, are they going to see it reflected in the actual data we're getting, or do they risk just moving way too aggressively and then the data turns all at once?
Well, that's what could actually happen, because right now the economy has considerable forward momentum as the economy reopens and payroll gains are very strong. Household balance sheets are still very solid, boosted by the fiscal stimulus that we got over the last couple of years. But beneath that, things are troubled.
Bill Dudley, senior advisor for Bloomberg Economics and former New York Fed president, speaking with Bloomberg's Lisa Abramowitz and Kaylee Lines. Let's now get to Vonnie Quinn with the first word headlines. Vonnie.
Sherry, thank you. Chinese President Xi Jinping is criticizing sanctions for stoking global economic pain. In a speech at the BRICS summit in Beijing, Xi did not explicitly mention the U.S., but said some nations are politicizing and weaponizing the world economy and causing suffering. He also cautioned against confrontation and suggested that NATO was responsible for antagonizing Russia. U.S. Trade Representative Catherine Tai says tariffs on more than $300 billion in Chinese imports provide significant leverage and are useful in negotiations. Tai made the comments as Biden administration officials debate whether to keep the duties in place. Speaking to lawmakers, Tai also said there's a limit to what can be done to ease inflation through tariff changes.
The China tariffs are, in my view, a significant piece of leverage. And a trade negotiator never walks away from leverage. We need to use our tools more effectively. We need new tools. We need to bring an entirely new approach.
China has approved a plan to promote what it calls healthy development of the payment and fintech sectors. A meeting chaired by President Xi Jinping also backed enhancing regulation of major payment platforms. Beijing has promised to unwind a sweeping crackdown on tech companies that ensnared every sector, from online education to gaming. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Vonnie Quinn. This is Bloomberg. Heidi.
Well, Chinese conglomerate Fosun's dollar bonds snapped their decline after a week of heavy selling that fueled concern about junk contagion in China. Our next guest says we're still in a period of uncertainty when it comes to China credit. Matthew's Asia portfolio manager Teresa Kong joins us. How concerned should investors be about just the pace of that sell-off?
Well, I think investors have always been aware that Fosun is one of these big conglomerates that has many different business lines, many of which may be dividending free cash flow up to the holdco, but many of which may not be. And I think this level of opaqueness is going to hamper their ability to actually get out of this current quandary. But having said that, I think, Fosun can really take an active approach and address their liquidity much more proactively and just talk about their sources and use of cash over the next several quarters.
Do you think the fears about contagion risks are well-founded?
I think overall, the market has really been very focused on the pure play China real estate property names. And what Fosun has shown is that, a large conglomerate with just some exposure to real estate can actually also be hurt at this point. So I do think that some large conglomerates, even though they may not be pure play property exposures, will get a lot more scrutiny going forward. But having said that, I don't think that this is going to be a massive spillover to the rest of China high yield, for example.
So tell us a little bit about the company itself, Fosun's liquidity and perhaps ability to cover its debts.
Well, the company actually came out overnight and explained that they are going to be able to fully repay the 22s and the 23s. So if you recall, just a couple of days ago, they were going out and just doing a partial repayment. And that really spooked investors. And so I think at this point, they do have sufficient liquidity. So if you look at the cash versus the short-term liquidity liabilities, it is rather tight. But right now, the market is not pricing in a default, although the probability is certainly there.
Can there be any real recovery in China credit with the COVID lockdown still ongoing?
That's the $10,000 question, Sherry. I think it's really going to be hard for investors to come in with new money. So many investors are standing on the sidelines, just really waiting for China to take on a new COVID policy. And I think the issue is not a question of if, but just when and where, these rolling lockdowns will continue to take place. As a result, that tends to mute any monetary policy, any fiscal policy that they're implementing to really loosen up and actually stoke credit and growth. And so I think investors will continue to be somewhat wary. However, I think we are beginning to, hopefully see the light at the end of the tunnel, because as we get closer to this level of lack of access to liquidity in markets, I think the Chinese policymakers will really have to examine their current policies.
When it comes to other sectors that we're, of course, keenly watching, there are more signals that perhaps the regulatory overhaul when it comes to internet and tech platforms may be coming to an end. Are you feeling more optimistic about that segment?
I think that the Chinese policymakers took a very strict stance last year when they felt that they had the policy room to implement many of these policies that they've articulated, things like consumer protection, anti-monopoly laws. But I think this year they've taken on more of a tone of, look, we might have overstepped and we might have been overconfident. And so, they did actually, for example, in the gaming sector, restart the licensing of new games. But it's not clear what's going to actually happen over the next several months. We're hopeful that they will continue on this much more of a proactive and much more pragmatic stance that will hopefully, bring back positive sentiment amongst both consumers as well as companies.
Teresa, how exposed is China to an economic slowdown or potential recession here in the U.S. and even globally?
Well, the dirty little secret is that, the current account surplus, of China versus the United States is, bigger than really, before all of these tariffs come in place. And so no doubt, China is exposed to U.S. consumption. Now, having said that, though, in many ways, China is marching to the beat of its own drum, right? They are going to be a lot less sensitive to inflation than places like the United States because they have, to a large extent, secured a lot of the commodities. And they also have, much more of a conducive relationship with Russia. And so I think China is exposed to the United States, no doubt, but much more insulated than perhaps some of the other countries.
Mm-hmm. Matthew's Asia Portfolio Manager Teresa Kong, always a pleasure to have you with us. Thank you. Coming up next, we'll be talking a little bit more about those slowdown fears, of course, here in the U.S. and also in China, because that's really rattling commodities trading. A closer look into the market fallout. This is Bloomberg.
Welcome to Lenovo Late Night IT, where industry insiders tell us what they tell their therapists.
Is anyone asking employees and workers what they want from automation?
So it's that human-machine collaboration, right?
Robot coworkers.
Yeah, it'll be like a robot dance.
Like this? Thank you. This is why we booked it. You can go now.
This is Lenovo Late Night IT.
In any business, you ride the line between numbers and people. What's right for the business and what's best for everyone who depends on it. Solving today's challenges while creating future opportunities. It takes balance. CLA, CPAs, consultants, and wealth advisors will get you there.
All right, let's take a look at some of the stocks that we're watching. Of course, energy in focus after we saw the biggest drop in oil, taking it to the lowest in over a month there. BHP Group trading here in Australia off by over 2.5%. We're also watching downside in Woodside Energy as well. Over in Japan, we're seeing not much of a move when it comes to Japan Petroleum, but S Oil Corp down by 2.4%. We're seeing Brent holding on to most of those losses, still down about close to 2%. They're under $110 a barrel. Sherry.
For more on the commodities market, let's turn to Sue Keenan, who's following, of course, what's happening with oil. And Sue, it seems to be a lot with what's happening with those recession fears.
Yeah, the idea of a global slowdown, which would impact demand for commodities, is really unnerving investors. And we saw that with oil in the U.S. Wednesday session. It was down as much as 4%. Brent was down almost 6% at the lowest. And the slide shows the pressures that you're seeing on energy prices. We're also seeing fewer major investors trading oil. The price of trading, of course, got a lot more expensive after Russia's invasion of Ukraine. That caused a liquidity crisis. Let's check how prices are trading in Asia. We're seeing an extension of oil's decline there. Gold, however, held gains in the U.S. session. It's giving back those gains at this hour. Copper, notably, tumbled to its lowest since March 2021. We had Fed Chair Jay Powell speaking during the Wednesday trading, and he did little to damper recession fears, so that was reflected in the price. And those rolling Chinese lockdown and slowing demand in the global housing markets have also weakened sentiment for copper, analysts say. What you're looking at is a Bloomberg that's very interesting about how oil spikes have often preceded recessions. You only have to go back 2 weeks, and West Texas Intermediate was above 120. Citigroup's Ed Morse, by the way, out with his latest forecast, saying oil is likely to fall further if we look at a big picture for oil in the past year. But the path ahead, he says, will be bumpy. Translation, you can expect a lot more volatility going forward.
I know, meanwhile, Sue, extending that route with more reports of blast furnaces idling in China.
Yeah, that again is just adding to concern about a slowdown, and we've had China's pro-growth policies failing to offset this growing fear that there could possibly be a glut of steel. So this buildup of steel is now overtaking the previous concerns of supply shortages. Futures in Singapore for iron ore have lost about a quarter of their value over the past 2 weeks. weeks. This is the Chinese economy is really struggling to emerge from those COVID-related lockdowns. The steel producers, as mentioned, have been shutting down these blast furnaces. They shut down 8 blast furnaces in the last count. That's triple the rate from 6 days ago. A lot of companies just putting them into maintenance. And we should point out that molten iron output is falling by more than 54,000 tons a day. Analysts say that's a very big number, and what it means is prices have room to fall even further. So get ready for that. Meanwhile, there's a bit of irony because there has been improvement in the COVID reduction efforts in China, but this is a lagging indicator. The concern about a slowdown is the primary fear for a lot of commodity traders at this point.
Yeah, Bloomberg's Sue Keenan there with the latest on commodities and, of course, how they're roiled by those recession fears. But Heidi, of course, financials, another sector that's very much really dependent on where the global economy goes. They could get hit by recession fears. We'll have more results about where they stand with those stress test results out on Thursday here in the U.S. They examine a hypothetical crisis, estimating the losses that they might face based on their books of business. And then after that, we're going to see them, of course, coming out with capital plans in the coming weeks. The expectation so far is that JP Morgan will be leading the group with more than $18 billion in combined dividends and share buybacks.
This even as the biggest US lender spends more this year to build out these offerings to fend off competition. Of course, we know competition is fierce within US banking at the moment, but it's an interesting position that the bank finds itself in, of course, because of COVID and the halt to buybacks in 2020. That's really inflated last year's capital. So you have, that sort of sense where we are certainly in a period of increased economic uncertainty, but at the same time, a lot of analysts say it's actually pretty good when it comes to loan growth opportunities happening at the same time as well. So we will have to see what comes out of these annual exams. As you say, it forces them to look at, the potential losses they might face on their books. But potentially we could see really quite a windfall for investors being returned there.
Yeah, you mentioned COVID and how that's really changed the game for these financials. Well, let's turn to China because we are now seeing the latest cases from Shenzhen at the moment, reporting 3 local COVID cases for June 22nd. And this, of course, coming after we learned earlier today that Shenzhen is requiring a PCR test for people entering public venues. This also coming at a time when Shanghai is now reporting 9 local COVID cases, Beijing reporting 3 COVID cases, Dandong reporting 5 local COVID cases as well. All of this as we continue to see those infections across China in different parts of the country, Heidi.
Well, coming up next, Jack Ma's Ant Group is said to be applying for a key financial license as soon as this month. It could put listing plans back in play. We'll discuss all of that next ahead of the China market open. This is Bloomberg.
This is Lisa. Hi, I'd like 50 welcome wows and 300 customer I love it.
Promotional products from 4imprint are certain to deliver ooh yes.
Wow.
I love it. Find some wow now at 4imprint.com. 4imprint, for certain.
Like many families, the Auburns value time spent together to share wisdom.
I got some of my gold before I came to this country.
I got some of my gold before you passed the bread.
Encourage one another.
I can buy gold for this. You can buy gold for this.
And talk about life's wins and misses.
It's responsibly sourced, like my gold, but not responsibly cooked.
Because at the end of the day, nothing keeps it all together quite like gold. Visit invest.gold to see why gold is everyone's asset.
This is Omaha Steaks. This is Omaha Steaks. So's this. And this. And even this. And yeah, this too. There are so many ways to enjoy our guaranteed perfection. Just a little everyday wisdom from Omaha Steaks. Visit omahasteaks.com/TV today and you'll get 8 free burgers. Never tried Omaha Steaks? Save an extra $20 with code SUMMER at checkout.
Sleep hot.
Or cold.
No problem. The Sleep Number 360 smart bed is temperature balancing, so you both stay comfortable and can help you get almost 30 minutes more restful sleep per night. And now the Queen Sleep Number 360 C2 smart bed is only $8.99. Only for a limited time.
Local media reports saying that Hong Kong's incoming leader, John Lee, is working on a strategy to reopen Hong Kong's borders with China and the rest of the world. For more, we're joined by our Asia Stocks managing editor, Lian Ting Tu. So, Lian Ting, this would be great news for the Hong Kong economy, for the Hong Kong people, but implications for the market specifically.
Hey, Heidi. Yeah, my take on this is of course, good for the overall reopening stocks. You know, the Cathay Pacific, the likes of Sasa, and, you know, all those watch retailers. They definitely are starving for more mainland tourists and also tourists from everywhere. That's one thing. And the other thing I can think of is, you know, now if bankers can start traveling, you know, going into China and out of China into Hong Kong without any quarantining, that could really facilitate deal flows. And, you know, Hong Kong, the first half of the Hong Kong IPO volume was really small. I think we're talking about $2.4 billion. That's like 1/10 of the volume that Hong Kong IPO raised in the first half last year. So I think a lot of it is just virtual meetings. It's not the same when you try to woo companies to try to do deals with you. And I've heard horror stories of bankers going into Shanghai and being quarantining for 43 days during that lockdown period. So obviously, if Hong Kong can really open the borders with the mainland, I would think it's good for its capital markets.
Let's talk a little bit about Ant Group and the potential for regulatory easing across China. We're hearing that the application to become a financial holding could be accepted. What does this tell us about the tech sector?
Hey, Sherry. Yeah, I think, you know, this is just one more incremental news adding to this momentum of Chinese regulators trying to ease the crackdown. We've seen news reports about a probe into Didi finally ending, and now and hopefully getting that financial holding company license, which can pave the way for its IPO, and that is positive. But on the other side, we also saw some jitters yesterday on some small regulatory crackdowns, including banning third-party platforms from selling online pharmacies medicines, and that has prompted some of the stocks like Alibaba Health to drop a lot. So overall, I think it's still a bit of a cautious tone, especially with the hawkish Fed.
Lian Ting Tu, Asia Stocks managing editor, and those are some of the stocks that we'll be watching when the markets open in Hong Kong and the mainland. For example, tech stocks like Tencent, Alibaba, JD.com. We heard from Xi Jinping. He has chaired the meeting that approved promoting the healthy development of the payment and fintech sector. So those are some of the stocks we're watching. We're watching also shares of Asian mining and construction machinery. Of course, the risk of economic recession has really weighed on sentiment, Heidi.
Well, coming up in the next hour, Sherry, we'll be speaking to Rebecca about why Asia is suffering less from inflation, where he's placing his bets as a result, plus credit sites. Zelina Zeng will be joining us to talk about the state of credit risk in China amid high volatility. That is it for Daybreak Asia. Our markets coverage continues. We take a look at the start of trading in Hong Kong, Shanghai and Shenzhen. This is Bloomberg.
Time-saving element of Tovala has definitely changed my day, my night, and just makes life easier for me. Tovala is my personal chef.
Tovala. Browse this week's meals at tovala.com.
When your employees feel connected, appreciated, and supported, your business becomes more than a place of work. It becomes a work of art. And we can help you create your masterpiece. UKG, our purpose is people.
We're all horrified by what's happening in Ukraine. Hundreds of thousands of civilians are fleeing for their lives, and an estimated 12 million people need humanitarian assistance. I'm Sienna Miller, and I am a Global Ambassador for International Medical Corps. Our teams have been on the ground in Ukraine since 2014, when conflict first broke out in Crimea. Now, with attacks by Russian forces across the country, we are scaling up our relief efforts inside Ukraine, as well as in Poland, Romania, and Moldova, to provide medical and mental health services, protection for women and children, and clean water, sanitation, and hygiene. The needs are immense, and the situation is worsening by the day. You can help. please visit internationalmedicalcorps.org to find out how. Thank you.
Yo, dude, you need some help?
Don't worry about me.
Yo, there's no shame.
No shame? You don't know my family, man.
It's okay to ask for help. Find a licensed therapist at BetterHelp.com.
Hi, I'm Jeff from Nuts.com. When my grandfather started this business in 1929, he relied on 4 important values: freshness, quality, variety, and service. I'm proud to carry on his legacy, but from a bigger space. We still freshly roast, season, and dip delicious nuts here in New Jersey and deliver them with the freshest dried fruits, snacks, and sweets to families that love our products all around the country, including mine. We think you'll love Nuts.com too, so check us out and enjoy free shipping on your first order.
Script is my time to listen.
I can listen at home, in the car.
It's a way for me to stay informed, get entertained.
Script is ebooks, audiobooks.
Magazines, podcasts, Script, it's awesome.
Yes, surprised by subscriptions, beat up by bills, floored by finances?
Yeah.
Save yourself the pain and let Truebill do the work. Truebill finds clever ways to save you money, like canceling subscriptions you never use.
Who signed up for those?
Truebill also negotiates lower rates on bills.
Ooh, thanks.
So you don't ever have to hear this again. Give your finances the fix and download Truebill today.
Hi, this is Lisa from 4imprint. Yes, I'd like 50 welcome wows, 300 customer, I love it, and 200 team member. Oh, yes. Certainly. You know, we got some brand new woohoos.
Dial up the wow factor with promotional products from 4imprint. We specialize in awesome items that are certain to awe and guaranteed to deliver some ooh yes. From apparel, backpacks, drinkware to high-tech items.
Wow.
I love it. Woohoo!
Go to 4imprint.com and find some wow now. 4imprint, for certain.
Why pay over $100 a month for cable when it's half the cost for Fubo TV? Get the channels you want with the entertainment you love for the price that cable can't beat. Try free at FuboTV.com.
This is my kitchen table, and it's also my filing system. Over much of the past 3 decades, I've been an investor. The highest calling of mankind, I've often thought, was private equity. And then I started interviewing. While I watch your interviews, I know how to do some interviews. I've learned in doing my interviews how leaders make it to the top.
I asked him how much he wanted. He said $250. I said, fine. I didn't negotiate with him, and I did no due diligence.
I have something I'd like to sell, and how they stay there. You don't feel inadequate now because being only the second wealthiest man in the world, is that right? One of the most successful investors and entrepreneurs in Silicon Valley is Reid Hoffman. As an entrepreneur, he helped to build PayPal, and he started LinkedIn. As an investor, he's been an early investor in Facebook and Airbnb, and now he's a partner in one of the leading venture firms in Silicon Valley. I had a chance to find out what the unique qualities it takes to be a great investor and a great entrepreneur in my conversation with Reid Hoffman. The venture capital world today seems like it can never get any better. Everybody seems to be making money. The values are high, but the returns are very high. Can it get any better than this? And are you worried about this being a bubble, not unlike what we had in the tech bubble burst in 1999 and 2000?
Well, you're always worried about the markets getting overinflated. Amount of stimulus, everything else is part of making this happen. And so I do think that there is some risk within the general market of this. Now, that being said, technology is accelerating the transformation of all industries. There's what artificial intelligence can do to all industries. There's obviously, that's the leading edge of software. There's things happening with AR and VR. There's things happening with crypto and fintech. And so all of this area, I think, is very much accelerating in the future. And so I think that's part of the reason why the venture industry has been so good, is because technology is important in redefining many key industries.
Hey, now, Silicon Valley is not the only place in the United States where there are technology investments, but it seems like the Silicon Valley companies seem to be the most valuable, and that's where the most activity is occurring. Is there something about Silicon Valley that makes it unique and better than other areas of interested in technology in the United States?
There is. Silicon Valley itself has a number of overlapping network effects. It has a network effect of essentially being the hub by which a lot of English-speaking entrepreneurs from around the world come to start their software businesses or key technology businesses. There's the hub for capital and the knowledge and investing that goes into it. There's a hub of talent for people growing these companies. It's part of the reason I wrote this book, Blitzscaling, for how do you build technology companies at a global scale, lightning fast, and the talent. There's network effects of learning and of sharing of information, and it's part of the reason why Silicon Valley, which has the whole Bay Area has like 3.5 million people tops. That's not the tech industry, and why half of the NASDAQ emerges out of Silicon Valley is for those kinds of reasons, and those network effects are what make Silicon Valley great.
What about around the world? Is China likely to catch up and pass Silicon Valley as a leader of technology?
I think it's one of the greatest concerns that Silicon Valley knowledgeable people have, because China is amazing. It has huge amounts of tech talent. Everyone's acting like an immigrant, with hunger. They're like large companies have this policy 996, 9 a.m. to 9 p.m. 6 days a week. You're discoverable at your desk, and that's kind of like tens of thousands of people in technology companies, and they're doing a lot of innovation. There's things that we learn from China, and so I think that China is going to have one very strong creation of the technological future. It's one of the reasons why in blitzscaling we call it the land of blitzscaling. I think Silicon Valley has some edges too, but I think it's very much of a game on.
So let me tell you what it was like spending the night in the Conjuring House.
The technology world in the United States
first of all, it wasn't
like
what I expected it would be.
Google,
it
Facebook,
wasn't
Apple,
scary.
Netflix, Microsoft. I'm sure you're familiar with all this. Do you think that the United States is dominated by too few technology companies, and something should be done to kind of weaken their power, or do you think it's okay as it is?
Well, what I think that we're heading to is we're going from 5 massive tech companies to 10. I think we're already naturally heading in that direction. You can see it with things like Netflix and Salesforce and all of these other companies, which are continuing to also grow in strength and create a breadth of additional global, very strong technology companies. And as perspective as an investor, when you go around and you ask kind of what all the, kind of the venture capitalists, they're like, no, we're having more and more startups, more and more ability to create amazing new tech companies. So like, if anything, I think we're already naturally on that trajectory.
Do you think that large Chinese technology companies, Alibaba, Tencent, Baidu, ByteDance, and so forth, can have their technology become very dominant or important in the United States and around the world? And are we in a world now where we're competing with Chinese technology companies for market share outside of the United States and China?
So I think we're already in that world. I think that if you look at kind of things that Alibaba is doing in terms of spreading the Alipay and everything else into South America, into Africa, I think that the notion of the technological platforms of the future are in deep, there's a fast-moving competition between companies in Silicon Valley and companies in China, and I think that's part of which systems will be the systems that the world operates in is, I think, in deep competition. And that being said, I think we're already seeing Chinese platform companies beginning to make strong headroads into the U.S. ByteDance and TikTok is an obvious one, but I think you already see it in also like drone manufacturer and DJI. There's a whole bunch that are already getting massive global relevance, and you can see it already.
And let's talk about the future, some things that people are interested in right now. One of them is cryptocurrencies. Are you a cryptocurrency aficionado or not?
I am. I actually, if you go to YouTube and search for Bitcoin rap battle, this is inspired by Alexander Hamilton, the musical.
If this crypto
crypto system will be our salvation. It needs to be centralized. It needs regulation.
I ideated and then funded and produced a rap battle between Alexander Hamilton and Satoshi Nakamoto. And that's because I think there is a real role for cryptocurrencies in helping us evolve.
So do you invest in cryptocurrencies yourself?
I do.
Okay. What about transportation? Are you a big believer in autonomous vehicles?
I am. I've invested in Aurora and Neuro because actually, in fact, it's literally a question of when, not if, and how soon for when we have autonomous vehicles. It'll make all of our societies better. It will save, tens to hundreds of thousands of lives. It will enable a huge amounts of increase in productivity. And so I think it's a great thing that we should be accelerating to as societies.
Have you been in one of these cars where you were not the driver and you feel safe?
I do, and I do. Look, I think part of the thing that all of them, not just Aurora, not just Neuro, but all of them have safety, safety, safety is the very first thing. So when I've been in these cars where there is nobody in the driver's seat, it's been good and fine.
You wear a crash helmet when you're in those cars, or
no?
No, you don't. Okay. What about flying taxis? Is that something in our future?
It is. As you know, I also helped bring Joby public by SPAC, and it's moved the transport grid from 2D to 3D, redefine space in cities, make commutes much less onerous, be reliable in getting to the airport on time, or be able to live, kind of more distantly remote, and then be able to come into the cities. And so I think the Jetsons is now no longer science fiction, but en route to science fact.
What about space? Do you invest in outer space related investments?
Not as intensely as some of my friends like Elon, who obviously are in it. I put some money into SpaceX. That's more because, Elon and this amazing transformation of the world. But it's obviously an important area. I've kind of ended up in it sometimes just by who I know.
This thing, it's making me get an ice bath again.
What do you mean? These straps are mind-blowing. They collect hundreds of data points like HRV and REM sleep, so you know all you need for recovery.
And you are?
I'm an investor in Invesco QQQ, a fund that gives me access to NASDAQ 100 innovations like wearable training, optimization tech.
How long you...
I'm done.
Become an agent of innovation with Invesco QQQ.
I'm okay.
Before investing, carefully read and consider fund objectives, risk, charges, expenses, and more in prospectus at Invesco.com.
Guests check in, then check out their phones for financial insights from Merrill. This gentleman, he's learning how carbon-neutral investments could energize his portfolio. And with advice from their Merrill advisor, they've decided that the future is women-led startups. She's got 1 million followers, but she's following trends in next-gen tech.
Personalized advice so impressive, your money never stops working for you with Merrill, a Bank of America company. What would you like the power to do?
So let's talk about how you became an investor and an entrepreneur. You were going to be an academic, and then I guess on a road to Damascus kind of epiphany, you said, I'm not going to be an academic. I'm going to be something more important than an academic. I'm going to be an investor.
Well, actually, right? I didn't start with investor. It started with a product creator. I wasn't even necessarily starting with entrepreneur. It was, how do we think and speak better? How do we make ourselves better as individuals and as a group? Well, actually, this medium of software, this medium of constructing new products, it was kind of like I was just beginning to get that lens of what does the internet mean and how do we all work together and play together and live together using the internet to redefine our space and redefine our networks in order to be better. And I should go create that.
Well, as you were starting this career, you were invited to join a company that was called PayPal. And PayPal turned out to be a gigantic success, later sold to eBay. What was your job at PayPal?
Well, so when Peter Thiel and Max Levchin started PayPal, they each invited their friend who most understood and had entrepreneurial experience to be on the board. So that was me for Peter. And then after about a year of being on the board, I was thinking about going and starting another company, and Peter said, no, come join PayPal full time and help us, because you've been helping us so much on the board and you understand this stuff, and we have so much to do, because PayPal was an early blitzscaler. Its theory was it was going to be a bank, and that was not a workable theory. So we had a great customer acquisition engine, but how do you redefine the payments OS was something that was all in front of it, even as it was exponentiating its burn rate. So I joined PayPal full time, stepping off the board.
All right, so PayPal was ultimately sold, as I mentioned, to eBay for about $1.5 billion or so. You got your share of the profits. You then became an angel investor. For those who don't know what an angel investor is, as opposed to a devil investor, what is an angel investor?
Well, sometimes there may be investors that entrepreneurs think are devil investors, although that's usually more post-fact. Angel investors are individuals, usually with some expertise in this area or some knowledge of the entrepreneur, that tend to invest of the earliest stages of a company. Frequently, well, it's an idea on the back of a napkin, or an entrepreneur just thinking about doing something, although that has like all investment, has professionally scaled, and does so kind of individually. Not with a firm, the resources and assets of a firm, the platform, the network that a firm brings. And so that was what I started doing, mostly just because I was interested in other folks who were building these great projects that I wanted to help out with and participate in.
Hey, when you started doing that, you did it relatively prolifically, and you became known as maybe the most active and maybe the most successful angel investor in Silicon Valley. One of the companies I think you invested in was at Facebook?
Yes.
So what did you see in the young Mark Zuckerberg? Did you say this is going to be one of the great companies in the world, or you just said, I'll take a chance?
So Facebook had already successfully launched a product that, when it opened up a campus, because when I did the investment, it was strictly only a kind of a university campus, network, not the whole world. But when it opened up a campus, in 6 weeks, 80% of the campus was using it 6 times or more per day. And so you could just look at the usage curve and go, this is interesting. The person who's created this is really interesting. And even though back then Mark was very quiet, so had a tendency to not talk very much, long pauses, minutes long pauses in the conversation where you're like, is this conversation over? You could see that he was very smart, and you could see what was the trajectory that Facebook was on was really interesting.
So let's talk about this. You're an angel investor. You're doing pretty well. People are coming to you all the time with deals, and while you might miss one or two, basically you're doing quite well. Why did you join a firm called Greylock, an excellent venture capital firm, but why did you need to be joining a venture capital firm? You're already your own venture capitalist. You had enough money to start your own firm. Why would you join Greylock?
So not surprising for the guy who co-founded LinkedIn. I think in networks, and I think in networks as platforms. And one of the things that I think those small number of very elite venture capital firms within Silicon Valley and other places do is create a network. And I was originally thinking about building my own, and then David Z and Anil Busri, who were then both general partners at Greylock, came to me and said, hey, we're in the process of moving the firm from Boston to Silicon Valley. It's kind of a rebirth of the firm, which has this great set of investors and pedigree and culture and learnings and all these things that will be very helpful, but also this idea of network amplifier for venture capital. We love it. We'd love to do it with you. And I was like, wow, these are people I would be delighted to be partners with these folks. So let's build the firm here.
Now, when you were starting at Greylock, even though you had already had a good career as a venture investor, an angel investor, I think one of the legends of Silicon Valley is the deal you wanted to do was Airbnb. And the senior partner at your firm said, look, this is a terrible deal. It's going nowhere. So were you intimidated by that because you had a lot of experience, and how did you push that through?
There's even more drama than your question suggests, because the senior partner is David Z, who is who's an amazing general partner, was my board member from Greylock at LinkedIn, the reason I'm at Greylock. And so I bring in Airbnb. It's my first deal that I'm bringing into the partnership. And David, who I'm super close to, who I have deepest respect for, has returned billions of dollars to the fund, looks at me and says, well, every VC has a deal that they can learn from and fail from, and Airbnb can be yours. And so I was like, oh, David's super smart. And so ultimately I kind of said, well, look, I have to have the conviction. This is a portfolio. I'm going to, he gave me the hunting license, the permission to go do the deal. So I went and did the deal. Now, to David's credit, 6 months later, the numbers hadn't changed at all. He came back to me and said, I thought about it a lot. I think you were right. I was wrong. What did you see that I didn't see? And I said, well, all of the risk factors that you saw were correct. I just realized that if you navigated through the risk factors, which I could see as able to do, then you would end up with a redefining company of an industry. It would be, it transforms the entire industry. And that's the thing I saw.
You had some time, I don't know where you got the time from, to start a little company called LinkedIn.
The goal was building something that enabled every individual professional to transform their career by collaborating within a network.
America's most iconic foods are now shipping nationwide. So if you want the best New York bagel, legendary Texas brisket, Ina Garten's famous chocolate cake, Chicago's iconic deep dish pizza, seafood from Seattle's most famous market, or the viral sensation pie cakin', Goldbelly, shipping the greatest food gifts in the world to your door. Order today and get free shipping anywhere, nationwide.
Welcome to Lenovo Late Night IT, where industry insiders tell us what they tell their therapists.
Is anyone asking employees and workers what they want from automation?
So it's that human-machine collaboration, right?
Robot coworkers.
Yeah, it'll be like a robot dance.
Like this? Thank you, bro. This is why we booked you. You can go. This is Lenovo Late Night IT.
This tiny payment thing is a giant pain.
Hi, ladies. Alex from US Bank. Can she help? How about a comprehensive point-of-sale system
that can track inventory, manage schedules,
and customize orders? That's what US Bank Business Essentials is for.
What about a new oven? Can US Bank help us there?
We can serve loans in as fast as 12 minutes. That would be a big help.
Huge.
Jumbo. Ginormous.
Finding ways to make your business boom. That's what US Bank is for. We'll get there together.
So in addition to venture investing, you had some time, I don't know where you got the time from, to start a little company called LinkedIn. How did you have time to start a company called LinkedIn while you're a partner in a venture firm?
Well, actually, I started it much earlier than Greylock. That's actually how I met Greylock, because David Z led my Series B. So I was doing angel investing while I was the founding CEO and co-founder of LinkedIn. But I didn't start venture investing until after I'd hired Jeff Weiner to be the CEO of LinkedIn.
And LinkedIn ultimately was sold to Microsoft for roughly $26 billion or something like that. Did you ever anticipate something like that when you started the company or helped to start the company?
So one of the things to think about when you're strategizing, and it's like my first book, The Startup View, has this framework called ABZ planning, which is part of it, is to think about the spread of outcomes. Like what's the great possible outcome? What's the worst outcome? What are the intermediate outcomes? What are the things that change the landscape of it? So I always knew that LinkedIn could be a network as a platform that would be transformative. And I also knew that it was the kind of thing that most aligned with Microsoft's mission. So did that mean that I knew that Microsoft was going to end up buying it for its kind of the largest acquisition in its history? Or, and the answer is no. I thought it was a possibility. It was an outcome. It wasn't the goal. The goal was building something that enabled every individual professional to transform their career by collaborating within a network.
All right, when you sold the company to Microsoft, you went on the board of Microsoft.
Yes.
And let me ask you about that. Microsoft was a technology company that came out of nowhere, became a dominant software company. Many people thought it would go south as it was, getting older and older. It transformed itself when Satya Nadella became the CEO. Were you shocked and surprised at how the company has become one of the most valuable companies in the world again?
No, for a number of reasons. One is Microsoft has always had an enormous amount of talent throughout the whole company. The technology depth, Microsoft, has actually created a whole range of products within not just the commercial side, but also Microsoft Research. And so there's always this raw amount of talent. And then obviously having some key franchises like Office and Windows and other kinds of things, and being willing to be bold in creation of Xbox and the gaming franchise. Now, that being said, I'd say that the thing that Satya brought back with vigor to the company was a focus on earning the ability to build the next generation of products, starting with his own background in Azure, but also kind of transforming across the company. We are only one company in this universe, and we are doing our absolute best to surprise and delight our customers.
So let's talk about the different skill sets. To be an investor, you need a certain skill set. What is that skill set, and what is a skill set, and how is it different to be an entrepreneur?
So, I'll start with an entrepreneur because I think it's a little easier, which is, the game is hard, but the definition is easier, which is you have a vision for where the world is moving towards, where you can help build it towards. Frequently in the case, a new technology or a market shift or something that gives you that kind of market opportunity. You can assemble through your network the assets, not just capital, but talent, the ability to build the new product or service. And you're driven by kind of the cadence of a complete focus on how do you navigate that path, which can include pivoting, includes risk management, and a bunch of other things. But it's that build of building something from nothing, and then in kind of blitzscaling, getting it really large very fast. As an investor, what you're looking at is judging entrepreneurial talent in that same kind of circumstance of, can this set of people, can she or he, sometimes better to have 2 or 3 founders, do that, run this this race. And the key thing that's a difference between being the entrepreneur, where it's kind of the all-in focus, this is the only thing I'm doing, and an investor, is that you're making the judge. You're not running the race as the investor. The founders, the entrepreneurs, they are running the race. You're helping as much as you can, but you have to judge, can they do that? And then can you help them as best you can get there? But it's the key difference in skill.
So to make people feel good who aren't as successful as investors as you are, do you have some failures you can tell us about where you made a terrible mistake, you lost all your money, just to make the rest of us feel good?
It depends on, do we have days? I can go through the list. And actually, by the way, the interesting question about the analysis of here is not as much of the companies that you invested in and went to zero. There's a large list of those companies that did that. The real thing is the companies that you missed. So like missing Twitter, missing Snapchat, missing Pinterest. Those are much worse outcomes than you put in, $100,000 or $1 million or $10 million in this other company that went to zero.
So final question, if somebody said, I want to be the next Reid Hoffman, person who's starting companies, investing in companies, doing good things for public policy, what would you say is the best training ground to do that, and how should somebody prepare to be the next Reid Hoffman?
Well, I'm still young enough that I'm still hoping to be the next Reid Hoffman myself. But that being said, there's a number of people who are like this within Silicon Valley who bring an entrepreneur's mindset, an entrepreneurial success together with an investing mindset, and play a central role in the network. And many of these folks are folks that I work with. I could literally spend another hour listing names. Ali Partovi at Neo, other areas by which We collaborate with these folks. And so I think there's a lot of people out there who are all going to be the next themselves, you know, with this amazing kind of track record and luck.
Time-saving element of Tovala has definitely changed my day, my night, and just makes life easier for me. Tovala is my personal chef.
Tovala. Browse this week's meals at tovala.com.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Depression can be a really tough thing to go through. Fortunately, people always have a lot of ideas how to help you through.
You just gotta snap out of it.
You have so much to be happy for. Fake it till it feels normal.
Cheer up.
It's all in your head.
It's because you're a Leo. Think about all the people that have it worse than you.
Pay over $100 a month for cable when it's half the cost for Fubo TV. Get all the channels you want with all the entertainment you love for the price that cable can't beat. Try free at FuboTV.com.
Some men and women freak out when they first notice signs of hair loss. Some say, no big deal. I don't look much different. Either way, hair loss does sneak up on you. And if you do nothing, chances are you'll soon see your hair getting thinner and thinner and thinner. All while a range of great options are available to you right now.
Get started with a free quiz which will reveal how to help slow or stop your hair loss in its tracks and help identify available solutions to getting your hair back. To take the free quiz, simply text REVIVE to 654-654 now. The free quiz is brought to you by Bosley, America's #1 hair restoration experts. It gets you up to speed on the latest proven techniques and advances and opens the door to some surprising innovations.
But remember, the sooner you get started, the sooner your results of great-looking hair.
Take the Bosley quiz and discover more. It's free. Text REVIVE to 654-654 now.
This is the feeling of certainty. The feeling that comes from knowing you're inspiring your customers, uniting your team, recognizing achievements, and expressing heartfelt thank yous with promotional products people use and love from the experts at 4imprint, your partners in creating special moments and memories by making people smile. Enjoy that feeling of certainty with promotional products at 4imprint.com. 4imprint, for certain.
With love for our planet, Zurich Insurance, sponsors of Leaders with L'Aqua Goes Green.
Electric vehicles are a defining innovation of the green transition. And Brian Gu is at the center of the sector as president of China's answer to Tesla, XPeng.
As a company, we see demand is insatiable. I mean, I think the growth trajectory of our sector is very clear. But getting there, there's a lot of problems we're facing today.
Brian Gu earned his PhD and MBA in the US before rising to become a top executive at JP Morgan in Asia.
I do think, after working with so many different high-quality people and companies, you really get the itchy to build a company yourself.
And that company Brian Gu has helped build, EV maker XPeng, has risen in the top 20 electric car manufacturers by sales since its founding in 2014.
We have a lot of entrepreneurs that started in this sector, and I think actually the ones that really made out of the pack and really be successful are the ones that's truly visionary and sometimes have crazy ideas.
We discussed the future of electric vehicles, competing in China, and lessons from his career.
Brian Gu, thank you so much for joining us on Leaders with L'Aqua. Okay, I'm going to go straight to the point. The icebreaker, maybe the hardest question you'll ever have to answer. What's the biggest mistake you made early in your career?
Well, I think there's a lot of changes I've made along my career. If you think about mistakes, I would say is, when I decided whether I go for Wall Street or go for Main Street. I don't know whether that's a mistake, but that certainly has changed my life for the next subsequent 20 years. I was, a student at the Yale School of Management, which is known for public and private management. So there's a group of people that's focused on sort of the nonprofit world, and then the other group is focused on the traditional Wall Street finance and consulting. And I think it was a debate for me coming from academia. I was a scientist before MBA. To really make that choice, I choose Wall Street, which is probably a bigger, leap of difference in my career. But I think
it's worked out. I mean, how do you go from running investment bank at JP Morgan to the chief executive of Xpeng? It's worked out for you.
Well, I think a Wall Street career gave you a confidence that you can deal with anybody in any situation. That's what they tell you, at least. But I do think after working with so many different high quality people and companies, you really get the itchy to build a company yourself, and also in a sector that's hugely disrupting the traditional ways of making vehicles and making people's mobility lives. So that's really drove me to make that change. But it's something you have to really have the itch for when you make that big jump.
What advice would you give to someone just starting out now?
Well, I think looking back, you don't need to really plan for your ultimate career. You need to know where your passion is, and you can always get there. That's what I tell my kids. You don't need to worry about, should I study chemistry and then go to be a scientist in the lab in order to do research and then to make impact on people's lives. There's a lot of different ways to get there. But if you have a passion that you can identify in your life, the path is just the path.
What's your passion? What kind of chief executive are you?
I'm a very curious person. I love to, figure out what the next big thing is. And I'm doing that right now at Xpeng. We're trying to do great things here. So the passion is always looking for the next big thing.
I mean, I imagine it's a very different skill set coming from, a big Wall Street bank to an EV startup. What advice do you have for anyone starting up, especially in the EV world? Extremely exciting, but also extremely difficult.
I think if I were advising other entrepreneurs to get into the sector, I think first thing is that you cannot have too much realism in the way you approach the work. You have to be crazy. Sometimes you have to be viewed as, that's a little bit insane. Because actually, we have a lot of entrepreneurs that started in this sector. And I think actually the ones that really made out of the pack and really be successful are the ones that's truly visionary and sometimes have crazy ideas.
I like that, a little bit of crazy. Who do you look up to? Is there someone in your space, in your industry, that has been such a disruptor that you worship?
At my age, it's difficult to say I worship people, but I do think they are, trailblazers. They are tech trailblazers in the old days, like Steve Jobs, that people always look up to as an innovator. There's Elon, obviously. They are competitive, but obviously he has built something truly great. We're really thankful for his pioneering thinking and execution. And in China, I think there are a lot of the, I think successful tech entrepreneurs. A lot of those are actually my personal friends. I look up to them because their dedication and tenacity to get to where they are today. So there's quite a few people I really admire along the way.
Coming up, what attracted Brian Gu to a company at the cutting edge of green energy technology and the opportunities for growth in the EV sector.
People are now used to driving an electric vehicle. It's no longer a foreign object. People are building a behavior of charging, of planning their trips, and also the benefit of smarter electric vehicles are getting the consumer attention. So people are now enjoying to showing off, these technology products.
love for our planet, Zurich Insurance, sponsors of Leaders with L'Aqua Goes Green.
Zurich is mobilizing for climate action through the Zurich Forest Project to restore a portion of Brazil's Atlantic forest to its natural state in partnership with the local non-profit Instituto Terra. Each Zurich employee worldwide is gifted one tree.
That tree is a call for action to each one as an individual to continue doing what the planet is asking for.
The restored forest will be self-sustaining and biodiverse. Join us as the journey continues.
This feeling of certainty comes from inspiring your customers and expressing heartfelt thank yous with promotional products people love from the experts at 4imprint. Enjoy that feeling of certainty at 4imprint. 4imprint, for certain.
With love for our planet, Zurich Insurance, sponsors of Leaders with L'Aqua Goes Green.
Brian Gu is president of Chinese EV maker XPeng, one of the companies hoping to bring electric cars to the masses and revolutionize the technology of transport along the way. We discuss what attracted him to the sector and its opportunities for growth.
Brian, why EVs? So is it something that you think will be disrupted and so it will change the way we drive and use our cars? Or does it come from a passion for things that are green?
If it's purely electric, I don't think it's exciting to me. I think EV obviously is a very new thing, and it's disrupting the automobile world today. But what I'm actually excited about is the smart EV. I think an electric vehicle that really have the capability to be smart, that has autonomous driving capabilities, that has the smart cockpit that people can enjoy a very different way of, really driving and utilizing the space inside the vehicle. So I think those are the disruptions of future mobility that really excite me. So electrification is just the first step.
How far away are we from that? I would love to sit back in a car and actually do nothing but read a book or maybe watch, Bloomberg TV. Is that going to come in 5 years, 10 years? And what are the steps that need to happen before we get there?
I think it's more like 5 years than 10 years for this to take place. But obviously for the entire world to enjoy it, it may take a long time because we have a big world. And this will take place gradually. There's a technology path that we believe in, which will start from a driver-assisted functions to a truly robo-taxi scenarios. I think that will probably take many years to develop. And as people and consumers and government gets more comfortable of these smart settings, you will start to see the populism of utilizing these technologies. So I think it will take 5 to 10 years, but I think it's more like 5 than 10.
Is regulation the number one thing that I think is holding you back at the moment for autonomous driving and some of the other things? Or is it actually getting hold of some of the resources? We talk about a shortage for nickel and lithium and the fact that you need a whole infrastructure for this to be the real thing that everybody drives around the world.
I think the EV, the trend is very clear. I mean, if you look at China in the last 12 to 18 months, the penetration of electric vehicle in new car sales is growing tremendously. I mean, the most recent month, it's approaching close to 30% penetration of new car sales. That's new energy and primarily electric. So I think that movement is happening because people are now used to driving an electric vehicle. It's no longer a foreign object. People are building a behavior of charging, of planning their trips, and also the benefit of smarter electric vehicles are getting the consumer attention. So people are now enjoying to showing off, these technology products. So I think that trend is happening. And obviously there's a capacity constraint, there's a supply chain constraints that we're facing today, but that I think will overcome over time. So I think EV as a category is already here. It's just going to be bigger and faster penetrating the traditional vehicle world.
On EVs, is there a worry about, we see some of these sometimes, I mean, they're quite rare, but horrific pictures of batteries taking fire and these cars exploding. Is there still a worry on safety? Or what are the steps for EVs to really go even more mainstream and into everyone's psyche?
I think that's a good point. I think early days, just a few years ago, I think people are worried about EV catching fire, batteries explode, and that happens. I think the cars now become safer, so these episodes have become less frequent. And also, I think the technology is now enabling a lot of these battery-powered vehicles are no longer will catch fire. Maybe it will have smoke, but it will not have fire. There are technologies that's making the car safer. At the same time, I think the consumers are now being educated, so they're not as afraid because those are happening in the much less frequency compared to other accidents. So taking these in a balance, so cars become safer, consumer gets better educated. I think these issues are no longer prohibiting the growth of electric vehicles today.
And then after that, so when's the step? Once we have that, do you need 80% of cars around the world to be electric vehicles to then go to the next step and make it autonomous, or can it actually happen at the same time?
Well, autonomous driving not necessarily has to be an electric vehicle, but electric vehicle has a lot of advantages to allow autonomous driving to develop because the electric platform is a lot more efficient than clean. I think autonomous driving will develop alongside the energy revolution, but it will probably be slower because it is a more technologically challenging problem to solve, and also it require more stricter regulatory policy change and accommodation. Yeah. And also the consumer behavior needs to be educated. That takes a long time. So I think for autonomous driving, the technology is still not completely, I would say, there yet. It's developing very fast, but it's not reaching the safety levels that allows complete robotaxi utilization in the world. So that there's still way to go on the technology front. Similarly, there are also policy issues where regulations does not have a clear definition of liability, definition of what is self-driving versus assisted driving, and there's no legal framework. So that every country has to come up with that. So that will take time. And the third leg of this is how consumer will accept, receive, and utilize such functions. The education process probably also will take a long time. So those three pillars needs to progress at the same time and intertwining and then finally get to the same destination.
Up next, competing with Elon Musk, how Brian Gu hopes his company can stand out in the electric vehicle market.
I don't think we can replicate Tesla. Tesla is a unique because when they founded and then personality behind it, the product is beautiful, technologically very, very strong. So in many areas, Tesla is Tesla, but XPeng is XPeng.
Love for our planet, Zurich Insurance, sponsors of Leaders with L'Aqua Goes Green.
Choose proven quality sleep from the Sleep Number 360 Smart Bed because it can gently raise your partner's head to help relieve snoring. Ah, that's better. And can help you get almost 30 minutes more restful sleep per night. And now the Queen Sleep Number 360 C2 Smart Bed is only $8.99, only for a limited time.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question.
That's going to be the best question I get all night. I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
With love for our planet, Zurich Insurance, sponsors of Leaders with L'Aqua Goes Green.
Brian Gu rose up through Wall Street before crossing over to enterprise, becoming president of Chinese electric automaker XPeng. We discussed the challenges of navigating lockdowns and supply chain disruptions, as well as the influence one particular entrepreneur has had on the industry.
When you look at, the rise and rise of Tesla, It partly goes to this personality, the fact that there's a cool guy at the top, that he's controversial, and people in the streets talk about owning a Tesla. Can you replicate the same? Do you have to go a different route? Like, how do you look at any EV company's relationship in regards to Tesla?
I don't think we can replicate Tesla. Tesla is a unique because when they found it, and then the personality behind it, the product is beautiful, technologically very, very strong. So in many areas, Tesla is Tesla, but XPeng is XPeng. We want to focus on what we think is important for our customers. Our customer like beautifully designed vehicles, either it's large SUV or sports sedan. We believe we have a very, very appealing family look that our customers is really attracted to. They like to have user-friendly features inside the cabin that has a technology feel. It's very smart. It enables them to really utilize the vehicle that's different from traditional ICEs. They want to have a vehicle that really can define the future. That's why we spend so much effort in developing assisted driving technologies that ultimately can lead to autonomous driving. And that's why, I think our products is viewed in China as one of the smartest products on the road.
Brian, when you look at the EV company world, there's quite a lot of them. I don't know whether you think it's a crowded market at the moment, but certainly you're not short of rivals. How long will it take to see the successes and the ones that actually will probably not survive?
Smart EV is a very competitive industry. When I started working with XPeng about 4 years ago, people asked me the same question. Oh, why you want to do a EV startup? Because there are 200 Chinese EV startups in the, they can find. I mean, actually, Bloomberg wrote an article on, there are 200 EV startups in China. I couldn't find 200 names. But at that time, we're faced with a very competitive landscape as a startup company. And a year later, most of the startup companies disappeared. But our competition also changed. We're competing with Chinese domestic, car companies that want to do EV. And a lot of those are very fierce competitors. And we actually, succeeded in that battle. And then the next stage is a lot of the technology companies like Huawei, like Baidu, like Xiaomi want to get into the game. People say, oh, how are you going to compete with these large, well-resourced tech companies? Same thing, because every year, every stage of the development, you're competing with players. And that's how you keep yourself competitive. So we're not afraid of competition. We think actually competition is very healthy for this industry. And for example, last year, when people say, oh, Tesla is lowering prices on their products, how are you going to compete with them? Because your P7 is a direct competitor to Model 3 in China. You must be hurt because they're lower their prices. But that actually is completely the opposite, because when they become more competitive in China, they open up the market for everybody else. And because our product has very differentiating appeal to our customers, we also enjoy tremendous growth ourselves. So I think competition and growth actually go hand in hand. So actually, we enjoy competition in a healthy way, and we think that is actually positive for the industry.
I mean, it sounds exhausting, though, right? You have to look about, the lithium, the fact that it's actually quite difficult to get in charge or actually, have some of these raw materials. There's nickel, then there's, the lockdowns. Are you ever just exhausted, Brian?
Building a company is always exhausting. I think we're already lucky that we're in a sector that's enjoying, growth, secular growth, and tremendous momentum. So we're actually grateful that, we are in the right sector of growth for the next, few years at least. So I think, but as a company, when you develop in China, competing with larger players, well-resourced players, and also, operating in a pandemic world, in an economy that's really being impacted, consumption's impacted. It is very challenging. So no one, as a company leader, is escaping from that, managing challenges. But I think that's how a company grows over time. You really overcome these problems. You do it better than your competitors. You really tackle the supply chain problems, the capacity problems, the pandemic impacted restrictions, the international issues of logistics and supply chain disruptions. If you can handle it slightly better than your competitors, you will be ahead. So I think it's also fun when you actually come out of this process of competition and managing a tough environment to really see your team, see your company in a much stronger vein.
How do you prepare, Brian, for potential risks in both manufacturing and supply management amid, still the spreading of the lockdowns in China, but also, I guess, the widespread acknowledgement that EV vehicles will get much bigger in the years to come?
It's a very, very big question, right? I mean, as a company, we see demand is insatiable. I mean, I think the growth trajectory of our sector is very clear. But getting there, there's a lot of problems we're facing today. We had a supply chain disruption. We have consumption disruption because lockdowns are impacting our sales, services, and delivery. We have also, issues, to deal with, with logistics and transportation. So as a company, I think all I can say is we need to be very nimble. Luckily, we're still small, we're still young, so we don't have rigid, department walls. We don't have large, sort of fixed infrastructures to deal with, so we can be quite nimble. Secondly, is that we actually try to use technology to solve some of the problems. For example, try to work with our suppliers to have multiple sort of testing on alternative components that give us the flexibility to use in our production line. So we are trying to be as nimble as possible, but also as efficient as possible. I think given the flexibility in our operating structure, we can probably handle comparatively better than some of the larger established OEMs.
Brian, how do you measure success?
I think it's the happiness you feel at the end. The success is, first of all, not external, it's internal. You will be happy that you did something versus you will feel it. So I don't think it's a word or some number that really defines success. It's success that you feel like you're making the right decision, spending the right time tackling the problems every day, and then at the end of the year, at the end of the decade, at the end of a tough project, you feel like you accomplished something that really made you happy. I think that's the only thing that defines success, your happiness.
When's the last time you felt that? We've all felt that joy, right? A satisfaction or genuine happiness.
I think it's also continuous thing. It's not like you stop for a moment and say, okay, do I feel happy? You don't ask that question, New Year's Day or the anniversary or birthday. It's just every day you wake up or every day you go to sleep. Are you telling yourself, are you happy? I feel happy. That's to me is success. Is like you are in the right mode. In their period of time, you feel very, very depressed. You feel like you're doing the wrong things. Clearly, you're not successful. I think you're just need to. You'll be driven by your own inner self and emotions. You'll know it.
Brian Gu, thank you so much.
Thank you, Francine.
With love for our planet, Zurich Insurance, sponsors of Leaders with L'Aqua Goes Green.
Zurich is mobilizing for climate action through the Zurich Forest Project to restore a portion of Brazil's Atlantic forest to its natural state in partnership with the local non-profit Instituto Terra. Each Zurich employee worldwide is gifted one tree.
That tree is a call for action to each one as an individual to continue doing what the planet is asking for.
The restored forest will be self-sustaining and biodiverse. Join us as the journey continues.
Pay over $100 a month for cable when it's half the cost for Fubo TV. Get all the channels you want with all the entertainment you love for the price that cable can't beat. Try free at FuboTV.com.
If you're someone who struggles with mobility, even a short walk, won't seem like a short walk. But the sturdy and comfortable Hurricane provides the balance and support you need. It helps you walk on any surface and truly stands alone. Get the #1 selling cane in America with our worry-free 100% money-back guarantee, plus free shipping. Just go to hurricane.com today. Also available at these fine retailers.
I am ballin'. There are so many things I didn't even know I had billing me. 10 million% recommended. Assuming ballin' is a good thing.
Truebill slaps on all cylinders. Very helpful and easy to use. Terryboy66. I actually just learned that word recently. I think Terry means you can easily set budgets and track your spending in one place.
Truebill finds and cancels unwanted subscriptions for you. On average, we save our members up to $630 a year.
Download Truebill today and find out for yourself.
What are you gonna do?
Here! Grab onto me! We can double up!
No, don't worry about it. I'm good. I don't want to detract from your experience.
Just give me your hand!
No, don't sweat it. Probably just a passing thing. The harness fits great, though. Snug.
Sometimes you just need some help. So if you need therapy, find a licensed therapist at BetterHelp.com.
This is Scribd, an app that gives me access to ebooks, audiobooks, podcasts, and more. With Scribd, I can get in my steps in countless pages. Scribd makes every moment a reading or listening moment. Go to Scribd.com and try it free for 30 days.
Almost 10 a.m. here in Hong Kong and in Singapore. This is Bloomberg Markets. I'm Rashad Salamat with Yvonne Mann.
Our top stories this morning, the Fed chair gives his most explicit acknowledgement yet that the U.S. could face recession, saying a soft landing will be very challenging. Chinese tech catches a bid as policymakers signal the crackdown easing, while Ant Group may apply for a key financial license within days. Plus, a former Japanese vice finance minister joins us to discuss the BOJ's ultra-loose monetary policy stance and the yen at 24-year lows.
Yeah, coming amid what is at the moment foreigners bailing out of Japanese bonds at a record level. We're looking also at commodities, with crude oil shedding what at the moment about 2%, seeing really a broad-based markdown. Iron ore as well could be headed below $100 here as well. On top of that, it is all about this statement saying a soft landing would be very challenging. We'll come to that in a second, but how could that be interpreted? Let's also have a look at Hong Kong, moving to the upside, but certainly not off the highs of the day, as we've got the incoming leader of the territory talking about opening up the borders here and new measures in order to facilitate travel. So there we go. That's a look at what's going on. But you can see the commodity side of things really at the moment just seeing a broad-based markdown, and equities moving to the upside. Bonds, generally speaking, are at the moment rallying as well, with yields at the moment falling right across the board in the region. Yvonne?
Yeah, it seems like, you know, when you hear the word recession right now, the market is turning more towards buying bonds and selling commodities, the like here. And it really was that Powell statement that he mentioned, the first time really talking about, yes, they're not going to provoke a recession, so to speak, but you know what? It could still happen.
Do you agree with the perspective that if interest rates go too high, too fast, that it could drive us into a recession?
Certainly a possibility. It's not our intended outcome at all, but it's certainly a possibility. And frankly, the events of the last few months around the world have made it more difficult for us to achieve what we want, which is 2% inflation and still a strong labor market.
And just goes to show how recession really much is overshadowing the inflation concerns right now, even when it comes to Google searches or what's trending. The mention of recession is basically at the highest since we've seen the pandemic hit. So now that you hear Jay Powell himself saying that it perhaps is unavoidable, you know, the market is certainly kind of really kind of looking to that and focusing on that above all. And a lot of central banks, of course, are following what we heard from Jay Powell last night.
Yeah, some of them not actually in particular rush here either. Let's have a look at those in the region here. We're looking first of all at two Asian banks which are out with decisions about 20 minutes apart. We're talking about the Philippines and Indonesia here as well. Philippines seen as tightening by about 25 basis points. That would take actually their rate up to what, 2.5% or thereabouts. We're also looking here at Bank Indonesia. We had just yesterday Peri Borgio saying that there was no need to tighten until there was some real fundamental inflation pressure. So they're likely to keep rates at 3.5%. Don't forget, Thailand has rates of what, half of 1%. And a former finance minister, Korn Chativandij, he's been saying that they should hurry up and actually start increasing the cost of borrowing to prevent a further spike in inflation and to ease the burden on low-income groups here too, because they are really at the moment reeling from the cost of living increases that we're seeing, Yvonne.
And if you take a look at when it comes to China today, perhaps that's why we're seeing HS Tech on a tear. We're seeing Hong Kong markets also up beyond just the reopening story that you just mentioned, Rich, was what we heard from Xi Jinping yesterday, coming out of this meeting and talking about all things about meeting eco targets. Maybe that means that more stimulus is in play. They talk about boosting car consumption, tax exemptions, the like. So that's what's really kind of supporting this market with HS Tech up about 0.7%, Rich.
Yeah, let's get more analysis on not just interest rate decisions in this part of the world, but of course the chief one, the Fed's policy decision. Let's go to Bloomberg Chief Asia Economics correspondent Enda Karan. Now, Enda, how serious is this warning from Powell? And, you know, when he uses the word soft landing would be very challenging, that could be interpreted in a multiplicity of ways.
I think it's significant, Rich, because it's the first time I've certainly heard him say, you know, achieving a soft landing is going to be pretty challenging now. And that is an admission by the Fed that clearly the economy is on a pretty tricky path from here. He did also make clear, though, in those remarks to the Senate, that the alternative would be to allow inflation to carry on and to allow inflation expectations to become embedded, which of course would have longer-term it would be more damaging longer-term for the economy than what they're trying to do now. But his messaging on interest rate hikes was quite clear. He feels there is a job of work to be done. They are going to carry on with that until inflation comes down, and he's acknowledging that the risks in doing so means there could be a recession. And I would say also interesting that he pinned some of the blame on the global economy. He's saying that what they're trying to do in the US has been impacted by the slowdown globally too.
A question is the market going to believe those words? But what is that warning signal for the global economy now, Enda?
Well, you do have people, Yvonne, like Citigroup, for example, talking about now a 50-odd% chance of a global recession. We know about the problems happening in China, for example, from its real estate and from the COVID lockdown. So clearly there is a drag on global growth. And when you listen to the Fed themselves, they're saying that they want to achieve a soft landing, but then you have Charles Evans from the Chicago Fed overnight making the point that, look, he sees potential for another 75 basis points move, and perhaps by the end of the year, they'll be adjusting by 25 basis points. But the point about all of that is it takes a while. There's something called a monetary policy lag. It takes a while before interest rate hikes start to hit consumers. So we won't know the full extent of all of these rate hikes until 5-6 months from now, and we start to see how it is impacting shopping and spending. So I would say when you combine what the Fed are doing with the very aggressive rate hikes and that global backstory of slowing global growth, together, that's why people are talking about the increased chances now of a global recession.
Just talked about the Indonesia and the Philippines, like with these interest rate decisions about 20 minutes apart. Now, just seeing one is likely to move, the other not so much. They've been quite sanguine, though, overall.
They have. The Philippines are probably expected to go because their inflation is at its highest since 2018. It will be the last meeting for Benjamin Diokno before he goes off to the finance ministry. So there is an inflation story there, and that's why they're expecting a hike. Indonesia is a little bit different. Core inflation remains somewhat subdued. There's still a focus on the growth story there. The policymakers are keen to keep floor under the economy. The challenge for Indonesia is that their currency is cheapening. And one would think that when you have a cheaper currency, of course, you need higher interest rates to offset that. That's why some economists say there might be a surprise hike out of Jakarta today. But the consensus is they are going to stay on hold. No hint of a panic in terms of interest rate hikes, which is interesting given what the Fed is doing. Like you mentioned, emerging Asia seems to be navigating it pretty okay.
Anna Curran, our chief Asia economics correspondent. Let's bring in David Finnerty now, our FX and rate strategist, ahead of these key rate decisions in Southeast Asia. How are you looking at the rupiah? How are you looking at the peso this morning?
Yeah, at the moment, the interesting thing is they're both obviously weakening this year, but actually the rupiah is outperforming the peso, even though Bank Indonesia is expected to leave rates unchanged today. I think a key reason for that is the current account difference, and the Philippines is expanding. BSP said it will now be over 19 billion this year, compared to 16 earlier, whereas actually it's a current account surplus in Indonesia because of the commodities. So ironically, even though Bank Indonesia may stand pat today, the odds are that the rupiah will actually outperform the peso for the remainder of the year.
Just tell me here as well, you know, we've got other emerging market Asian currencies really under some pressure as well. I mean, chiefly we look at the Philippine peso as one of them, but let's have a look at others here which also are really feeling it, and why?
Yeah, certainly anyone that's slow on raising rates, so you're seeing Thailand is under pressure. And the other thing is, again, these current account deficits with elevated oil prices and elevated commodity prices. So you're seeing the rupee under pressure because of that. And I said Thailand as well. The good news for Thailand is a pickup in tourism may come next month, starting next month, because they're scrapping entrance requirements for some vaccinated tourists. So that could improve current account, which may see a slight turnaround for the peso, sorry, for the baht, but overall anything that has a current account deficit is certainly under pressure in this environment.
David Finnerty there, FX and rate strategist, counting down to, of course, to those key rate decisions today. Take a look at HS Tech, though. We are continuing to see quite a bit of green on the board. We are mostly higher, although we are seeing a little bit more people underperforming here, or stocks underperforming here. But you take a look at when it comes to Li Auto, XPeng, NIO. These are all of these car makers really benefiting from these talks of tax exemptions when it comes to buying a car. They want to boost consumption when it comes to autos as well. You take a look at when it comes to Alibaba Health, that one actually is gaining some 1%, so recovering after some concerns about maybe a crackdown on online pharma companies right now. On the flip side of all this, you are seeing the likes of Meituan down about 1.5%. Kuaishou, some of these live streaming ones, also facing some crackdown risks here when it comes to tighter guidelines. Continue to see some downside of 1%. Let's get to the first word news now with Vonnie Quinn.
Yvonne, thank you. U.S. Trade Representative Catherine Tai says tariffs on more than $300 billion in Chinese imports provide significant leverage and are useful in negotiations. Tai made the comments as Biden administration officials debate whether to keep the duties in place. Speaking to lawmakers, Tai also said there's a limit to what can be done to ease inflation through tariff changes.
The China tariffs are, in my view, a significant piece of leverage. And a trade negotiator never walks away from leverage. We need to use our tools more effectively. We need new tools. We need to bring an entirely new approach.
China has approved a plan to promote what it calls healthy development of the payments and fintech sectors. A meeting chaired by President Xi Jinping also backed enhancing regulation of major payment platforms. Beijing has promised to unwind a sweeping crackdown on tech companies that ensnared every sector from online education to gaming. Sri Lanka's Prime Minister says the country's economy has completely collapsed and the only path forward is an agreement with the IMF. Ranil Wickremesinghe told Parliament Sri Lanka is now unable to import fuel because of heavy debt. Officials are speaking to the IMF this week about support. Plans are also underway for a summit with India, China and Japan to help secure aid. Officials in Afghanistan say the death toll could rise after an earthquake destroyed thousands of homes. At least 1,000 people were killed, with 1,500 more injured. The magnitude 6.1 quake sets off a new humanitarian crisis in a country already facing a crumbling economy and hunger. The Taliban's supreme leader made a rare public appearance to plead with the international community for aid. Global news, 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Vonnie Quinn. This is Bloomberg. Rish.
All right, so to come right here on Bloomberg Markets, we're looking at this mass exodus from Chinese developers' offshore bonds. They're being mauled, and part of this down to Country Garden's downgrade to junk.
But first, JP Morgan Asset Management tells us why they're underweight on equities and U.S. credit, despite seeing a near-term recession as unlikely. This is Bloomberg.
Time-saving settlement of Tovala has definitely changed my day, my night, and just makes life easier for me. Tovala is my personal chef.
Tovala. Browse this week's meals at tovala.com.
Wow, we're crunching tons of polygons here.
What's going on? Where's Regina?
Hi, I'm LaDonna. I invest in Invesco QQQ, a fund that gives me access to NASDAQ 100 innovations like real-time CGI.
Okay.
Yeah, oh, don't worry, I got it.
Become an agent of innovation with Invesco QQQ. Before investing, carefully read and consider fund investment objectives, risks, charges, and expenses, and more in the prospectus at Invesco.com.
Upgrading or migrating your Oracle or SAP software can waste valuable resources needed for innovation and growth. Instead, use Rimini Street support to extend the life of your current stable software for 5, 10, or more years. Join over 3,000 organizations who've already made the switch to Rimini Street, saving billions of US dollars. Other companies do software. We do support. Rimini Street.
Like any family, the Auburns all have individual priorities. Some like strategic diversification. Some like a little comfort to balance out the risk. Others want immediate gratification and long-term gratification too. They have their own interests, but at the end of the day, there's nothing like being a gold owner. Visit invest.gold to see why gold is everyone's asset.
Imprint, this is Lisa. Hi, I'd like 50 welcome wows and 300 customer I love it.
Promotional products from 4imprint are certain to deliver ooh yes.
Wow.
I love it. Find some wow now at 4imprint.com. 4imprint, for certain.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special Equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month and all year long.
You really get a deep downturn when things in the financial system break and the ability to supply credit to people becomes impaired. I don't expect that to happen this time. So I would expect a mild recession like 1990 or 2001, not a deep recession like 73, 74, or of course the great financial crisis.
I think we're now back into a period in which it does matter, where it's the fundamentals of earnings, the fundamentals of margins, the fundamentals of inflation and interest rates, and putting that all together in terms of appropriate valuation models that will make a big difference for investors going forward.
All right, there we go. That was the former senior investment strategist at Goldman Sachs, Abby Joseph Cohen, and she's also, we were hearing from Bloomberg Opinion contributor William Dudley. There we go. That's the bond market. And Yvonne, we're seeing treasuries advancing, and over the last 24 hours, we've seen about a 1% move to the upside, and you can see yields under pressure. 10-year there, what, 3.15%?
Yeah, it's a bit of a free fall when it comes to yields. You're seeing that across Asia here this morning. Joining us is Sylvia Shang, global multi-asset strategist at JP Morgan Asset Management. Yeah, it seems like, recession risks are building. You hear this first acknowledgement from Jay Powell that maybe it is imminent. Should I believe what he says? How much weight does his words have?
I think definitely if you look at what's happening in the economy right now, given the elevated inflation and the Fed needs to tighten further to contain it, we're definitely seeing recession risk being more elevated, even though in the near term we think the strength of the household as well as corporate balance sheets could contain some of that risks, but definitely more of a problem next year.
Yeah, you've gone underweight equities, haven't you? So, where are you seeing opportunities elsewhere?
Yeah, so currently, given our expectation of growth being maybe sub-trend at the start of next year and also inflation being elevated, we think there's definitely more downside risks to both earnings and margins. So we have moved underweight to equities. So currently, we have an overweight stance on cash. We just think in the current environment, a defensive position probably is the right one.
So you're saying we might not see an recession this year, but you're saying an earnings recession is very much in focus now.
Yes, so even though that a full-blown economic recession is plausible, not our base case at the moment, but if you think about where growth is going and also the fact we have higher labor costs and higher commodities costs, that's likely to weigh on margins and earnings.
Yeah, this is in earnings growth like to be nothing like what we've seen, and that's the point. And how much of that is now priced in your view? And, you know, what else is the market pricing in on top of that? Because they're perhaps looking at an earnings recession rather than perhaps an economic recession.
So definitely we think some of that weakness in earnings is already in the price, but if we are heading to an economic recession, we think there's more room for equities to fall from here.
I'm just taking a look at the year-to-date performance. We were just showing a chart on just cross assets, right? If you rank the best to the worst, it really was energy, oil, you have the dollar, then you have the likes of, you know, gold, and then you get lower to that, it's basically 10-year treasuries and then the S&P. Is there anything that could change this narrative for the rest of the year? Do you think that anything could shift?
I think if we are looking for an environment where growth is cooling but inflation remains elevated, that ranking is unlikely to change. We still think commodities probably will do relatively better in this environment. In the middle, we'll have the fixed income assets, and right at the bottom would be equities.
You think commodities can still outperform given the recession risks that are building right now?
We think there's still, if you look at the commodities market, especially the oil products markets, that inventory is still relatively low. So there is still room for it to move higher if we do have a squeeze more on the supply side.
Yeah, and with all that said and what you said in terms of the economic conditions, I mean, they're applicable to quite a lot of the world, but not to China. So you must have, of course, a different strategy then. I notice that you are getting more and more positive on Chinese equities and perhaps even a little bit more on tech as well, of course. That's the big one.
Yeah, so we're definitely moving more constructive on Chinese equities. We think that in the environment where global growth is slowing, we're seeing China's economic cycle as well as policy cycle moving in the other direction. And also recently, we're just seeing more positive, more dovish stance from the policymakers on the tech sector as well. We think that could be a support.
Constructive. What would it take to be full out bullish at this point? Does the housing market have to come back in a meaningful way for you to turn a little bit more optimistic on China?
I think to turn more optimistic, we probably need to see a more meaningful shift in the COVID policy stance that would really release some of the pent-up demand we've seen in consumption.
What about credit?
Credit overall, if we look at the U.S., we're turning more cautious there. We think that current spread levels are not that attractive given elevated recession risks. But on a relative basis, where we're seeing potential of heading into a recession, we do prefer the higher quality assets. So on a relative basis, we like investment grade to high yield to equities.
If I think a recession is probable now, do I think that we've seen a peak when it comes to U.S. Treasury yields?
I think there's definitely more two-side risks right now. So there's still room for it to move higher if we see higher inflation prints coming through, more hawkish Fed. But definitely as growth concerns take hold, we could see it move lower from here.
Sylvia, good stuff. Thank you for joining us. Sylvia Shengler from JP Morgan Asset Management. Just to tell you that we're going to be looking into markets, seeing what's going on equity-wise and beyond. This is Bloomberg.
When it came to my digestive issues, I got a lot of advice.
High fiber diet.
Low fiber diet.
Go gluten-free.
Then I found Culturelle Digestive Daily Probiotic, and now I'm the one giving the advice. Also try Culturelle Women's Healthy Balance.
Welcome to Lenovo Late Night IT, where industry insiders tell us what they tell their therapists.
Is anyone asking employees and workers what they want from automation?
So it's that human-machine collaboration, right?
Robot coworkers.
Yeah, it'll be like a robot dance.
Like this? Thank you, bro. This is why we booked it. You can go.
This is Lenovo Late Night IT.
You asleep? Do we have enough life insurance? How would just one of us afford the house, car, Jason's college?
Ethos Life.
Ethos Life?
Go to ethoslife.com and get your personalized quote in seconds and apply online in minutes, often without a medical exam. And Ethos is very affordable.
Hey, I just got my free quote with Ethos.
That's great, sweetie. Sweetie? Get a free personalized quote at ethoslife.com.
Greater constraints and tighter regulations are impacting the volatility of the commodities markets. Bloomberg's enterprise solutions deliver powerful end-to-end support for your commodities workflow. Gain deeper perspective on our planet's valuable resources. From data analysis to price discovery and beyond. Tap into the world's most advanced commodities solutions.
All right, here's your commodity check here this morning. Mostly red. Brent crude now extending those losses to 3% or more. 108 for Brent iron ore. Dalian futures are down 2%. A lot of concerns about not just the recession risk, but also steel inventories in China. Still pretty lofty there. Copper also a 10th straight day of losses for copper futures in China. Meanwhile, Boeing CEO is warning that supply chain constraints in the aviation sector could persist even into next year. That says the industry is already racing to keep up with surging travel demand. He spoke to Bloomberg about whether the post-pandemic travel boom is sustainable.
The increase in demand and the bookings, as articulated by pretty much every customer we have around the world, suggests that when a flight gets canceled or supply is reduced, that the bookings just move out another month. Yep. In other words, the demand remains, and it's really supply trying to keep up with demand.
Well, let's talk about supply. It has been a major issue, not only for your customers, but also for you. When is this supply chain shortage of labor, bits, you name it, we're short of just about everything. When do you think it's going to be fixed?
Well, it's not clear to me when it gets fixed, but the planning horizon that we have to attend to would suggest it doesn't get fixed until probably the end of next year.
Wow.
And the real issue, we have a very large, sophisticated, and somewhat fragile supply chain behind the airplane manufacturers. And just as fragile, it turns out, are the operators themselves, the airlines, and the ability to staff up with pilots, the ability to staff up the ground crews, maintenance crews, et cetera. Hardly a week goes by where you don't see some implication of them not being able to keep up with that supply side. And so I believe this is going to last for a while.
Fed Chair is going to be joining the Congress a little bit later on. He's going to be giving 2 days of testimony on Capitol Hill. The emphasis at the moment is on the Fed. The president's putting the emphasis on the Fed to deal with this inflation that we're seeing right now, this supply side problem, the bottlenecks that we're experiencing. Do you think we need a recession to fix some of this?
I won't use the word recession. I'm not sophisticated enough to do that. On the other hand, slowing things down a bit, I think will be helpful to a lot. Now, it doesn't affect every industry equally, but like in our case, where you do compete with other industries on certain disciplines, software development, data analytics, computational work, et cetera, in those instances, if we see a softening of demand, it will be helpful to us with respect to the retention of our people, as well as the recruitment of new people to deal with growth.
You've had some huge operational challenges. The MAX program obviously has been one of them. The 87 program, we still don't know where the 777X is ultimately going to go and when that's going to be certified. Dave, have you got a grip on this? Do you feel you've got a handle on what is happening and the kind of timeline you're looking at to fix some of these problems?
I absolutely feel like we have a grip on it because we've been very deliberate about the fixes and our attention to detail and documentation with the FAA, our counterparty, and we've made steady progress every step of the way. Most importantly, we've been transparent with everybody every step of the way. Our customers, the FAA, EASA, regulators around the world. And while that's uncomfortable, that was always necessary to regain the trust.
I'm Annabelle Drawlers here, checking on some of the movers that we've got about an hour into trading for China. So we're keeping an eye on the biggest property developers in China. We did, of course, hear from President Xi speaking yesterday, pledging to meet these economic targets for the year, even as, of course, we continue to see that focus on COVID-0 in the country, combating these COVID outbreaks there and that weak housing market. So we're seeing some support in the biggest names today. Flipping the board now, though, to check in also on auto stocks in China. They are likewise jumping as well this morning with this vow to boost car consumption, and so we are seeing gains across the board here. Moving now to the next sector we're focusing on this morning, energy stocks. These are slumping this morning in Asia, so this is with these recession risks really feeding back into market sentiment. Big losses, particularly in the names over in Korea. Plenty more ahead. This is Bloomberg.
Hi, this is Lisa from 4imprint. Yes. I like 50 welcome wows, 300 customer, I love it, and 200 team member, oh yes.
Certainly.
You know we got some brand new woohoos.
Dial up the wow factor with promotional products from 4imprint. We specialize in awesome items that are certain to awe and guaranteed to deliver some ooh yes. From apparel, backpacks, drinkware to high-tech items.
Wow.
I love it. Woohoo!
Go to 4imprint.com and find some wow now. 4imprint, for certain.
Today's busy world, managing money is hard. That's why I started Truebill, an app that brings your entire financial picture into focus. Truebill also saves you time and money by canceling subscriptions you no longer want and getting you lower rates on your bills. Download Truebill and start saving today.
Last year, more homes canceled cable TV than ever before. Why? It's just too expensive. For half the price of cable, you can get Fubo TV and watch the live sports and TV you love. Try free at FuboTV.com.
Scribd is my time to listen.
I can listen at home, in the car.
It's a way for me to stay informed, get entertained.
Scribd is ebooks, audiobooks,
magazines, podcasts. Scribd, it's awesome.
Yo, dude, you need some help?
Don't worry about me.
Yo, there's no shame.
No shame. You don't know my family, man.
It's okay to ask for help. Find a licensed therapist at BetterHelp.com.
Hi, I'm Jeff from Nuts.com. When my grandfather started this business in 1929, he relied on 4 important values: freshness, quality, variety, and service. I'm proud to carry on his legacy, but from a bigger space. We still freshly roast, season, and dip delicious nuts here in New Jersey and deliver them with the freshest dried fruits, snacks, and sweets to families that love our products all around the country, including mine. We think you'll love Nuts.com too, so check us out and enjoy free shipping on your first order.
Okay, there we go. It's 11:29, and we've got traders and investors just off their lunch break. The market closing, of course, for its usual hour-long lunch. We've got at the moment Nikkei just about flat, was high. We saw it getting a bit of a boost from the weakness of the yen, which stands at the moment at 135 yen 79 sen. All of this down to, of course, the Fed Chair Jerome Powell's comments on the risk of a recession.
Take a look at when it comes to Japanese markets. The dollar-yen trade continues to be in focus, although we are seeing a bit of a haven bid for yen this morning. We're back below 135.79, still around the 24-year lows, though. The topics and Nikkei are pretty much flat. We're watching JGBs, because take a look at this chart. When it comes to foreigners looking at the JGB market now, they basically are tapping out, selling a record amount of Japanese bonds last week. There's a lot of course, concerns about the BOJ. Do they have the willingness or the political capital or even just the capacity to really cap these yields as we see rates surge globally here? So withdrawals hitting 4.8 trillion yen.
Okay, well, let's try to make sense of all this and make sense of the impact of the weakness of the yen as well. As Mizuho Research Institute Chairman Takehiko Nakao joins us. He's also a former vice Foreign Minister for International Affairs, Finance Minister for International Affairs, and a former Asian Development Bank President. Now, Mr. Nakao, thank you very much indeed for joining us. Nakao-san, you know, what is the immediate impact of what's going on with the yen, and is there a line in the sand, in your view, as to how low it can go and what the authorities there are actually comfortable with?
I think it's very difficult to tell where it will go, but what is clear is this level of yen to dollar, and also in the real effective exchange rate, it is almost 50 years low. So it's very negative, generally speaking, but I don't know to what extent it will be further depreciated, or because it can be overshooting, it can be coming back.
How do you see this impacting the economy? We just had the central bank governor Kuroda talking about how how low it could go now is actually posing a negative impact on the economy. Or do you think that this is the reflation that Japan has been waiting for?
Yeah, but this price increase, CPI increase, is based on the import price increase, which reflects higher oil and commodity prices, food prices, because of Ukraine and demand pick up. But also it reflects the yen's depreciation, which has impact on the imported prices. But what we should pursue is the wage increase and the CPI increase based on the increase of the wages and the profit, the Japanese production. So it shouldn't be the imported price reflation. So I don't think this is good for the Japanese economy. Generally speaking, the currency of the country should be higher instead of lower, generally speaking. If it is very excessive, like 75 yen per dollar when I was Vice Minister of Finance, it is negative. But yen, the currency should be generally better to be stay at the higher level, to have a more purchasing power of countries, income level and asset. That should be appreciated or evaluated well by the market.
Nakao-san, there's a body of thought. You know, you mentioned 75, of course, years ago when you were Vice Finance Minister. The thing is, does this price reflect the state of the Japanese economy in any way? Or maybe it's gone a bit too far, but what would be the right kind of level for the yen in your view?
Yeah, it's very difficult to tell what is the appropriate level of yen, but 75 was too excessive movement, and also the level was too, the yen was too much. But so this time it reflects maybe balance of payments situations, including the trade difficulties, trade surplus coming down, and even sometimes a deficit, and also service trade, which is tourist service, is now not here because of the COVID, and people tend to keep the dividend income abroad, so it doesn't come back. So there are many elements of BP, and also, of course, there is a clear difference of monetary policy stance. So these reflect, these are translated to the depreciation. So it can be said that it is based on the fundamentals, but at the same time, it can be overshooting. So there is no reason that it should be like 135 or 140, even if these are the reasons, and it can be coming back in the future.
Nakao-san, how do you see the BOJ and the Finance Ministry coordinating now to deal with this weaker yen, and what sort of measures should be taken this time around?
It's very clear from Mr. Kuroda's comment that the BOJ is still looking at the deflationary pressures, and especially when yen is depreciated, or they say that yen is not the target. And also, they are still worried about the deflationary pressures on the wages and also the economic activities. So they wouldn't change the monetary policy, including yield curve control. But I think yield curve control and the very expansionary policies was good in 2013 and after the global financial crisis, of course. But by continuing that, there are many negative elements. But I don't know what to do. Negative elements include, once again, yen's depreciations, and also the government bond is easy to issue, and it can be financing the too much debt to the government, and discipline is being lost, and also the spread is smaller, so financial intermediation is difficult, and also the market functions of a long-term interest rate is lost. So there are many negative elements, but I think it's very difficult for the BOJ to change it. Yeah.
Nakao-san, okay, I mean, there have been many stop-start reforms Japanese economy over the years, and we've got Prime Minister Kishida out at the moment with the new capitalism and economic and financial management reforms. What do you think needs to be done? What would be on your agenda, top of your list?
I think the Japanese economy should take advantage of many seeds of income or the profit. There are many good products and services which can be sold at higher prices, but the Japanese companies tend to try to sell the good quality service and goods at lower prices, reasonable price, but it is a mistake. We should try to sell our product at a higher price. And I think it's better to avoid too much dependence on the policy or the government. It's not a good idea to continue to issue large bond to fill the gap of demand and supply or production gap, because it, in a sense, causes the private sector's demand decrease based on the more increase of public debt and public spending. So what we should do is to pursue the efforts of companies so that they can take a more value added by the market, in the market. I think, generally speaking, what the government can do is more limited, yeah.
Nakao-san, then I have to ask you, if this weaker yen continues and the BOJ continues on this dovish stance, how is this going to impact currency markets and your chance, or how are you putting a coordinated intervention? Is that a likelihood at this point to try to stem the declines?
Yeah, the coordinated intervention generally is very difficult unless there is a very kind of excessive movement of the market or the kind of crisis mode. But otherwise, I don't think it's easy to get a coordinated intervention. But the unilateral intervention can be still shouldn't be eliminated as a possibility. I don't know what the authorities are now thinking, but when I was a vice minister, I intervened in the market by $170 billion purchase or 13 trillion yen selling, and it was like 78 yen per dollar. So it was a huge gain of capital gains by that intervention. So at this moment, many people say it's very difficult to intervene in the market, partly because of American inflation, and they don't like the weaker, stronger yen or weaker dollar. But the U.S. import of Japanese goods is just 5% of the import, and they generally don't like the yen's weaker yen or currency war type things more than the stronger yen. So the foreign reserve is generally held for prevent the excessive speculative movement. So we shouldn't eliminate the possibility of the intervention. That is my general comment.
Nakao-san, thank you so much. Mizuho Research Institute Chairman and a former Japanese Vice Finance Minister for International Affairs, Takahiko Nakao, joining us from Tokyo. Let's get to the first word news now. We have Vonnie Quinn. Hey, Vonnie.
Hey, Yvonne, thank you. Federal Reserve Chair Jay Powell has given his most explicit acknowledgement yet that steep rate hikes could tip the U.S. economy into recession. He told the Senate Banking Committee that achieving a soft landing will be very challenging. Powell made no direct reference to the size of future hikes as he faced a barrage of questions about recession risk.
Do you agree with the perspective that if interest rates go too high, too fast, that it could drive us into a recession?
It's certainly a possibility. It's not our intended outcome at all, but it's certainly a possibility. And frankly, the events of the last few months around the world have made it more difficult for us to achieve what we want, which is 2% inflation and still a strong labor market.
Chinese President Xi Jinping is criticizing sanctions for stoking global economic pain. In a speech at the BRICS summit in Beijing, Xi did not explicitly mention the U.S., but said some nations are politicizing and weaponizing the world economy and causing suffering. He also cautioned against confrontation and suggested that NATO was responsible for antagonizing Russia. The Bank of Korea says negative impacts on growth from rate hikes will be limited. A senior deputy governor has told an economic forum that prolonged inflation remains a risk and it must be tamed through preemptive policy. South Korea's producer prices rose at a quicker pace in May, jumping 9.7% from a year earlier. More economists now see the BOK hiking by 50 basis points at next month's meeting. European Union leaders are planning to give Ukraine the green light to become a candidate for membership of the bloc. It follows an intensive campaign by Ukrainian President Volodymyr Zelensky. The formal decision will come at the EU summit in Brussels starting Thursday. And those are your first word headlines. Grish.
All right, thanks a lot for that, Vonnie. Let's just check in with the market action and let's get it over to Annabelle Drillers. And having a look at the commodity side of things, because they're really seeing some pressure here.
Yeah, that's right, across the complex here this morning. So we've got Brent crude now down around its lowest in about a month. We've also got copper off at a 15-month low, and then iron ore as well dropping in Dalian. So the concern here, as we see also reflected in Treasury trading as well, is that recession is on the horizon, and we did hear that acknowledged from Fed Chair Jay Powell overnight. There's also that other concern emerging as well, because we did, of course, hear from President Xi overnight as well. He did put forward these pro-growth policies, but then that also gives us another concern here that we could see a supply glut with demand slackening in the market. But let's flip the board now to check in on how haven assets are performing, keeping a particular watch on the yen this morning. So we are just seeing it strengthen against the greenback. Rezona Holdings, though, saying that we could still see a move back to that 137 mark if we do see yields and oil rebounding. The Korean won, meanwhile, holding at 1,300 here. That is a 13-year low for the currency, particularly risk-sensitive, of course, and then Bitcoin still as well struggling to break beyond that resistance level of 20,000. But, guys, the Hang Seng, of course, one of the highlights today for us because it is a little bit higher. Could see the quarantine policy being reviewed here.
Oh, we will see. I'm not holding my breath.
Hope springs eternal.
Yes, Annabelle, thank you. Coming up, the latest on China's property bonds after Moody's cuts country garden to junk, with Beijing struggling to find ways out of an ongoing housing slump. This is Bloomberg.
What do you think healthier looks like? With a little help from CVS, you can support your nutrition, sleep, immune system, energy, even skin. And before you know it, healthier can look a lot like you. CVS. Healthier happens together.
You probably know Vistaprint for business cards. Yeah, we print that. But did you know we also print that, and that, and that, and that menu? And that's embroidery, but yeah, we print that too.
Can you print here?
Sure, we can print there. We can even help design it. We make print that lets people wear your brand. Take it. Stick it. Carry anything in it. So next time you think print, remember, when you use Vistaprint, the print abilities are endless. Get started with free shipping at Vistaprint.com.
We're Carvana. We've created a brand new way for you to sell your car. Go to Carvana, answer a few questions, and our techno wizardry calculates your car's value and gives you a real offer in seconds. We'll come to you, pay you on the spot, then pick up your car. That's it. At Carvana.
Well, we see Chinese markets are in the green here today, but continue to watch what's been going on in the credit space as well. If you take a look at just what happened with Fosun and then the like, you are basically seeing the yields on some of these Chinese developer bonds. Yeah, those are not typos. You take a look at what Hao Hong has been tweeting, the former BOCOM chief strategist. He calls it insane. Just some of the yields right now. The likes of Yango is in 4-digit percentages. Mass exodus 2.0 is what he calls it from offshore dollar bonds of Chinese developers.
Yeah, and Country Garden, of course, are getting downgraded to junk. Let's have a look at, well, that share price is there just about halving over the last 12 months. Here's Rebecca Shun-Wilkins having a look at all this. China credit editor. So what gives?
Well, I think as Hao Hong emphasizes, we're really moving into a second phase of stress in China's credit market, and with the property crackdown. We are seeing this very firmly spread from some of those sort of classic stressed candidates, the Evergrandes, Yango that he highlighted, into some of these firms that were once seen as safe and really resilient to the stress. So these two downgrades that we've seen, Greenland to selective default. This is a partially state-backed developer, now at selective default, as well as Country Garden, its second junk rating, a credit rating firm now. This is China's largest developer by contracted sales. So we really are seeing this shift to some of these really strong players that were once thought sort of unimaginable as being victims as part of this crackdown.
We used to ask you this question all the time when you were coming on almost on a daily basis. What is next?
On an hourly basis, actually.
What's the next thing to watch then? Are we watching, like, what's the next step? Payment? What's the one to watch?
Well, I think there's a couple of different big items. So the big sort of ticket items would be what happens with Country Garden, what happens with these other quasi-state-owned enterprise type developers. So Greenland, Sino-Ocean is also being watched fairly closely. And then away from that, in the broader space for China high yield, when we look at the Macau casino names also under pressure, when we look at sort of the conglomerate names like Fosun also under pressure, it looks like the entire sort of high yield is really under so much stress. So Fosun, I think, is another big one to watch. Obviously, Moody's has flagged it doesn't have enough cash to cover its short-term yearly maturities that come through this year, and there has been a really radical repricing of risk at that name.
Good stuff, Rebecca. Thank you. Bloomberg China credit editor Rebecca Jun Wilkins there as well. They're looking at what's going on at the moment with the Chinese markets just moving to the upside. And of course, this is as President Xi Jinping came out and said that they really are at the moment trying to meet their economic targets, pledging to do so, despite, of course, the zero-tolerance approach to combating COVID, of course, the weak housing market we've been talking about. But certainly we're on a move up with those references to the target. The first actually is made since the April Politburo meeting. Perhaps just lending a little bit more support, and tech, of course, here also getting a bit of a bounce here in Hong Kong.
Let's bring in our Asia-China markets reporter, Jeannie Yu, on the policy support that we've been hearing. She's comments as well. Jeannie, is this rally still have staying power, and we continue to see more rhetoric? Is that going to be really translated to some sort of action?
Yes, there has been a lot of positive comments about, supporting like the platform economy, and also we got this positive news that the Ant Group is finally getting its license. But on the other hand, the message is a little bit mixed for the regulated sectors. For the live streaming sector, we're getting the tightening regulation on the live streamers. And then for the online farmer owned by Alibaba and JD, the market has some concerns yesterday afternoon about whether the government would ban them selling drug products online. So far, it's kind of like a mixed message, and the market is actually really waiting for more government comments, especially regarding, for example, the online farmer sales regulation, and also what they're going to do to those live streaming platforms in terms of like tighten regulation. But having said that, despite of like the mixed message in terms of the regulation on technology sector, we are seeing the market actually calm down a little bit this morning. So everything has for example, the online farmer tech, it's really trading a little changed after a slump yesterday. So that's the update so far.
Now, this is wishful thinking maybe, but we're hoping for this, Yvonne and I think everybody really, and that's Hong Kong. Are we going to get a reopened plan soon? And are we getting a bit of a boost today for equities from incoming Chief Executive John Lee's comments?
Yeah, it's interesting. Everyone was actually pre-market. Everyone's so looking forward to that. But we are seeing the retailers in Hong Kong, they are actually trading a little changed so far. So I think people need more concrete evidence from the new leadership that the border reopening is really on the way, so that for the retailers in Hong Kong and insurance in Hong Kong to really rally. Yeah.
Jeannie Yu, thank you, our China markets reporter there. We got plenty more ahead. This is Bloomberg.
This feeling of certainty comes from inspiring your customers and expressing heartfelt thank yous with promotional products people love from the experts at 4imprint. Enjoy that feeling of certainty at 4imprint. 4imprint, for certain.
In my new film, I'm creating a lot of transmutants, but I think this is the era coming in. We are mutating ourselves.
It could be so amazing if we were to biohack with care.
Because of the biotechnology has advanced to this date, the big thing is actually changing your whole body construct.
Hyundai Motor, connecting art and technology.
All right, some things we're watching out for here later on today. That Fed stress test obviously going to be very much in focus. The timing of it on the back of what has been a lot of hawkish central bank talk. How does this mean? What does this mean when it comes to these lenders? When it comes to not just the market liquidity, consumer sentiment, stagflation, rising mortgage rates, all the like here. So the key thing to watch here in the U.S. session.
Yeah, I mean, this is coming out tomorrow. We got the University of Michigan Consumer Sentiment Index, and of course 50.2 was the figure that we had last time. They're expecting the same thing, and if it is that, I mean, that's record lows. We haven't seen that since this data series started in 1977. So there we go. And, you know, it's all about what Jay Powell said. We're looking at him essentially saying that a soft landing will be challenging, and that means that trying to avoid a hard landing would be equally so, I'm guessing.
Yeah, they said they don't want to provoke a recession, but then again, you know, it doesn't seem like they can actually avoid it altogether. So it's very hard for them to kind of walk this tightrope of trying to at least assuage investor concerns. And very much, it's not so much about the inflation picture now, but it's the growth picture that we're very much seeing in the likes of commodities right now.
I mean, look at the oil price. I mean, what have we got? We're at 103.47 for WTI, 109.26 for Brent. Just right across the board, we're seeing this move to the downside for commodities. And you'd think that people would be moving into gold, but they're not. There you go. Iron ore. Look at that.
Yeah, copper's down for a 10th day futures there in China. Iron ore, 2% lower. Crude is just below 110 for Brent now, despite the backwardation that you're seeing across oil markets. It's really the demand picture that very much is front and center now. And iron ore, at least in Singapore, is doing a bit better. We're still above 110. But Southeast Asia, we have some key central banks too.
Yep. We got Philippines coming out at, 3 o'clock this afternoon, Hong Kong time, and 20 minutes later it's Indonesia. Not expected to do anything there. Perry Rojo, the Bank of Indonesia governor, saying that there was no need to tighten until there's evidence of fundamental inflation pressure. We've also got the Philippines likely to just further tighten. And if we look at the overall markets and the general market moves, and there you can see the yen, which is making quite a move to the upside. The dollar falling back. US dollar yen now down 0.8%, Yvonne.
Yep, you're seeing that kind of risk-off move, right? Into the yen, into bonds, not so much in equities, but we are coming off some of the highs across stocks here this morning. Commodities still bleeding red. That's still a key focus here, as, of course, the growth slowdown concerns are very much top of mind. This is Bloomberg.
What can you expect from ButcherBox? 100% grass-fed beef, organic free-range chicken, heritage breed pork, and so much more. From farmers who believe in raising animals with care, with no antibiotics or added hormones, ever. All with free shipping right to your door. Together, we can make a difference, one meal at a time. Get free bacon for the life of your membership.
I sleep hot.
Or cold.
No problem. The Sleep Number 360 Smart Bed is temperature balancing, so you both stay comfortable and can help you get almost 30 minutes more restful sleep per night. And now the Queen Sleep Number 360 C2 Smart Bed is only $8.99, only for a limited time.
Guests check in, then check out their phones for financial insights from Merrill. This gentleman, he's learning how carbon-neutral investments could energize his portfolio. And with advice from their Merrill advisor, they've decided that the future is women-led startups. She's got 1 million followers, but she's following trends in next-gen tech.
Personalized advice so impressive, your money never stops working for you with Merrill, a Bank of America company. What would you like the power to do?
Like many families, the Auburns value time spent together to share wisdom.
I got some of my gold before I came to this country.
I got some of my gold before you passed the bread.
Encourage one another.
I can buy gold for this. You can buy gold for this.
And talk about life's wins and misses.
Responsibly sourced, like my gold, but not responsibly cooked.
Because at the end of the day, nothing keeps it all together quite like gold. Visit invest.gold to see why gold is everyone's asset.
Without diversity, life would be excruciatingly dull. It's something worth celebrating. It's something that makes us stronger as communities, as businesses, and as individuals.
I see the benefits at Bloomberg on a daily basis. It's beyond flying that rainbow flag. It's about taking the discussions out into the world and making a genuine difference.
This is the feeling of certainty. The feeling that comes from knowing you're inspiring your customers, uniting your team, recognizing achievements, and expressing heartfelt thank yous with promotional products people use and love from the experts at 4imprint, your partners in creating special moments and memories by making people smile. Enjoy that feeling of certainty with promotional products at 4imprint.com. 4imprint, for certain.
This is Fubo TV. It's a better way to watch live news, shows, and sports without cable. Watch multiple games at once with Multiview. Try free at FuboTV.com.
If you're serious about training for an in-demand career, we are too. That's why Universal Technical Institute is making more than $15 million in scholarships and grants available this year to those who qualify. Visit uti.edu to learn about scholarship opportunities.
This is Scribd, an app that gives me access to ebooks, audiobooks, podcasts, and more. With Scribd, I can get in my steps in countless pages. Scribd makes every moment a reading or listening moment. Go to Scribd.com and try it free for 30 days.
Depression can be a really tough thing to go through. Fortunately, people always have a lot of ideas how to help you through.
You just gotta snap out of it.
You have so much to be happy for.
Fake it till it feels normal.
Cheer up.
It's all in your head.
It's because you're a Leo. Think about all the people that have it worse than you.
I was seriously struggling to save money, so I got Truebill to help me take control of my finances. Truebill helped me cut back on unwanted subscriptions, and I canceled them with just a tap. The app also helped me create a budget, track my spending, and it even helped me lower my bills. I'm saving hundreds each month, and I'm managing my money like never before. Thanks, Truebill.
From the heart of where innovation, money, and power collide, in Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
with Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, U.S. stocks oscillating as investors rush to position after the latest comments from Fed Chair Jay Powell, saying a recession could indeed lie ahead. We'll speak with Shopify President Harley Finkelstein about how it's all impacting consumers and where the company is placing its bets when it comes to the future of e-commerce. Plus, Slack unveils a slew of new features for a hybrid work world. CEO Stuart Butterfield, who's been building companies since before the dot-com boom and bust, will join us. We'll also get his view on the market meltdown. And Jeffrey Katzenberg joins to talk about the future of entertainment and disrupting legacy industries. Plus, we'll get his thoughts on what's happening at Netflix and Disney. All of that in a moment, but first I want to look at the markets with our very own Ed Ludlow. Ed, walk us through the day, and obviously everyone listening to those comments from Fed Chair Jay Powell.
Yeah, so like all eyes on the Fed, and equity markets a little bit softer. We're down by less than 0.2%, both on the S&P 500 and the NASDAQ 100. And nothing really changed in terms of what Fed Powell said on the outlook for rates. The conversation is around whether they can deliver a so-called soft landing. In other words, fight inflation without causing a recession. The quote being, it will be extremely challenging. You see tech-heavy NASDAQ 100 index down by 0.2%-ish, snapping two-day rally, a short-lived rally, yields coming down by 12 basis points on the 10-year, and Bitcoin below $20,000, kind of caught up in the move with equities in this risk-off environment. But you know how I like to do it. Let's take a step back. Let's look at the last few days of trading and look at this in the context of what we've seen in markets recently, especially on the NASDAQ 100. When you think about all of the news of the last 7 days, we started with that Fed meeting a week ago where we got a clearer picture at the outlook for rates. We're going to be at 3.25–3.5% on interest rates by the end of this year. We're kind of trading sideways. And then today, the market not really making its mind up. Has anything materially changed? Was anything actually that new in what Fed Powell said throughout the session? What I'm hearing in the markets is that really no. But we swung between gains and losses. At one point in the session, you saw big tech up quite highly. There were some really interesting movers, though, that we can talk about in a minute. And the one thing I would say is that we're thinking clearly about recession risk. And the conversation is not necessarily if there's a recession, it's about when there's a recession.
Indeed. And obviously, there's a lot of big tech news that's driving some of these moves. I'm thinking about Amazon.
Yeah, exactly. And, you know, partly what we're looking at as well in the news flow is that all of these stocks are trying to stay trading in lockstep. So you look on my board, Tesla down 0.4%. At one point, it had been one of the biggest drivers pushing the index higher. Amazon up by 0.25 percentage point. Netflix up 4.7% in the session. There was actual news with it when it came to Netflix. So the Wall Street Journal reporting that they are now considering a tier of subscription that is ad-supported. We know that that's something they discussed at their most recent earnings as an idea, but according to this report, they are talking to partners like Google and Comcast in partnerships on ads. Altria down 9%, very quick, according to a Dow Jones report that regulators considering pulling the Juul product, in which Altria has a stake, completely from the US market. How long has it been since you and I discussed Juul? It went from the impact on children, flavored products with Juul, to now reports of it being pulled from the US market altogether, and that having a really material impact on Altria shares this Wednesday.
All right, thank you for the roundup. Well, retail and e-commerce companies have been under pressure in the midst of rising inflation and market turmoil, but Shopify shares took a leg up today after a slew of announcements targeted at the changing nature of consumers. I want to talk about all this and more with Harley Finkelstein, president of Shopify. Harley, we've got a lot of news to get to, a lot of announcements that you made, and we'll talk about that. But first, I want to get your sense of what is happening with the economy. Shopify hasn't necessarily been spared here, but what's your feeling about just how bad this will get and if a recession is inevitable?
Thanks for having me, Emily. Always a great pleasure to be on your show. Two things. Let's first talk about the retail outlook and I think consumer sentiment. What we are seeing is that there's certainly some retail rebounds happening in areas like in-person retail, and we are well positioned there. I mentioned on the earnings call last quarter that we saw physical retail GMV up by nearly 80% year on year. And then when we add things like, you know, one of the announcements today was local inventory sync on Google and tap to pay. We really are well positioned to ensure that if physical retail is rebalancing and reopens, that Shopify merchants can also use that as well. But one of the things we're seeing from a sort of a macro perspective is that consumers are very much still voting with their dollars to support independent brands. This is something we saw happen very quickly and intensely during the pandemic. They are looking for quality products, and certainly a lot of the Shopify merchants are doing well there. In terms of the economy in general, it's clear that obviously inflation is at a record level, but to the degree in which merchants' wallets are stretched from higher prices, what they're beginning to do is they're looking to get more value out of every single dollar. And what we're seeing is that more merchants are coming onto Shopify and they're taking more of our products, whether it's capital or payments or fulfillment. They're leveraging our massive economies of scale while still keeping an independent business. So we think both those things lead to a lot of optimism on our side. And of course, Shopify Editions was launched today.
Right. You are making this big shift from D2C to C2C, as you call it, direct to consumer to connect to consumer. What does that mean, and why do you think that's the future?
So this idea of Shopify Editions, which we announced this morning about 9:30 a.m., it introduces what we're calling the connect to consumer era of commerce. And part of it is that the speed of innovation and the depth and breadth of what Shopify is building. I celebrated my 12th year anniversary last week at Shopify. So I've been around for about a third of my life. Thank you. The amount of products that we are shipping right now is stronger than ever before. We unveiled more than 100 new product updates and launches today. And I think we are moving faster than ever. And Shopify Editions is our way of sharing that momentum with the world. Now, I think, I've been on the show a lot talking about direct to consumer, which really was about this one-to-one connection with the brand to the consumer, but it was very transactional. What we are noticing is that more and more consumers want to connect with these brands online, on social media. They want to attend an event or their store. They want to have more of an emotional connection whereby they can connect with brands across a whole bunch of different surface areas. And so commerce is really just not about the transaction. It's much deeper. And we think C2C really places more authenticity and loyalty and trust at the heart of every single merchant interaction. And so a lot of the products you saw today is really about us ushering in this new model for commerce.
You're also striking a big partnership with Twitter to help businesses reach buyers there. And I just wonder why now, when Twitter is facing all of this uncertainty about whether Elon Musk buys the company or not, and if this partnership will hold up in a new regime.
We think the future of retail is going to be retail everywhere. It's going to be online and offline on social media. It's going to be in person at farmers markets, at events and concerts. We really are, I think we started as being an e-commerce company, and about 10% of all e-commerce in the US now flows through Shopify. If we were one single aggregated store, we would be the second largest online store in America. But the key here is that commerce in the future will happen everywhere. And so we've announced, I've come on the show and talked about our integrations with Google and Facebook and Instagram and TikTok to embed commerce there. And then the newest one that we're embedding, the newest partner we're embedding commerce with is Twitter. Now, Twitter's an interesting one. Of course, they're in the news a lot lately. But, if you think about where commerce used to happen, it was always sort of around the town square. It's where the baker sold bread and the cobbler sold shoes. Twitter, in some ways, is the modern day digital town square. And so embedding commerce right into Twitter so you can turn conversation into commerce, all powered by Shopify, we think is a really great thing. And whether or not, they have a new owner in the future or not, I think commerce will play a role in Twitter's future.
Okay. I recently interviewed Amazon CEO Andy Jassy, Harley, and I'm not sure if you caught this, but when I asked about Amazon's relationship with third-party sellers and the tension that has existed there between Amazon and some third-party sellers, he took kind of a dig at Shopify. Take a listen to what he had to say.
Sellers don't really long for e-commerce software. That exists in lots of places, and it's not very expensive. What they love about selling on Amazon is that they get access to our hundreds of millions of customers, and that completely changes what their prospects can be in terms of the businesses they're building.
What's your response to that?
I think that it is quite clear that the future of retail is going to have direct connection between brands and the consumers. Look, obviously, a place like Amazon allows third-party sellers to access a very large network of consumers. But if you look at any of these marketplaces, you as a merchant, you are not building your own business. You are effectively renting customers from the marketplace. And I think for some merchants, that matters. But for a lot of merchants, if you think about your favorite brands or mine, James Purse or the Allbirds shoes I'm wearing, or Bombas socks I'm wearing, they want to have a direct relationship with the people that are buying their products. And I think that more and more you see consumers, again, choosing to go direct whenever possible. possible. So I think there's a place for marketplaces, and obviously Amazon has done a great thing there and is very valuable in that way. But I think consumers also want to have a direct relationship with the brands they're buying from. And that's the reason why you see companies like Mattel and Crayola and Herman Miller and Procter & Gamble use Shopify to go direct to consumer. These are brands that traditionally never did so, and now they're doing that.
Now, Harley, you know, Shopify shares have taken a pretty big dive since November, where they hit a high point, and obviously we're in the middle of broader market turmoil. But how concerned are you about this and going forward? You know, how are you thinking about this? What are investors missing?
I think Shopify was certainly a pandemic story, and I think obviously, you know, the stock reflected that. I think what a lot of people are missing about the Shopify story is that on one hand, we're 10% of all e-commerce in the US. We have massive scale at the same time, and those economies of scale that come with it. At the same time, the 2 million stores on Shopify have an independent business. At the same time that happens, every 30 seconds or so, a brand new entrepreneur gets their first sale on Shopify. That means we are not only getting a larger piece of the pie, we're growing the pie itself. And all those stores that end up, businesses that end up being really successful will stay on Shopify indefinitely. And that's why you see companies like Figs and Allbirds go public, and Gymshark and all these amazing brands that were built at their mom's kitchen table that are now category leaders built on Shopify.
I also want to ask about... I also want to ask about your... Go ahead. Finish your point.
I was going to say, in terms of... So I think we were a pandemic story. I think what often people miss is we're also this reopening story. Again, 80% of our we had 80% growth in point of sale GMV. We have thousands of stores all over the world that use Shopify to power their physical store. You know, we saw social embedded commerce on services like Instagram and TikTok and now Twitter grow almost 400% year on year last quarter. So Shopify is really more than just an e-commerce provider or a pandemic story. We really are the world's retail operating system. And again, look at every one of your favorite brands, or anyone listening, look at your favorite brands. You will start seeing Shop Pay as the payment gateway. You will start seeing Shopify power those brands. That's really important to us, and that's the reason why I think our future is very bright.
I also want to ask about your evolving governance story. Shopify recently made some changes to enhance Toby Lutka, the CEO's power. Some shareholders did oppose these changes. What are you hearing from shareholders now, you know, in terms of concerns about this change, and what has been Shopify's response?
I've spent the last few weeks with some of our largest investors and frankly, a lot of investors generally. And I think, we're grateful for their trust and continue to run the business. But the goal here really was modernizing our governance structure. We want to be a 100-year company. We're about 16 years into it. So we got a lot more time, 84 years left to go. And we want to ensure that we can run our business and make really good long-term decisions for investors, for merchants, for every stakeholder that's involved with Shopify. And we think this modernization, particularly around the governance structure, allows us to do that. I'll also tell you, having spent so much time with investors lately, that some of these investors that have been with us for the last 7 years, since the IPO in May 2015, they believe more in Shopify now than ever before, and we're grateful for that. But we got a lot of room to grow, and we have a lot of new opportunities in front of us.
All right, Harley Finkelstein, always appreciate you joining us. Thanks for taking a wide range of questions today. Appreciate it. Coming up, Slack's annual conference is underway in New York. They're also introducing a slew of upgrades. I'm going to speak to Slack CEO and co-founder Stuart Butterfield next about how this will all impact the evolving future of work. Next, this is Bloomberg.
Wherever you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
This is Omaha Steaks. This is Omaha Steaks. So's this. And this. And even this. And yeah, this too. There are so many ways to enjoy our guaranteed perfection. Just a little everyday wisdom from Omaha Steaks. Visit omahasteaks.com/TV today and you'll get 8 free burgers. Never tried Omaha Steaks? Save an extra $20 with code SUMMER at checkout.
What if you could change your surroundings with the touch of a finger? Now you can. Biometric ID inside the innovative new C-Class.
If If you struggle with mobility, the sturdy and comfortable Hurricane helps you walk on any surface and truly stands alone. It comes with a worry-free 100% money-back guarantee plus free shipping. Get America's #1 selling cane at hurricane.com.
Every day, big decisions are made without full information, overloaded by data, compounded by complexity. Better decisions are made in the light, with clarity and confidence. Aon is in the business of better decisions.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Happening in New York right now, Slack Frontiers, the company's annual conference where they've unveiled the latest innovations to a product that's become integral to the hybrid workplace. Joining us now, Stuart Butterfield, Slack co-founder and CEO, joining us from our studios in New York. Stuart, great to have you back with us, and thanks for coming in. Among the many announcements today, you're building out Slack Huddles, adding this new video feature, and I'm curious, with video conferencing, a very crowded market, what's the unique niche that you hope Slack's offering will fill?
Yeah, thank you, Emily. It's a little bit different than a video call. So Huddles, for those of you who are not familiar, used by tens of millions of people a week on Slack. And up till now, they've been audio only, and the intention is a little bit different than like a call that has a scheduled start time and end time. They're more for serendipitous, spontaneous conversations. And they've been really valuable in that respect. Fastest growing feature in Slack's history, people love it. So we're adding a little bit more of a co-working space. And I think there's a difference between, on the one hand, meetings, and the other hand, people working together and happening to use computers at the same time. We're definitely on the far left edge of that spectrum. And I think that I, like all of the people in the audience, will be on many, many more video calls years from now. But I think there's also like a whole set of tools that kind of became obvious that they're desirable during the pandemic, but we're just starting to see some of them now. Some of them will come from Slack, some of them will come from others. It's actually a pretty exciting time in enterprise software, insofar as enterprise software can be exciting at all.
Indeed. Of course, you know, there's competition here from Zoom and Google Meet and Microsoft Teams and Cisco WebEx. And in the same way that you're kind of moving on to, let's say, Zoom's turf a little bit, you've got Zoom announcing some chat features. Are you at all concerned about them taking Slack market share?
No, not at all. And to be clear, we at Slack are a happy Zoom customer, and I don't expect that to go anywhere. There just is a lot of use cases that aren't covered by the 30-minute video call. There's also a huge amount of stuff that Zoom does that I don't think Slack will ever do, and also vice versa. But we're at this moment where it really feels like, I mean, I'm personally as optimistic as I ever have been in the last 20 years, but it really feels like there's an opportunity to create a couple of brand new categories. And in the same way that everyone has the standard set of email and calendar and word processor and spreadsheet, there's a couple more slots there that the pandemic made clear were really important. And so we're excited to spend a lot of time experimenting there and releasing new stuff.
Now, you don't have to worry about this as much now that Slack is part of Salesforce, and I wonder actually if there's some relief that you actually don't have to worry about the market meltdown. But you've been building companies for more than 20 years. You lived through the dot-com boom and bust. What's your take on what's happening with the economy right now? If Elon Musk has a super bad feeling about it, how does Stuart Butterfield feel?
Well, so I'm pretty old at this point. I had graduated from high school in 91, so I worked through the 1992 recession, right through the dot-com crash, that whole roller coaster, 2008, of course, as well, and a couple of other littler ones. I don't want to suggest that there's no dislocation and there's no like immediate negative impact for a lot of people in the short term, but at the market level, I see this kind of working itself out over, maybe it's 6 months if we're super, super lucky, maybe if it's 18 months, if it's a little bit more realistic. But we do come out the other side, and so many great companies, including Slack, were started, you know, the company that became Slack started in 2009, kind of right in the absolute bottom part of the trough. So I think there's also a lot more opportunity now.
Interesting. So how do you think Silicon Valley looks different after this? I mean, if it's not a major dislocation, is it just a sort of evolution?
Yeah, I mean, so if we're talking about like just stock prices, I think multiples have come down to a pretty realistic level now, and so now we'll see if people can deliver the earnings that are expected. We'll kind of stay in the same box for a while. The bigger question is whether we imagine a recession that would really impact this. But I think something else is going on at the same time, which is we've really realized the importance of all the digital infrastructure that supports productivity and collaboration. And just to make that like a little bit more tangible for people, if you go back to March of 2020 and imagine like a parallel universe where you could keep traveling for work and use conference rooms and commute, go to the office, all of that stuff, but you took away the software, all of these companies would have just disintegrated in like 24 hours. So at some point in the last 20 years, we switched from a world where the physical HQ is more important than the digital to the other way around. And yes, we use digital HQ as a marketing term, but I just mean, obviously all of these companies continue to exist. And when that happens, I think there's a lot more interest in investment. You know, the worst case scenario is a chief information officer who views technology as like HVAC for the building. Like you're just trying to get it as cheap as possible, as opposed to an investment in the organization's overall effectiveness. And the latter case is really what we're seeing with customers.
Now, Slack is becoming more and more integral to all kinds of workforces and has been in the news recently because the January 6th committee has asked Twitter for Slack messages tied to their decision to ban former President Trump, etc. I'm so curious for your thoughts on this. If Slack has been subpoenaed, I know Twitter has refused to hand this information over, and if you were subpoenaed, if Slack would comply.
I got to be honest now, at this point, I have no idea if we've been subpoenaed or not. I don't think so. You know, obviously we have a range of customers. In fact, what a softball opportunity to mention, we also announced GovSlack today, the FedRAMP High version of Slack used by like Lockheed Martin and the US Army Software Factory. But there's a lot of different compliance requirements, message retention rules, and stuff like that. And I think that the investigations are generally going to be of Slack's customers, not of Slack.
That was going to be my next question, your effort to attract more government agencies. How exactly do you intend to do that? How do you plan to handle some of these very sticky issues like privacy?
Yeah, well, we have government customers in 20 different countries, and some of those have been long established. I think there's about 13 US federal agencies using Slack, but there's also state, local, municipal usage. There's usage in Australia, in the UK, in Japan, in France, in Germany. And the kind of benefit that Slack brings to any organization that uses it are obviously there for the government as well. And I think there might be an opportunity to create a little bit more of a fabric that goes through the whole federal government, because those agencies are pretty autonomous, and it's much, much harder, kind of notoriously harder for them to coordinate than it should be.
All right, Slack CEO Stuart Butterfield, always good to have you on the show. Thanks for trekking out to our New York studios. Appreciate you stopping by. Coming up, new revelations from Elon Musk that could explain why he decided to lay off 10% of Tesla's workforce. That story next. This is Bloomberg.
At Lovesac, we design furniture for life. Real life. Messy life. Life that changes and brings us together for movie night. A life where batteries run down and get charged up again. Because now, Lovesac Sactionals can be upgraded with Stealth Tech and immersive surround sound by Harman Kardon hidden inside. Upgradable, washable, and guaranteed for life. Don't just hear it, feel it at a Lovesac showroom near you.
This is the feeling of certainty. The feeling that comes from knowing you're inspiring your customers, uniting your team, recognizing achievements, and expressing heartfelt thank yous with promotional products people use and love from the experts at 4imprint, your partners in creating special moments and memories by making people smile. Enjoy that feeling of certainty with promotional products at 4imprint.com. 4imprint, for certain.
Time-saving element of Tovala has definitely changed my day, my night, and just makes life easier for me. Tovala is my personal chef.
Tovala. Browse this week's meals at tovala.com.
Watch Bloomberg Surveillance Early Edition for the news you need when you need it.
I'm Matt Miller with Kaylee Lyons in New York and Anna Edwards in London.
Australia's central bank raises interest rates twice as much as forecast.
Then surveillance for in-depth analysis.
Alongside Tom Keane and Lisa Abramowitz, I'm Jonathan Ferro, the RBA front and center.
How does Japan get away with not raising rates?
Can it sustain its normal at a time when everybody else is facing a very different reality?
Bloomberg Surveillance. Be informed. Be prepared. Be ahead of the game. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
Elon Musk says Tesla's new plants in Germany and Texas are losing billions of dollars as the EV maker tries to ramp up production. In a video just posted online that was taped 3 weeks ago, the Tesla CEO's comments offer new insight into the days leading up to his decision to cut costs by laying off employees. The staff reductions will affect about 10% of Tesla's salaried workforce over the next 3 months. Coming up, we are going to head to Toronto for a conversation with Jeffrey Katzenberg, fresh off a panel at the Collision Conference about disrupting legacy industries, something he knows a thing or two about. Plus, we'll get his thoughts on the current economic climate and where he's putting his money these days and a company he's invested in. That's all coming up next. This is Bloomberg.
I've heard of Carvana and that we sell cars online. We believe buying a car should be something that gets you hyped up and that your new car ought to come with newfound happiness and zero surprises. And all of us will stop at nothing to drive you happy.
We'll drive you happy at Carvana. Choose proven quality sleep from the Sleep Number 360 Smart Bed because it can gently raise your partner's head to help relieve snoring. Ah, that's better. And can help you get almost 30 minutes more restful sleep per night. And now the Queen Sleep Number 360 C2 Smart Bed is only $8.99. Only for a limited time.
Truebill slaps on all cylinders. Very helpful and easy to use. TerryBoy66. I actually just learned that word recently. I think Terry means you can easily set budgets and track your spending in one place.
They helped lower my internet bill to almost half of what I was paying without any changes to my services. If you didn't know, most bills are negotiable, and Truebill can actually lower them for you. That's actually my favorite feature. That, or I think my smile.
Download Truebill today and find out for yourself.
I pay over $100 a month for cable when it's half the cost for Fubo TV. Get all the channels you want with all the entertainment you love for the price that cable can't beat. Try free at FuboTV.com.
Script is my time to listen.
I can listen at home, in the car.
It's a way for me to stay informed, get entertained.
Script is ebooks, audiobooks.
Magazines, podcasts, Script, it's awesome.
Hi, this is Lisa from 4imprint. Yes. I'd like 50 welcome wows, 300 customer I love it, and 200 team member oh yes, certainly.
You know we got some brand new woohoos.
Dial up the wow factor with promotional products from 4imprint. We specialize in awesome items that are certain to awe and guaranteed to deliver some ooh yes. From apparel, backpacks, drinkware to high-tech items.
Wow.
I love it. Woohoo!
Go to 4imprint.com and find some wow now. 4imprint, for certain.
I'm Jeff from Nuts.com. When my grandfather started this business in 1929, he relied on 4 important values: freshness, quality, variety, and service. I'm proud to carry on his legacy, but from a bigger space. We still freshly roast, season, and dip delicious nuts here in New Jersey and deliver them with the freshest dried fruits, snacks, and sweets to families that love our products all around the country, including mine. We think you'll love Nuts.com too, so check us out and enjoy free shipping on your first order.
Yo, dude, you need some help?
Don't worry about me.
Yo, there's no shame.
No shame. You don't know my family, man.
It's okay to ask for help. Find a licensed therapist at BetterHelp.com.
Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. It was a choppy day for tech stocks as the market tried to make up its mind on the Fed and risks of recession. Where do we land? Bloomberg's Ed Ludlow back to unwind it all. Ed?
Yeah, so we're like modestly lower, right, across multiple indices, especially tech indices. You look at the NASDAQ 100, off by around 0.2%. Outsized selling in semiconductors, chip stocks, some of the worst performers and biggest drags on both the S&P 500 and the NASDAQ 100. You also see the NYSE FANG Plus Index, which is made up of those mega caps and some US-listed shares of Chinese tech companies, modestly lower, but they've been higher during the session. We kind of swung between gains and losses. The market trying to make up its mind about the Fed's ability to fight inflation without causing a recession. Don't take my word for it. Have a listen to Fed Chair Jay Powell.
It is our goal. It is going to be very challenging. It has been made significantly more challenging by the events of the last few months, thinking there of the war and commodities prices and further problems with supply chains. And the question of whether we're able to accomplish that is going to depend to some extent on factors that we don't control.
So the market kind of seizing on the idea this is the biggest admission so far that there's a real risk of hard landing or recession. We had a lot of other things to say, right? The labor market still incredibly tight. The economy still incredibly robust. You look at some of the tech movers, really interesting, especially in regards to news cycle. Look at AMZN up 0.25%. News out of a leaked memo where Amazon's talking about the turnover in its workforce, for example, being very high relative to other industries, it being a real concern. Well, what happens to that labor market as we move towards a Fed that's fighting inflation, not just with interest rates, but the shrinking of its balance sheet? And the other name that just catches my eye with regards to the demand story, because according to Fed Powell, the demand is still there. Netflix up 4.7%. According to reports from the Wall Street Journal, considering an ad tier for one of its subscription models, basically ad support in conjunction with names like Google, Comcast. You have some interesting guests coming up. I'd kind of be interested in their take about Netflix, one of the worst performers year to date, wasn't really participating in the rally of recent days, but having a great day on Wednesday.
All right, interesting to say the least. Thank you, Ed. Well, despite fears that the U.S. is heading towards a recession as inflation drives up costs and some companies start layoffs, there was a more upbeat tone at this year's Collision Conference, where 35,000 people showed up to hear about the future of technology. Joining me now from Toronto, Jeffrey Katzenberg, founding partner at WonderCo and former chair of Disney, also CEO of DreamWorks, of course, along with Hari Ravichandran. He is the founder and CEO of Aura, an online cybersecurity firm and one of Katzenberg's investments. Jeffrey, Hari, thank you both for joining us. I know you've just been on stage talking about disrupting legacy industries. And Jeffrey, this is, of course, something you know a thing or two about. So tapping you as an investor first, given everything you've seen, everything you've tried to do, what industries do you see right now that are most ripe for disruption?
Well, whether it's right for disruption or not, I think that the place of opportunity today that we're quite focused on, continue to be, is on cybersecurity, both for enterprise and for the consumer. I think it will have faced less headwinds in a down recession economy than many industries. Also think the future of work continues to be a place of great opportunity. The disruption out of COVID has been extreme in terms of the workforce, and the tools that it needs today in terms of productivity, of collaborating, sharing, the moving of information and people, I think, is going to be a place of tremendous innovation over these next couple of years. So there are bright spots, but no question we're in for choppy times.
Interesting. Hari, you know, there's actually a huge number of cybersecurity unicorns out there right now, and especially, you know, many companies which raised at hefty valuations when times were good. How do you think Aura stands out on that list?
Look, this is my second go-around building a business. The first time we went through the down cycle in 2000, 2001, again in 07, 08, and you learn a lot of lessons having been through the cycle. So this time around, we're very focused on keeping the fixed core, the fixed cost of our business low, looking for opportunities where there's availability for asymmetric risk-reward payouts, whether it's M&A, organic growth vectors, et cetera. But keeping the core of our business quite tight and making sure that we're mindful of cost, of burn, and having raised a lot of capital last year, we're well set up. So it's really something that we have to stay focused to make sure we're creating a lot of runway and continue to keep focusing on our product.
Yeah, and the other thing, Emily, is that Aura is a mature business. It's got 2 million customers, almost 300 million of revenue. It's a profitable business. And a fair amount of wind in its sails right now in terms of its growth. So this is growth, but it's profitable growth. I think that sort of makes it, you know, in a slightly unique category right now.
So, Jeffrey, I mean, given that you've also seen a number of downturns, run companies through downturns, how pronounced do you think this one in particular is going to be? Is this a recession with a big R or a little r? Is it inevitable?
You know what? You just went way above my pay grade, Emily. And you know, I just have to say, you know, I think, and this is what I admire so much about Hari and how he's running his business. You plan for the worst and you hope for the best. And what I mean by that is that, you know, he really has buttoned down his business. He's running it, you know, on a smart basis, on a profitable basis. But this is also a time of great opportunity. And there are going to be things for us to do, whether it's in M&A, you know, direct to consumer. You know, the ad market's probably going to become more favorable. So you got to be able to play offense and defense, you know, at the same time. You need an offensive team and a defensive team, and that's what I think Hari has built well for this company.
Well, speaking of offense and defense, in part the promise of cybersecurity is, you know, the ability to play really good defense. And we've been warned so many times about the threat from Russia in the midst of this ongoing war on Ukraine. Hari, how big are the threats out there on the cyber landscape, and how do you see that threat evolving as we go through this, you know, potentially pronounced economic crisis for 6, 18 months or longer?
I mean, I think it started with COVID. As people were moving more and more online, a lot more data started moving online as well. And, you know, whether you're looking at sort of nation-state to nation-state attacks or you're looking at attack on enterprises, the interesting thing we see is some of those were prevalent. They're getting a lot more sophisticated. But the new thing that we're starting to see is there's an acceleration of the sophistication of attacks on families and consumers. So it's going all the way from nation to nation to enterprise and consumers and family. You know, I do think that over the next 12 to 18 months, the trend doesn't seem to be slowing down. From what we can see, there's a new variant of a different kind of an attack happening every week. And, you know, criminals seem to be enjoying their work, and it's showing at this point.
So, Emily, an interesting statistic is that in the last 12 months, the amount of theft, digital theft, versus burglary has actually now surpassed it. So there's actually more criminal activity, theft going on against all of us as consumers on our digital footprint than in our homes and our apartments and around our physical goods. And that trend is actually accelerating. So that value right now is, I think, in terms of what Aura is solving for, is, you know, really, really strong and only going to get stronger.
Jeffrey, I have to ask, given, of course, what you saw with Quibi and your long history in the entertainment business, what is your thought on the collapse of Netflix's stock?
Emily, can I congratulate?
Sure.
So can I congratulate you on that? It took you 8.5 minutes to say the word Quibi out loud. So thank you. You got the over. You got the over, not the under. But go for it. Yes, I'm sorry. What did you want to ask?
It is not the only thing you're going to be remembered for, if I have anything to say about it. But I do want to know what you think about what's happening in streaming right now. The collapse in Netflix's stock. You know, have we hit a peak, and is it all downhill from here?
No. Here's what I would say. you know, truly one of the great entrepreneurs of our time is Reed Hastings. You know, everybody were naysayers a decade ago when he came along with this idea of streaming. They were all naysayers when he came along with this idea for, you know, binging of content. You know, there's so many things that, you know, popular opinion were contrary to him and his vision for that company. He's built a great company. There's no question that, you know, it is actually, you know, hit a rough patch for sure. But the last thing I would do right now today is bet on Reed Hastings being down, let alone out. So you asked me, do I think, you know, what is the future of streaming? The future of streaming is going to be strong, likely more consolidation. So there's a lot more competition today. There's a lot more offerings out there today, more than all of us can consume. And so with that, there are going to be winners and losers. Do I think Netflix is going to be in the winner column? For sure. Is it going to see $700 a share soon? Probably not.
I wonder if you think Disney and CEO Bob Chapek are in the winner column too. I mean, obviously you have a long history there. You know, we've seen, you know, some tumult in the executive suite. You know, what does succession look like there, and how does Disney fit into the future of the entertainment business?
100% Disney will also be in that win column. You know, if you had to pick today, you would say Apple, Amazon, Netflix, Disney, Warner Discovery. They're all going to, in some fashion, shape, or form, be in the win column. You know, once again, you know, Chapek has a complicated hand to play. You know, probably no company had more of its businesses adversely affected by COVID. I mean, literally, Broadway shut down, theaters shut down, theme parks shut down, cruise ships shut down. Do I have to keep going? And, you know, he's trying to navigate now, you know, sort of the next renaissance of Disney. It's a high bar. It's a big challenge. My guess is he's up to it.
Jeffrey, I appreciate you humoring us and putting on your entertainment legend hat, as well as your investor hat. Jeffrey Katzenberg, WonderCo, Hari Ravichandran of ARA, coming to us from the Collision Conference in Toronto. Thank you both. All right, coming up, Bitcoin dropping back to 20,000. How long can we expect the winter to last? And why are some folks still so optimistic? We'll discuss. And we will hear from the labor group that helped orchestrate the first successful unionization campaign at an Apple store. Why the International Association of Machinists and Aerospace Workers says it is eager to sit down at the negotiating table. This is Bloomberg.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Cloud. Accenture, let there be change.
What do you think healthier looks like? With a little help from CVS, you can support your nutrition, sleep, immune system, energy, even skin. And before you know it, healthier can look a lot like you. CVS. Healthier happens together.
Butcher Box. We deliver high-quality meat to your door. What happens next is up to you.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Time now for our crypto report. Bitcoin trading once again around the $20,000 level, moving in tandem with falling stocks. This as concerns about a global recession grow. And while some crypto companies are laying people off, others are more optimistic, even about the near future. I want to talk about all this and more with Bloomberg's own Hannah Miller. Hannah, Falcon X raising a big round today. How? In the midst of a very cold crypto winter.
Yeah, no, it's an exciting company that's now valued at $8 billion, up from a $3.75 billion valuation from its last fundraise. And this is a company that has a lot of interesting stuff about it. Its founder has a really impressive background. He was formerly at Google. And this funding round came together in the past few weeks, even as market conditions were changing. So it's super exciting, especially when you see other companies like BlockFi looking to raise at down valuations.
Well, we're back to $20,000 for Bitcoin, but the CEO of Binance says the worst part is probably over. Is he right?
I think CZ is being a bit optimistic here. There's still a lot of fragility in the market. We could see trouble for other lending platforms. We've already seen Celsius and Babel hit. And there's still a lot of uncertainty revolving around regulation and also security. You know, hacks and scams have just been a lingering problem for the crypto industry.
We've seen layoffs at Coinbase, layoffs at Robinhood. You know, when you're talking to your sources, talking to your companies, just how bad is it, or how bad does it feel on the inside of some of these organizations?
Yeah, so I've been told by multiple people to expect more layoffs in the future, that this is going to be a trend after a rash of overhiring last year. And basically, people believe that this crypto winter is going to last for another 6 months to a year, but that it will be shorter than the previous one because we have clearer uses for blockchain now. I'm thinking decentralized finance, gaming, and NFTs. That'll help people stay interested in crypto and blockchain.
All right, well, Hannah will continue to follow your reporting on all of this. Bloomberg's Hannah Miller, thanks so much. Coming up, Apple's first union and what it means for a potential wave of tech unions across the country. We'll talk about that next. This is Bloomberg.
Welcome to Lenovo Late Night IT, where insiders share stories straight from the trenches. How much did the cyber criminals pay you to write that article?
I think we're actually witnessing the end of ownership.
AI by itself is actually fantastic, but doesn't really do the job.
Yeah, it'll be like a robot dance.
Like this?
This is Lenovo Late Night IT.
I'm Jeff from Nuts.com. When my grandfather started this business in 1929, he relied on 4 important values: freshness, quality, variety, and service. I'm proud to carry on his legacy, but from a bigger space. We still freshly roast, season, and dip delicious nuts here in New Jersey and deliver them with the freshest dried fruits, snacks, and sweets to families that love our products all around the country, including mine. We think you'll love Nuts.com too, so check us out and enjoy free shipping on your first order.
What if value and values could coexist? They can. ESG investments are changing the world, powering the shift to a fairer, more sustainable global economy. Bloomberg helps investors and businesses navigate the changing landscape and adapts to evolving regulation. With data you can trust and insight you can act on to unlock ESG opportunities.
Big tech has long been hostile to organized labor, but as of late, there have been some serious moves to change that. This past weekend, employees at a Maryland Apple store voted 65 to 33 to unionize. The move creates the first union of Apple retail employees in the United States. And running the campaign in Towson was the International Association of Machinists. David Sullivan, Eastern Territory General Vice President, joins us now to talk about this big win. And David, the votes we've seen at some of the Amazon warehouses have been a lot closer. Why do you think Apple employees voted here almost 2-1?
We're very pleased with the outcome of this. The workers in Maryland were very excited. They were very involved in this whole process. They came to us because of our presence in the community, and we spent a lot of time with them over the long period of time, talking to them who we are, what we do, and they were just very, very excited about having the opportunity to organize and have a say in their future.
Now, Apple hasn't responded to this union vote directly, but in the past, as news about the forming of a possible union broke, they did tout their benefits. They've touted what these workers are paid. Do you think this vote in Maryland will result in more unions being formed at Apple across the United States?
I do, 100%. We've received many, many phone calls from across the country, from coast to coast right now, and it's the outpour has been very good. It's definitely a wave, and we're very pleased with it. Workers had to put a lot on the line down in Maryland to stand up and have a say in their future, and we're hoping that other workers in Apple see that they were able to do it. They didn't buy into some of the anti-union rhetoric that was out there, that the Machinists Union, we do a lot of good things. These are very highly skilled employees, and we're a very highly skilled union. So we're very pleased that they were able to hold tight, hold strong. And when they walked out that door and you heard the screams, that was the sound we want to hear across this entire country.
How will Apple have to deal with the unions? Like, what kind of discussions and agreements will have to be had?
Typically what we'll do is we'll try to do a meet and greet. We will send the letter. We're going to be certified, hopefully, at the end of the week. It's usually about a 7-day process. We should be certified without any issues. Once we're certified, I'll send a letter to Apple, to the CEO, and request to meet with them. And then we'll start the process to collectively bargain a contract for the employees.
And what will change for workers at unionized stores?
Everything. Their whole world's going to change. They'll have the ability to have a say in their future. They'll have a voice on the job. Scheduling is a big thing for them. They love their job. They do a lot of great stuff, and they connect people to these products that we can't figure them out. We go to these stores, we meet with them, highly technical, highly skilled. They help us get our stuff together. It's for them. I think that because they do love their job, they want to have more say in their schedule, just anything to do with their future, working conditions, safety on the job. They'll have the ability to do that.
We're seeing a similar conversation happening at Amazon, and I actually spoke to Amazon CEO Andy Jassy about union efforts at Amazon warehouses. Take a quick listen to what he had to say.
We happen to think they're better off without a union for a number of reasons, including the fact that, it's much harder when you have a union to have a direct relationship with your manager and to get things done quickly.
How would you respond to that, David?
Yeah, I think that's silly, to be honest with you, just to be frank. For us, the union it's the people there, the people on site, the employees at that store, they are the union. They keep trying to say it's a third party coming in and they're going to not be able to be personal and have friendships. That's absolutely false, 100% not true. The union is the people, on site there, and the relationships can continue. We have great relationships with many, many companies that we work with. So I wouldn't expect anything different from a CEO from Amazon.
How long does a union last for? Will this have to be renewed? And is this going to be an ongoing fight even in Tosin, whether or not it happens beyond?
No, what we'll do is we usually negotiate a contract, typically the 3-year contracts. But once we're once it's officially certified, we'll be the bargaining agent for them, and hopefully it goes forever.
And last quick question, you know, tech has so far been, you know, fairly immune to these kind of union negotiations. How do you imagine this could change the tech industry? We've got about 30 seconds left.
I think it's going to be a great change. I think that these are kind of the workforce that needs a union. They're not a traditional, you know, what we would call a traditional union. So they've been kind of left behind on that. And now they're standing up saying they want more. They want to be able to negotiate over hours of work, working conditions, all the things that a union does. So I think it's going to, when workers around the country, U.S. and Canada, see what we're doing, I think they're going to step up and want to be part of this. I'm very excited. I don't think it's going to slow down. I think it's going to keep moving forward.
All right. David Sullivan, General Vice President at the International Association of Machinists and Aerospace Workers. Thank you for joining us. That does it for this edition of Bloomberg Technology. We're back tomorrow with Cloudflare CEO Matthew Prince, Proton Mail CEO Andy Yen to talk big tech privacy. You don't want to miss it. This is Bloomberg.
This is Omaha Steaks. This is Omaha Steaks. So's this. And this. And even this. And yeah, this too. There are so many ways to enjoy our guaranteed perfection. Just a little everyday wisdom from Omaha Steaks. Visit omahasteaks.com/TV today and you'll get 8 free burgers. Never tried Omaha Steaks? Save an extra $20 with code SUMMER at checkout.
The work you do isn't just about the work you do. It's about full bellies, fresh starts, keeping you going, keeping them entertained, and keeping the lights on. With all this big stuff your money's about, isn't it about time it became yours the second you earned it? Not later, not in 2 weeks, right now. Daily Pay. It's about time.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is Scribd, an app that gives me access to ebooks, audiobooks, podcasts, and more. With Scribd, I can get in my steps in countless pages. Scribd makes every moment a reading or listening moment. Go to Scribd.com and try it free for 30 days.
Why pay over $100 a month for cable when it's half the cost for Fubo TV? Get the channels you want with the entertainment you love for the price that cable can't beat. Try free at FuboTV.com.
Yo, dude, you need some help?
Don't worry about me.
Yo, there's no shame.
You don't know my family, man. My parents or brothers or sisters or cousins ever found out?
Dude, this weight is pretty heavy.
I just need some time and I'll figure it out myself, okay?
Sometimes you just need some help. So if you need therapy, find a licensed therapist at BetterHelp.com.
Time for our lowest prices of the season on the Sleep Number 360 smart bed. Why choose proven quality sleep from Sleep Number? Because every Green Thumb, 5K, and all-day dance party starts the night before. The Sleep Number 360 smart bed senses your movements and automatically adjusts to help keep you both comfortable all night and to help you get almost 30 minutes more restful sleep per night. Sleep Number takes care of the science. All you have to do is sleep. And now, the Queen Sleep Number 360 C2 smart bed is only $8.99, only for a limited time. To learn more, go to sleepnumber.com.
This is the feeling of certainty.
The feeling that comes from knowing you're inspiring your customers, uniting your team, recognizing achievements, and expressing heartfelt thank yous with promotional products people use and love from the experts at 4imprint. Your partners in creating special moments and memories by making people smile. Enjoy that feeling of certainty with promotional products at 4imprint.com. 4imprint, for certain.
The following is a paid presentation furnished by Rare Collectibles TV, LLC.
The biggest numismatic event of the year just occurred. The 2021 Morgan Silver Dollars are finally available, and you are the first in line to acquire them right now. The silver dollar is the ultimate collector's coin, and the most popular silver dollar design is the Morgan Silver Dollar, struck from 1878 to 1921. To celebrate the 100-year anniversary of the final year of issue Morgan Dollar, the U.S. Mint honored this beloved design by striking a limited amount of these coins in 2021. These coins represent our country's westward expansion, with examples struck to honor the U.S. mints which historically produced Morgan dollars. This includes the first branch mint of our nation, the New Orleans Mint, which produced coins beginning in 1838. The San Francisco Mint, created in 1854 as a result of the California Gold Rush. And the legendary Carson City Mint of the Wild West that began minting coins in 1870. All of these historic mints produced Morgan Silver Dollars during their illustrious run. Each of the 2021 Morgan Dollars in this set has a mintage of only 175,000 coins. That's what we call absolute rarity. A coin is considered to have absolute rarity when its mintage is so low that finding the coin in any condition is a tremendous accomplishment. And with millions of collectors looking for these coins, the limited supply cannot catch up to the demand, making examples more difficult to acquire by the day. Here to tell you more about the 2021 S and 2021 Carson City and New Orleans Privy Mark Morgan Dollars is numismatic author and coin expert Rick Tomeska.
Rick is a coin collector with an extraordinary passion for numismatics. Rick Tomeska has written 6 books on rare coins. His first book helped to establish the cameo and deep cameo standards used by PCGS today, as well as the ultra.
Check out to say
by the moves that we're seeing in the rates market. The inflation debate continues.
Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg Radio on Sirius XM Channel 119.
This is Bloomberg Daybreak Middle East. Our top stories this morning. Jay Powell gives his most explicit acknowledgement yet that steep interest rate hikes could tip the U.S. economy into a recession.
It's not our intended outcome at all, but it's certainly a possibility. And frankly, the events of the last few months, around the world have made it more difficult for us to achieve what we want, which is 2% inflation and still a strong labor market.
New allegations. Dominant position in the global financial system.
Prince Mohammed bin Salman and Turkey's president agreed to work towards closer ties to turn the page on years of hostile relations. It's just gone 8 a.m. across the Emirates. I'm Yusuf Gamaluddin in Dubai. This Thursday, we're seeing the growth tremors that have snapped the stocks rally. And specifically, we're looking at the worst first half of the year since the Nixon era. On the S&P 500 mini, looking to extend some of those declines by about a third of 1%. Going into earnings season, it's really all about UBS. They put out a note and they're saying, you know what, we're a little bit more optimistic on what the numbers are going to show. They're expecting U.S. earnings to beat estimates by 7% in the second quarter. I'm looking here at U.S. 10s as well. Relative haven play in bonds is back. Global yields dropping from multi-year highs, down 12 basis points on Wednesday. There's an angst that's ripping through commodities, and this is the energy chart that tells that story. Brent has lost about 10% in 7 sessions. The market's live team is saying the recession alarm bells are getting louder and will likely leave the key $100 a barrel market risk. This is the technical level that's in focus, approaching the lower end of the trend line, and that is down about 16% from last week's high. I want to stay with the commodities theme, though, and talk about copper. A finger on the pulse of global economic momentum, tumbling to a 15-month low. This recession angst that's mounting, and we're breaking back around the $8,600 mark. You've got the escalating macro concerns on the one hand, and then you've got the lofty stockpiles in China. This is a double burden for a very important metal in the wider commodity complex. Let's get back to the broader markets in Asia, though. All the colors and angles. Jules has it all from our Singapore studio. Jules.
Yeah, all of the colours of the rainbow today, Yusuf, because it is a bit of a mixed session. We do have a pretty flat momentum on the regional benchmark index as we continue to weigh up these recessionary fears with what is happening domestically as well. And you can see Hong Kong is an outperformer. This is on reports that the incoming chief executive, John Lee, may be looking to ease some of the very strict COVID restrictions and look to opening up the border with the mainland. You can see, though, the Japanese market is under a little bit of pressure while the yen gains. Now, this is after we heard from Japan's ex-Forex czar, if you will, commenting a little bit of an upside to the Japanese yen. We heard from Takahiko Nakao, the former head of currency policy at the finance ministry, saying that the possibility of Japan intervening to stem the yen's slide can't be ruled out. Still seeing bonds bid. You're seeing that reflected in the Australian bond market, with yields there continuing to slide. This as traders start to really price out the move of an aggressive rate hike from the RBA at the next meeting. And when it comes to central bank decisions, there's a couple in the region today. Let's have a look at my GTV chart. We know that countries and central bankers are grappling here with inflation, and we are expecting the Philippines to further tighten to tame their inflationary concerns, while Indonesia is expected to provide clarity on the timing of its interest rate liftoff, but likely to hold steady today. Indonesia is still very much seeking evidence of demand-led price pressures, but we are expecting to see a quarter-point increase coming through from the central bank in the Philippines. Yusuf.
Yep, we'll see what we get then from the monetary authorities there. Thank you very much, Jules, for the moment. So Jay Powell has given his most explicit acknowledgement yet that steep rate hikes could tip the U.S. economy into a recession. He was questioned by the Senate Banking Committee.
Do you agree with the perspective that if interest rates go too high, too fast, it could drive us into a recession?
It's certainly a possibility. It's not our intended outcome at all, but it's certainly a possibility. And frankly, the events of the last few months around the world have made it more difficult for us to achieve what we want, which is 2% inflation and still a strong labor market.
Let's get more with Bloomberg's chief Asia economics correspondent, Enda Kern. Enda, so this was a very long testimony. I mean, I had dinner, I went to the gym, finished a couple of calls, and all throughout, Mr. Powell was in on the background, and I tuned in here and there. But how serious was the warning that we got from him?
I think it's an acknowledgement, Yusuf, in terms of what everybody else is saying. Really, how can you pull off a soft landing or avoid a recession, given the pace of interest rate hikes that you're pushing through? And he has now said, basically, he's put it on the record, look, that is going to be very challenging. Of course, you then get into a whole debate over whether how deep or how shallow that recession might be. On the other hand, though, Chair Powell did make the point that the alternative to not jacking up rates in the face of inflation would be to risk leaving longer-term inflation expectations getting bedded into the economy. And of course, that would mean longer-term economic damage. He also had an interesting line of attack that complicating his job is the global picture. He didn't name them, but obviously you've got the China slowdown, you've got the energy and food crisis globally from the Russia invasion of Ukraine. So he was trying to massage or nuance his message that if there is a recession in the US, it won't be just because of the Fed. There are global factors at play too.
I mean, here's the thing. So the Fed kind of is leading the way, and that puts pressure on some of Asia's central banks to follow suit. I mean, obviously different considerations. What's standing out to you?
Well, you're right, Yusuf. I mean, the textbook 101 would say if the Fed is going in one direction, emerging economy central banks, especially in Asia, have to follow suit. We are seeing, if not a divergence, something of a slower pace of hikes here. Obviously, China is not hiking. That's a different story altogether. That's the world's biggest emerging economy, number one. But number two, regionally, we're seeing the likes of the Philippines. They would probably hike today. But that's mostly an inflation story. They're not necessarily feeling compelled to match what the Fed is doing. And Indonesia is meeting today also, their central bank, and they're expected to stay on hold. The thinking there is that there's more of a focus on the slowing or on the growth story. It needs more support, less focus on inflation, even though the currency is weaker. And you know, that does speak to the idea that emerging Asia at least seems to be following its own path in response to the Fed. Sure, they're under pressure to raise interest rates. Of course they are. But they're not yet going at the pace that the Fed is, and they haven't signaled that they will be anytime soon.
And thank you very much for the thoughtful analysis. That's Enda Kern in Hong Kong. Well, let's get back to the energy markets, because oil has retreated along with other key commodities as concerns over the global economic slowdown intensifies. Let's head out to our reporter, Steven Sapczynski in Singapore. Steven, I fully appreciate that the energy markets don't always make sense in terms of how pricing structures ultimately get reflected in exchanges. The current price does not match up with the rhetoric of short supply and high demand. What's going on?
Yeah, absolutely. I mean, I think there are a lot of traders who are scratching their head. I don't think folks expected the oil market to react so strongly, but now we're here. People are worried about a recession, and quite frankly, that's probably going to likely keep driving down prices until they do realize that there just isn't enough oil in the market to meet the demand. I think Goldman Sachs had a really good note out over the last day that said, while, you know, there is fear of recession, the Fed can't print more commodities. They can't add more commodities to the market. So while demand might drop, still there isn't enough supply, and that's where we are right now. It's a very interesting mood, because you do look at some of the folks who say a recession will have a giant impact on oil, but then I look on Twitter and I see some of the folks who look at the oil market very closely, and they're in a different almost world, saying, hey, we just aren't in the right supply balance to have WTI at $100. It should be higher.
Exactly. We will see, of course, what the OPEC Plus group decides later this month in terms of additional barrels to the market. Steve, thank you as always. Steven Sapczynski there, live from Singapore. Let's get to China now, because President Xi Jinping has criticized sanctions for stoking global economic pain in a speech kicking off this year's BRICS summit.
Politicizing, instrumentalizing, and weaponizing the world economy, using a dominant position in the global financial system to wantonly impose sanctions would only hurt others as well as hurting oneself, leaving people around the world suffering.
Xi is also looking to bolster relations with emerging markets amid strained Western ties. For more on this, let's bring in our Bloomberg Greater China Senior Executive Editor, John Liu. So, John, what kind of message is Xi trying to send then with these comments?
Well, this criticism of U.S. sanctions is a long-running bugbear for China, which has itself been the target of such sanctions, be it relative to Hong Kong and Xinjiang. And, of course, speaking at BRICS, speaking to the developing world, Xi Jinping is finding a more receptive, sympathetic ear. A lot of those countries, as a result of the invasion of Ukraine, are seeing their food prices go up, their energy prices go up, largely because of the sanctions that have been imposed by the West. Also at this BRICS forum yesterday, it should be noted that Xi Jinping also talked about the domestic economy, in which he vowed to try and reach China's 2022 economic targets. Of course, in March, China set a target of getting to 5.5% GDP growth this year. Most economists see that as being further and further out of reach. And with that vow, the indication is that China is going to have to do more. So we've seen some steps taken when it comes to big tech. We've seen some steps when it comes to supporting new energy vehicles. And so the question now is, will China do even more going into the second half?
Yeah, the answer is probably yes, but we will, of course, continue to check in with you over the next couple of weeks. Bloomberg's Greater China Senior Executive Editor John Liu there. Thank you very much. Let's get to the first word headlines for you from around the world. With the wrap, Jules is back from Singapore. Jules.
Thank you, Yusuf. Sri Lanka's Prime Minister says the country's economy has completely collapsed and the only path forward is an agreement with the IMF. Ranil Wickremesinghe told Parliament the nation is now unable to import fuel because of heavy debt. Officials are speaking to the IMF this week about support, and plans are also underway for a summit with India, China and Japan to help secure aid. Officials in Afghanistan say the death toll could rise after an earthquake destroyed thousands of homes. At least 1,000 people were killed, with 1,500 more injured. The magnitude 6.1 quake set off a new humanitarian crisis in a country that is already facing a crumbling economy and hunger. The Taliban's supreme leader made a rare public appearance to plead with the international community for aid. European Union leaders are planning to give Ukraine the green light to become a candidate for membership of the bloc. It follows an intensive campaign by the Ukrainian President Zelensky. A draft statement seen by Bloomberg says the EU is also granting candidacy status to Moldova. The formal decision will come at the EU summit in Brussels starting Thursday. And Tesla CEO Elon Musk says new plants in Germany and Texas are losing billions of dollars as the automaker ramps up production. Musk called the factories gigantic money furnaces in a video interview recorded at the end of May. The comments offer new insights into Musk's recent decision to cut costs at Tesla by laying off employees. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Yusuf.
Thanks, Jules. Let's get you a bit of a preview of what else is to come on the show. Shuwa Asset Management's Arti Chatrasekaran on why she sees more volatility ahead for Middle East markets and crude oil. But up next, ADS Investment Solutions CIO Ashish Marwa breaks down Jay Powell's latest warning on a potential U.S. recession. We'll get to his key calls momentarily. This is Bloomberg.
Would you say it's more important to gather information fast, or to have it first, or to be the most accurate?
They can really move the needle when it comes to programs.
The point in all this, surely, is the level of support you'll get from companies for this.
What if you don't have to choose?
It also has enormous importance for the labor market.
How do they get ahead of different administrations?
We see this move towards digital currencies.
Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening. We used to take our freedom of movement for granted. Not anymore.
It's not just the people who work for the airlines.
And it's natural to feel grateful for the things that kept you going.
Does America have a chance to lose our advantage?
Can we get to herd immunity fast enough so that we'll be in good shape?
But really, we were just doing our jobs.
Oxford University is starting a study on patients who've recovered from COVID.
Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening. What's the difference between you and your competition?
What's your vision in this relationship?
We're guessing one thing is that you are better informed.
European Central Bank President Christine Lagarde had this to say.
Actually, we're not guessing.
The realism of this is tangible.
Up to the moment news.
Some of the biggest states could see most of the money.
Expert analysis.
Does that mean you're focusing on banks and other financials?
Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
Hey, what's going on, guys? This is Dustin with Streamlabs, and today I'm going to show you how to create your own Streamlabs merch store in under 60 seconds. So let's get started. So the first thing you're going to want to do is either fire up Streamlabs OBS or go to your browser and navigate to streamlabs.com. And then here in your dashboard,
landing, a soft landing in commodity, you know, a lovely tonic from the drop in commodities. I think it's much more aggressive than that. You talk about the slowdown in lending. Surely 6% rates in mortgages it's a natural healer for lending, isn't it?
Yeah. It is, but consumer credit, you know, to some extent naturally picks up in these phases of high inflation because essentially, you know, people need to make ends meet. And also corporate lending is a very important factor of the adjustment as well. So I think mortgages definitely are going to take a slowdown, but don't forget that you have 2/3 of the rest of the market that is really what is going to drive the adjustment.
Yeah, I mean, I guess, Rafaela, what we've been debating and something that this market is certainly trying to work through, if you have Powell saying, look, soft landing is going to be difficult, you have all the warnings that Manus was just talking about recession, is there a point, even if inflation doesn't come down, that the Fed is going to have to stop this rate hike cycle because of the damage done to the demand side and to the economy and to employment?
Yeah, absolutely. You've hit the right point. So I think the market is already priced to perfection in terms of monetary policy. 350, 375 for the policy rate is as much as is what is realistic. When you have high inflation, de facto, you're still in negative policy rates. So that is the other element that really influences the outlook. I think in the case of the US in particular, you will have fast rate hikes. But I think the balance sheet shrinkage that Powell is promising is not going to be deliverable. So eventually, as a stabilizing mechanism for the economy, next year you'll probably have a halt. You may even have a reversal into 2024.
Well, that's interesting because, of course, part of the narrative is that the balance sheet reduction is the equivalent, or the current pace, Rafaela, is the equivalent of a 50 basis point hike per time. When you look at the high yield market, this is something Danny and I were looking at this morning. We're looking at high yield already signaling a 50% probability of a recession. Now, when you look at that kind of blowout in the spreads, is it reflecting the kind of slowdown? Do you think that this is priced to perfection, the credit market is priced to perfection now for the kind of slowdown that you see, or are we looking at a much higher series of default rates to come and therefore a more explosive level on the yield spreads?
Well, I think if we didn't have the uncertainty on Russia, I would say this is already priced to perfection. But because I feel very strongly that we will see disruption in gas supplies, then you probably have not quite seen the peak in risk aversion. But we're very close. I think the magical moment depends completely on the ECB, actually, this time, because it's the ECB, once they will make clear where they will intervene to stop intervention, and when Eurozone bond yields would have fully repriced, they're a little bit behind, but, you know, they're not too far away. The market can, you know, find its equilibrium again. So we're 1-2 months maximum away from that moment.
Speaking of equilibrium, Rafaela, you're right, it is time to re-enter the bond market. Do you see that portion of the equilibrium of bonds yet again a workable haven? Is that story back in play?
Absolutely. This is the time to look at bonds again. U.S. long-term bonds, I think, are already priced correctly. I think Eurozone bonds probably still have 100 to 150 basis points further adjustment up with a 12-month horizon. But, you know, as I said, you will see the ECB.
Do you think the ECB would allow a 100 basis point blowout in the spreads? If you think there's 100 basis points to go on some of the outrights, do you think the ECB, do you think Lagarde would tolerate that?
Yeah, with a 12-month horizon, yes. In the near term, no, because there needs to be a gradual process. But with the magnitude of the changes that we have ahead, there is no reason why bonds need to be that low. And you have to tolerate that BTPs at the 10-year probably need to settle at 5 next year.
All right, Rafaela, ending with some strong calls there. Thanks so much for joining us. Rafaela Tanconi, Chief Economist at Wood & Company. Coming up on the show with Manus and me, oil retreats over recession angst. We're going to look at commodities next. This is Bloomberg.
Sleep. Feel. The Chic's difference is real. Pull back, fall in, exhale. Sleep cool all night. On a cloud, like a feather. Smooth, soft, nothing better. Holds tight, just right. Own the night. Visit trycheeks.com to get 25% off, free shipping, and 2 free pillowcases, plus a 60-night guarantee.
Joel, since Kansas, we've taken our own path. We've never done what everyone else did. We took on the fear. We ignored the doubt. We loved the excitement. We believed. Even when our path didn't make sense to everyone else, we kept going. We keep going until our path is the one they wish they had taken.
This tiny payment thing is a giant pain. Hi, ladies. Alex from U.S. Bank. Can she help? How about a comprehensive point-of-sale system that can track inventory, manage schedules, and customize orders? That's what U.S. Bank Business Essentials is for. What about a new oven? Can U.S. Bank help us there? We can serve loans in as fast as 12 minutes. That would be a big help. Huge. Jumbo. Ginormous. Woo!
Finding ways to make your business boom. That's what U.S. Bank is for. We'll get there together.
Your record label is taking off, but so is your sound engineer. You need to hire.
I need Indeed.
Indeed you do. Indeed Instant Match instantly delivers quality candidates matching your job description. Visit Indeed.com/hire.
Doesn't always give you time to change the outcome. Prediabetes does. With early diagnosis, prediabetes can be reversed. Take the 1-minute prediabetes risk test today. Go to doihaveprediabetes.org.
Welcome back to Bloomberg Daybreak Europe. I'm Danny Berger in London, Manus Cranny back in Dubai. Now, oil retreated as concerns over a global economic slowdown intensified, with Fed Chair Jerome Powell warning that a U.S. recession is possible. Joining us now is our energy reporter, Stephen Stupczynski. Stephen, are recessionary worries enough to hammer oil like this, given that the market, is just still so extremely tight?
Yeah, the biggest issue, I think, is prices rose a bit too much too fast for Brent. And when people started to take into account that the Fed is really taking a more hawkish tone, the fears of a recession kind of pulled a lot of investors out of the market. They wanted to go to other assets. They thought, maybe there could be a larger hit on demand. But you're right. The fact of the matter is, when you look right in front of us, there just isn't enough supply to meet demand. And that's going to be the situation for months, especially if Chinese demand were to come back. There are some actually positive sort of bullish signs out of China, out of other Asian nations as well. You have Russian output really getting hit by EU ban curbs and other things like that are showing that fundamentally speaking, oil could go higher. So this move is really kind of part of a wider commodity sell-off due to these fears that a recession could be in the cards, and if other central banks follow what the U.S. Fed is doing.
Stephen, good to have you with us this morning. We spent a lot of time talking about gas in Qatar over the past 3-4 days. But to the oil market, it's interesting. KPC said there was a $30 war premium. It's gone. The war premium is gone. To me, that's the most, I suppose, inappropriate pricing. So Ed Moore says $80 on recession risk. But where's the war premium gone? And are we misguided to think that it's gone completely?
I'm not going to try to be a trader here and take out a crystal ball, say where prices should be going, but I think what we should expect is more volatility, because you're right. That war premium, the problems that will come out of Russia, what the EU is going to do to clamp down on Russia, that is going to add more support to the market, and that's something that's going to cause prices.
Stephen, we got to leave it there. Unfortunately, time has run against us. Stephen Stupczynski for Bloomberg.
This is the feeling of certainty. The feeling that comes from knowing you're inspiring your customers, uniting your team, recognizing achievements, and expressing heartfelt thank yous with promotional products people use and love from the experts at 4imprint, your partners in creating special moments and memories by making people smile.
Enjoy that feeling of certainty with promotional products at 4imprint.com. 4imprint, for certain.
In the past 2 decades, China has built large infrastructure projects in almost every country in Africa.
African governments themselves said, we are tired of aid and charity. We want to do trade. We want to be treated like partners. The Chinese came along and said, great, we don't do aid and charity. We want to do business with you.
Global Gateway will mobilize 300 billion euros till 2027.
Now, the US and Europe are answering back with their own infrastructure initiatives to counter China. But African experts are skeptical.
China has been that guy around the corner with, a bouquet of flowers to Africa, the US, Europe and the UK have time and time again said, be careful of the flowers you see out of the window, they have thorns on them.
Junior achievement is where dreams take flight. We are helping students connect what they learn in school to future work and career success. We are teaching them how to manage money to achieve financial security as adults. And we are showing them that starting a business also means changing lives and communities. However, we can't do it alone. Find out how you can help.
This is Bloomberg Daybreak Europe. I'm Menace Granny in Dubai. Danny Berger in London. These are the stories setting your agenda.
Powell says the R word. The Fed chair says a recession is possible as steep interest rate hikes will make a soft landing very challenging. Reaffirming growth, Chinese President Xi Jinping pledges to meet economic targets while slamming the use of sanctions to weaponize the world economy. Candidacy status, EU leaders plan on laying out a path for Ukraine to join the bloc at a summit today in Brussels. Manus, I know it's all about recession. At some point, we're going to have to get a jar that we need to put money in every time we say it because it is nonstop. But the market, with this drop in commodity prices, does feel a little bit relieved because of that.
It's amazing how we go from the extremes, isn't it? The inflation, which hasn't gone away, to this R word, which has dominated the themes this week. From Powell in front of the government last night at committee level, Elon Musk, Jamie Dimon, and Christian Saving, those voices about the reality of a recession, but it's now about the shape of recession that we're going to deal with. Money's coming into bonds. They are neurotic about the prospect of recession over inflation. Of course, it's a toxic mix. Let's have a look at the cross-asset check. You got oil on the drop. You got commodities coming off quite aggressively. The LME commodity complex under pressure throughout the week. Yields are declining. You've got duration hunters coming in. You've got Bill Dudley saying a hard landing is coming in the next 12 to 18 months. So yields fall. NYMEX crude drops on the back of that. It's down 15% in 10 days. Ed Morse is at $80, by the way, in the fourth quarter. Copper drops again. It is predicated around this hard landing, or the scale of the hard landing that is going to be delivered. And of course, you have Bitcoin, Danny, managing to find a bounce in the middle of all of this risk off in the rest of the assets. So above 20,000, how long will it last?
Manus, I'm going to steal from you. About 30 minutes ago, you mentioned Abby Joseph Cohen, which I thought was really smart in this market right now. This idea that the momentum chasing it is over, fundamentals are back. You don't have these big buildups of markets just going higher and higher. Is that what we're witnessing now? The S&P 500, of course, had fallen into a bear market so far this year. It was down just moments ago. It's flipped into the green, but barely so. European stocks also off the lows, but still down this morning. Meanwhile, a pretty sizable rally in Asia. Manus, that's being led by HS Tech. JP Morgan Asset Management says they're doubling down on the bet. They think that both low valuations and this cooling off in regulation will be a winning bet. Well, Manus, you mentioned Bitcoin. Let's dig into it further. Crypto's richest man, Zhepeng Zhao, built Binance into the world's biggest digital currency today. Today's big take says he may now face looming regulatory crackdown in a brutal crypto winter. Is it a crypto winter we are going to face. Of course, that story and a big take go on your terminal. But for a conversation on the wider crypto market, let's bring in Charlie Moore, CIO and founder of Bite Tree Asset Management. Charlie, have we finally had what I think is the professional term, the cathartic puke in the crypto market, or is the worst of the worst over now?
I think it is. It's got to be. I mean, I actually called it early this time. You know, I was right in March 2020, and I called it at 5. This time I called it at 30, so I was 1/3 early. It did look happy at 30, but alas, 20 it is. I think that, you know, that a lot of media coverage over the weekend, the end of Bitcoin, how immoral, how awful it was. You know, we're still looking at the best performing asset this cycle. You know, it's beaten everything. So from, you know, the 10K pre-COVID to 20K today, nothing's done that. You know, the S&P, the NASDAQ, all the major benchmarks, they haven't matched Bitcoin. So that's, you know, it's pretty high for a dead asset.
Charlie Morris, good to see you again, back in the land of crypto. Now, Charlie, you say this crypto train wreck is perhaps nearly over. I want to know what the structure of this market is now, because $500 million, $500 million flowed out of the ETFs over the weekend. What is left? Who is left structurally supporting your 20?
So you've got the cost of mining to consider. And this is, you know, one of the network costs, which I think, Manny, is what you're alluding to. And good to see you too, by the way. And, you know, at $68,000, it was costing 3 times more to support the Bitcoin network than it currently is today. I think, you know, when you're mining circa 900 coins a day, and you do the math, I think you're about $6 billion a day at 20,000 from the top of my head. And so $6 billion of inflow for Bitcoin per year sounds like a lot, but it really isn't in the scale of things. You know, it is a global macro asset these days that's here to stay. It was a very high cost, and this was something I was complaining about last year, saying, you know, can this network really afford $2 billion a month of inflow? Indeed, in Q4 2020 and Q1 2021, it was getting that and more. And there was for a short while there was a shortage of Bitcoin, so the price went nuts. But that's over. So I think we're going to have to settle down at network value. Now, where network value is, you know, how much does the Bitcoin economy GDP equate to each week, if you like? And that's basically $30 to $40 billion of consistent transaction value, which is 3-4x last cycle, pre-2020.
Charlie, I like your explanation of how you sort of price this thing, because honestly, my mind gets scrambled anytime I try to think about it. If I can take Manus's question a little bit further, so beyond the miners, the other structural support, when you have these companies that gorged on crypto for their balance sheets, there was a lot of fear they're going to face margin calls, there's going to be pain there. Where is that threshold where we do need to start worrying rather about some of these corporates?
Well, I think it depends, case by case. I really don't know. I mean, this is the Wild West. You know, people sort of talk about crypto as if someone like me knows everything about everything in it. I mean, it's huge. There are thousands of companies and there are 20,000 tokens. And no one anywhere in crypto has a handle on all of it. You know, you have a handle on the bits that you focus on. Now, the crypto businesses generally are private and they're generally pretty secretive, or they may or may not be, but there are so many of them. I think it's just like the oil. You know, when oil was -40, I mean, that wasn't good for certain oil companies. And when it was 140 or 130, that was pretty good for different oil companies. You know, obviously, most companies will be sensitive to price, whether it's not just because they're a miner, because that's a reflection of the overall levels of economic activity. But I think the biggest threat here is not so much the price of Bitcoin, but the evaporation of venture capital money, because this is a credit cycle. This credit cycle has been too good to be true. A lot of businesses have been created with unicorn valuations, and most of that money goes into marketing budgets. So I'd be watching like a hawk digital advertising prices.
And with that in mind, I suppose the question is, how does Bitcoin perform in a recession? If we're going to have yields falling, Charlie, equities under pressure, it depends who you read. Some people are saying 15, Rubini says another 15% lower on equities. One or two houses, SocGen, I think, saying another 30% to go on equities. I just don't want to misquote my notes this morning. Yeah, you've got SocGen saying another 30% lower. So in a recession and an equity market that implodes, what happens to Bitcoin, Charlie?
Well, my hope is that it proves itself and people wake up in this bear market, and just like they did in gold in 2001, 2, 3, and said, my God, this gold thing is fighting off this falling stock market, and gold had made its reputation from that. And then it did it again in 08. Okay, it went down slightly in dollar terms, but in other currencies it didn't fall at all. And then people, I think, got very comfortable with the idea of gold being an alternative asset after that time. Now, there's a difference here between gold and Bitcoin. It's quite important because Bitcoin is a risk-on asset, quite clearly. Its good year was 2021, along with GameStop and stuff like that, with tech in general, whereas gold's great year was 2020, when the world genuinely was going to end.
To the point of gold, I mean, we must mention, as I did last time, you got your gold paperweight behind you, always repping the gold bugs there. But look, gold this week, as we've had these recessionary fears, I mean, it's barely moved. If anything, it's just down slightly. What does it take to get that bid into the precious metal haven? It
takes inflation expectations to rise, which hasn't happened despite all of these CPI prints we keep on seeing. If break-even rates just do not seem to move. And now we've got copper and oil going down. They're actually under a bit of negative pressure as well. So rising real rates, gold does not like that. Now, one day, if we wake up in 6 months' time, the CPI is still printing these high numbers. I'm not making forecasts, but they're still much higher because of rents and wages and things like that, not just food and energy. Then guess what? The bull market's been wrong all along, and the price of gold will be materially higher than it is today. So I think that's the sort of positive scenario we're looking for there. On the Bitcoin side, it really is the valuation framework. If a network holds up and the MVT ratio, the kind of price sales, price book for Bitcoin, if that thing can carry on working like it has been for 12 years, then Bitcoin's underpinned.
Charlie, thanks for being with us this morning. That's Charlie Morris, CIO, founder of Bytetree Asset Management, our guest this morning on crypto and beyond. Let's get back to Singapore. Juliet Sally's with the team. She's got the first word news. Jules.
Hey, Matt, Federal Reserve Chair Jay Powell has given his most explicit acknowledgement that steep rate hikes could tip the U.S. economy into recession. He told the Senate Banking Committee that achieving a soft landing will be very challenging. Powell restated the need to ensure that high inflation doesn't get entrenched in the economy. The Taliban's supreme leader has made a rare public appearance to plead for international aid after a devastating earthquake hit Afghanistan. At least 1,000 people have been killed and hundreds more injured after the 5.9 magnitude quake hit the southeast of the country. The disaster risks a new humanitarian crisis in a country already facing hunger and a crumbling economy. JP Morgan is laying off hundreds of US staff who work on mortgage lending and reassigning hundreds more this week. Bloomberg has learned the total affected will be more than 1,000 workers. Rapidly rising US mortgage rates have driven down demand in what had been a red-hot housing market. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Danny.
Jules, thanks so much. Juliet Sally there in Singapore. Coming up, Chinese President Xi Jinping criticizes sanctions for stoking global economic pain in a speech kicking off this year's BRICS summit. More on that next. This is Bloomberg.
Choose proven quality sleep from the Sleep Number 360 Smart Bed because it can gently raise your partner's head to help relieve snoring. Ah, that's better. And can help you get almost 30 minutes more restful sleep per night. And now the Queen Sleep Number 360 C2 Smart Bed is only $8.99. Only for a limited time.
You probably know Vistaprint for business cards, but did you know we also print that, and that, and that, and that too? Can't forget about that, or that either. So next time you think print, remember, when you use Vistaprint, the printabilities are endless.
A one-man stitchwork master, but your staffing plan needs to go up a size. You need to hire.
I need Indeed.
Indeed you do. Indeed Instant Match instantly delivers quality candidates matching your job description. Visit Indeed.com/hire.
This tiny payment thing is a giant pain. Hi, ladies. Alex from US Bank. Can she help? How about a comprehensive point-of-sale system that can track inventory, manage schedules, and customize orders? That's what US Bank Business Essentials is for. What about a new oven? Can U.S. Bank help us there?
We can serve loans in as fast as 12 minutes.
That would be a big help. Huge.
Jumbo.
Ginormous. Finding ways to make your business boom. That's what U.S. Bank is for. We'll get there together.
I have a number of money managers that advise me on investment strategies, portfolio construction, and asset classes. But sometimes I just want to do a trade by myself. So I went to the App Store and downloaded IBKR Global Trader. No conversations, no messages, no friction, all done in 20 seconds. They have 90 trading venues, 27 currencies, and even crypto. So give it a try. You're going to like the way it works.
It's Daybreak Europe. I'm Manus Crony, back in Dubai. Danny Berger, resident in London.
All right, Manus, well, Chinese President Xi Jinping
has criticized sanctions for... Yeah, what he's been criticizing. Sanctions, Danny, for stoking global economic pain in a speech kicking off this year's BRICS summit.
Politicizing, instrumentalizing, and weaponizing the world economy, using a dominant position in the global financial system to wantonly impose sanctions would only hurt others as well as hurting oneself, leaving people around the world suffering.
Well, Manus, I know we're both enthusiastic to get to Tom, so I'll take it from here. Bloomberg's Tom McKenzie joins us now. So, Tom, what did we learn from Xi's speech about growth and, I guess, the wider geopolitical story?
Well, there's been speculation as to whether or not officials in Beijing will continue to stick to their growth target of 2022 of about 5.5%, because, of course, of the pressures that have been put on the economy from this COVID-0 policy. But indeed, he did reiterate this. It's the first time we've heard from senior officials on the growth target since April. So that stood out. Many economists, of course, the vast majority, think that it's going to be, if not impossible, a very significant challenge for China to meet that growth target. In fact, most economists have downgraded the growth target for China to about 4.1% for the year. It's not just COVID-0, it's also the crackdown on property, and we can get into that in more detail. But it's those two factors that have really weighed on this economy. Some of the data in June has looked a little bit more positive, but you are still a long way away, particularly in terms of building out the consumer, and the export strength that we saw in 2021, that is starting to soften as well. And if you get a recession in key markets for China, like the US and Europe, that's only going to become more challenging for China's exporters.
I think that's going to be a huge impact in the likes of iron ore and copper, and that's what's pervasive this morning in the commodity market. But, Tom, probably the most difficult call of all is whether the crackdown on tech has come to an end. If you look at JP Morgan and some of their funds, they're ramping up their bullish positions on tech, on Alibaba, on JD.com. You've lived there. You've lived through this era of, as it were, reconciliation of what Chinese capitalism looks like. Big calls from JP Morgan and the investability of China into a zero-COVID policy are critically important. How important is JP Morgan's call?
Well, there is now a growing sense that after a prolonged crackdown on the tech sector, that things are starting to improve, that officials in China realize that, of course, this sector is key for driving growth and particularly jobs. And you've seen a softening of jobs, particularly amongst the younger demographic, that will be concerning for officials. The tech sector plays a big role in ensuring that there is employment in cities like Shenzhen and Beijing and Shanghai. So there is now an alignment, it seems, on the views that even if officials are not taking their feet off the pedal completely when it comes to scrutinizing the tech sector, the environment is becoming a little bit more positive. Indeed, you had the President Xi Jinping having and holding a meeting where he discussed how the fintech sector, for example, can better align with the economy and their economic goals, which again many read as a positive symbol, which would support that move by JP Morgan and their funds to increase exposure to Chinese tech. So that's the tech part, but I did want to focus in again on what's happening in terms of the property sector, because you've seen now 11 straight months of falling sales. That is a record since the privatization of the property market in the 1990s. This is a sector that makes up about 20% of China's growth. And that just ties back to what Manus was saying about the commodity structure and that demand for iron ore and copper going forward.
Well, speaking of which, I mean, what other measures does China have in place to support the property sector or otherwise?
Well, you're starting to see the urgency come through from officials now. Premier Li Keqiang has been banging the drum about this for a couple of months, saying we need more support, not just for the real estate sector, but also particularly for the consumer. In fact, he met with officials on yesterday, and said you need to pull out every tool in your arsenal to support the consumer, to boost consumption. We've also heard from the finance minister as well, Liu Kun, saying that he and his team are studying new tools to support the economy. Goldman Sachs saying, look, it is possible for them to hit this growth target. They think it's unlikely. It's possible, but it would need massive support that so far we haven't seen. You're certainly seeing the urgency, but does China really want to undo the good work that many people have said they've done in terms of deleveraging many parts of the economy over the last few years? That is a conundrum still for officials in China.
Tom, thank you very much. Tom Mackenzie there with the very latest on China and the big issue, Xi's commitment to growth. Tom, good to see you this morning. We'll see you later on in programming. Coming up with Danny I, JP Morgan. Maybe this is the hurricane that Jamie Dimon called. Hundreds of staff in what's been a red-hot housing market are to be let go. More on the story right here on Bloomberg.
So now you've been at JP Morgan for about 25 years?
Yes.
Okay, so, and now you run one of the most important parts of JP Morgan, which, as I say, is the asset and wealth management business. What actually is wealth management, and how is that different than asset management?
Great question. The two are often used interchangeably, but they have distinctions. The asset management business is where we manage money on behalf of individuals, institutions, sovereign wealth funds, pension funds. We manage them in mutual funds, we manage them in ETFs, we manage them in single stocks, single bonds, hedge funds, private equity, and the like. And that is the heart of the fiduciary business that we run here at JP Morgan. Wealth management is that plus understanding someone's entire balance sheet. So for the individuals where we manage money, we also help them with their mortgage. We help them with a loan that they might need. We help them with their basic credit card. And so wealth management is trying to help someone with their entire life, both their assets and their liabilities, their planning, their gifting, the legacy that they want to leave for their families, the 529 plans they need to prepare to get their kids to go through college. And it's a great insight into people's, entire journey.
Align your portfolios to a more resilient future. Introducing Bloomberg Paris-Aligned and Climate Transition Indices. The new Bloomberg benchmarks are designed to help support net zero investment strategies and to meet the EU regulatory requirements. Be part of the transition to a low-carbon economy with a family of customizable equity and fixed income climate indices. Visit Bloomberg.com/PAB.
Welcome back to Bloomberg Daybreak Europe. I'm Danny Berger in London, Manus Cranny in Dubai. Manus, let's take a look at some of the things that market participants are going to be watching out for today. 10:30 a.m. UK time, EIA will publish its latest crude oil inventory report. Then 1:30 p.m. U.S. initial jobless claims data, Manus.
Yeah, as we move into the latter part of the afternoon, 3 p.m., we've got the sum of the European leaders, where they're due to discuss energy, cost of living, Russia's invasion of Ukraine, and the pivotal moment history could be made about the application for membership for Ukraine and Moldova and Georgia. 9:30 p.m., the Fed reveals the results from its annual bank stress test. And later on, again today, we've got the Fed Chair Jay Powell testifying before the House Financial Services panel. So again, Danny, it's going to be how much further and deeper they push on the or word and the scale of slowdown. And if you look at Elizabeth Warren's comments, I was reading through some of the press reports, Elizabeth Warren talking about, be careful what you do before you drive this economy off a cliff. Some pretty aggressive language coming from Congress towards the Fed because, of course, everybody would say they were late.
Yeah, and you have to wonder how much, Larry Summers talking about 5% unemployment for 5 years, how much DC is looking at that and saying, look, yes, we want to get inflation in check, but in a midterm cycle that we're entering, the political implications are obviously very large.
I just wonder the bipartisan, I mean, the other narrative is, of course, these gas tax, the tax caps, as it were, or bailing out the driver, so to speak, or helping the average American as we go into driving season. The question of whether you get bipartisan support behind that is something I know Anne-Marie is going to be focused on throughout the day.
Yeah, if only Anne-Marie was up in the middle of the night to come on for us. And
we can ring her.
I mean, it's just, yeah, we'll ring her. She'll wake up for us. I'm sure she will. She misses you always, Manus.
I don't think so.
Manus, it's probably worth mentioning, just in terms of concerns about the economy, it's obviously a concern in Europe as well. We have a bunch of PMI data today, Manus. Here's my one fun fact. Among that PMI data, we're going to get the UK composite PMI. Bloomberg Intelligence says that they expect it to drop more than consensus because of the Queen's Diamond Jubilee, because of that extra holiday month. I literally have nothing else to add, but I feel like that's, I don't know, a sad consequence of celebrating the Queen, that PMIs fall a bit.
Nah, you can't have that. I saw those celebrations. Sky TV, Kay Burley speaking for 24 hours at a time. You couldn't get enough of that. Let's talk about the impact on inflation, shall we? It's not just consumers, but the banks as well. JP Morgan laying off hundreds of staff in the US home lending unit as rapidly rising mortgage rates drive down the demand in what has been a red-hot housing market, and some would say would continue to be. Tom Metcalf has the latest. Tom, I wonder, is this the hurricane that Jamie knew was coming and could see in the data? What does it tell me about the US economy?
Yeah, it's exactly that. This is sort of the real sort of world effects, effectively, of what you're seeing from interest rates. So JP Morgan, one of the big lenders in the US, they're cutting about 1,000 people from their mortgage business, and of that, about 500 or so are probably going to be laid off, Bloomberg understands. But yeah, it's sort of, as the interest rates go up, fewer and fewer people are going to be looking at mortgages. And I think something like, there's been a doubling in long-term US mortgage rates in the past year.
Like divined from the heavens. As soon as you say that, we have the chart up showing just that. So that's the impact for the wider economy, or at least the read across for the wider economy. What about JP Morgan itself? How big of a part of their business is this?
Yeah, look, it's one of their sort of tentpole businesses, obviously through the Chase brand. So, this is something, a business that basically shareholders, really rely on. It's very much kind of a bellwether for the wider economy. And if this business does well, JP Morgan does well. So not great news, but obviously higher interest rates do feed into other parts of the business, and they're hoping that will kind of more than offset it.
Okay, Tom, thank you very much. Tom Metcalf there with the very latest on the hurricane that may be coming down the pike for the US banking sector. Danny, we got to talk about the bond markets. You're looking at Aussie rates down by 14.5 basis points, Japanese rates down by 1.8 basis points, and US Treasuries yields are declining. This is the single biggest narrative in global markets, because this bond market now has, as it were, vaulted from inflation neurosis to recession myopia. And there you go. Copper has moved. Danny, clear this up for me. Is that 3 standard deviations?
Yes, indeed it is. When you got a black box on your GMM, that's 3 standard deviations. It's rare that you're not, Manus. Yeah, look, it is that commodity move.
Right.
Look, what was it yesterday? 13 to 16 basis point move at the front end. This certainly feels like a market that's undergoing yet another major repricing. A lot of whiplash, Manus.
And the personification of whiplash is that Aussie dollar down 0.4%.
Totally.
That's the highest beta currency, one of them out there. Danny, great to be back in the studio with you. We'll continue the recession watch tomorrow. Bloomberg Markets Europe is up next. It's good to be back in the same time zone, in the same space with you.
Sleep. Feel. The Chic's difference is real. Pull back, fall in, exhale. Sleep cool all night. On a cloud, like a feather. Smooth, soft, nothing better. Holds tight, just right. Own the night. Visit trycheeks.com to get 25% off, free shipping, and 2 free pillowcases, plus a 60-night guarantee.
I'm Jeff from Nuts.com. When my grandfather started this business, he relied on freshness, quality, variety, and service. We still deliver the freshest nuts, dried fruits, snacks, and sweets to families all around the country. Nuts.com. Enjoy free shipping on your first order.
Knife making is almost meditative for me. There's a lot of passion behind it. There's a lot of hard work behind it. And it's not just something that you kind of just brush off like, oh, this is just a knife. People's hands touch this knife. People pour their passion and their soul inside of these products.
The art of blacksmithing has a very long history. Our notion of what it means to be civilized is to have metallurgy, to have the ability to transform the natural world.
When somebody uses my knife, I want them to say, damn! Golly, this is a badass knife. Come here, let me show y'all something.
Life doesn't always give you time to change the outcome. Prediabetes does. 1 in 3 adults has prediabetes, but with early diagnosis, prediabetes can be reversed. And you can change the outcome. Take the 1-minute prediabetes risk test today. Go to doihaveprediabetes.org.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds. Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Good morning. Welcome to Bloomberg Markets Europe. I'm Anna Edwards, live in London. Mark Cudmore, our Markets Live managing editor, joins us to take us through all of the market action this hour. The cash trade is just less than an hour away. Here are your top headlines. Jay Powell tells Congress a recession is possible as steep interest rate hikes will make a soft landing very challenging. He appears before lawmakers once again today. US and European stock futures lose ground. Investors fret over the economic outlook. And candidacy status. EU leaders plan on laying out a path for Ukraine to join the bloc at a summit today in Brussels. Welcome to Bloomberg Markets Europe. It's just gone 7 o'clock here in London, but it is Mark's turn to be rejoining us here in London in the studio. So great to have you with us. Mark, what are the markets saying to you?
Good morning, Anna. Well, it's very quiet on the immediate session, but it's amazing how much since I've been off last Friday, this excitement over recession risk, particularly in the US, has really picked up momentum. And that is really kind of the story this week. Lower yields, recession fears, and that is driving assets. But in the short term, not too much.
Yeah, OK, so that's what's driving assets. Let's have a look at where assets are at this point. Have a look at the futures picture for you. Just under an hour away from the start of cash equities trading, let's have a look at where futures stand. And the European picture, of course, we're very focused on what Jerome Powell has been saying this week. The European futures picture looks weaker, down 0.4% on Euro Stocks 50 futures, FTSE futures, DAX futures, all looking a little bit weaker. We've got US futures fairly flat, actually, by comparison. So it looks as if we need to make up a little bit of lost ground here in the on US futures, they're looking a little bit more optimistic. The broader picture here, though, is just what messages do we take away from Jerome Powell, I suppose? Was he much gloomier? Are we just more sensitive to the messages he's giving us? Mark, take us through what you see from the GMM.
Well, I'm really, really excited because I was planning to talk about copper today. And look at that bright red box at the top of the screen in the commodities there. Copper down 2.6%. 6% in the day. That is really one of the big themes of the last few weeks. I was hoping to draw attention to it, that no one else was paying attention, but now you've got it on the GMM already, so stealing my thunder.
Surprise.
Yeah, but bonds are obviously doing very well. You can see that very clearly. Australian yields down 15 basis points in the 10-year yields today, and that is the general theme of this week. The other thing I want to draw attention to is the dollar is generally weaker. Asian currencies doing mostly well, with the Korean won, Australian dollar big exceptions, but that is a softer dollar as a theme. And of course, Chinese stocks doing well. JP Morgan kind of doubled down on their bullish tech call. We had Xi Jinping come out and recommit to the growth plan, even though it seems impossible to reach the growth target he's talked about, but that's talking about more policy easing coming through. So overall, positive China, softer dollar, lower yields, and that copper disaster.
Okay, the copper disaster. Well, that's a good place to start. 3 minutes on the markets. Let's talk about the markets in 3 minutes. And let's start with commodities. I know you'll talk more in detail about what's going on with copper in about half an hour, but this is, you know, this isn't copper specific, is it? We're worried about oil prices not going up but coming lower in this context, worried about recession fears, sticking to commodities, sticking to iron ore in ways that they haven't, you know, that particular asset class has been brushing off recession fears of late.
You're absolutely right. This is not about copper specifically. It's about the general theme in commodities, about this growth fears, recession fears. But copper is very important. It is the key industrial metal. And I think that it's really one about the green transition, the kind of excitement, the bullishness of what we're kind of doing. So I think it's both reflects the recession fears and also a little bit of a waning of the ESG transition. It's this idea, hey, we're suddenly using coal again enthusiastically. Maybe we might not be electrifying the global economy as quickly as we thought.
Okay, so there's something more fundamental, a bit more structural going on there as well. What are your thoughts then on Jerome Powell? We will talk to Stephen Major at HSBC shortly. What did he take away from it in terms of the bond markets? But what did you think? Did you think he was gloomier, acknowledging, you know, the risks of recession and thinking about how difficult it is to engineer a soft landing? Was that gloomy, or are we just more sensitive to that kind of negative vibe?
I think he wasn't more gloomy. I think it was exactly in line with last week, but it's a market that is very attuned, looking for the words recession. He got targeted around that, and it's because he got targeted around that, he had more sound bites around recession. But I think that the general message on interest rates is very much the same. They're very focused on inflation. They're going to keep on raising rates aggressively while they target inflation until they get inflation under control. They're not going to be dissuaded by the growth picture, the unemployment picture in the short term, and therefore a recession is a possibility. But I think it shows how the market is sensitive to that story at the moment.
And some of the underlying data maybe justifying that negativity, that sense of gloom, negative surprises on the Citi, you know, their Citi negative surprises index, sort of flashing a few warnings.
Absolutely. The data has been very, very soft recently. But I think, again, we've got to go what picture we're in originally. And one of my reasons why I don't think we get a US recession this year, and why I think the current bout of fear on recession is a little bit overhyped, is that I think the consumer remains very, very strong. And therefore, even though we're seeing consumer sentiment absolutely devastated, and that is normally a great lead indicator, it is completely distorted by the pandemic and by the fact that household savings were so extremely high going into this period. So I think we don't get a recession until next year.
Okay, because we've still got some of that stock of savings in place. What about the yield story then? Again, we'll talk to Stephen Major about this in a moment. But do you think we've peaked out on yields, or because you're not quite so gloomy on the US consumer, do you think maybe yields actually can go a little higher still?
So short term, I think we've peaked out. I think, you know, it makes sense for bonds to continue rallying at the moment over the next couple of weeks, perhaps the next couple of months. For this cycle overall, no, I don't think we've seen a cycle peak in yields, and I'm dying to hear how Stephen Major will tell me how I'm wrong on that in 10 minutes' time, because we know he is always a permanent bull on treasuries. But I am not in that camp. I think that overall, as I said, the economy will hold up better. That'll allow more hikes down the line for the Fed.
A lot quieter on the rate hike front this week from major central banks than we were last week, but we've had a few more joining the 50-plus club. What about I mean, there's the Norway decision. What do you make of the global narrative where we've got to at this point?
So Norway today, 25 basis points expected, but the basic premise is hawkish surprises. I'm going to go for 50 basis points today, even though I don't follow it that closely.
Okay, so that's the call. That's Mark's call. Remember, you can get up-to-date analysis and insight from Mark and the rest of the Markets Live team. MLIV Go. That is the function to use on your terminal. Let's get a Bloomberg First Word News update. For that, here's Laura Wright. Good morning, Laura.
Good morning, Anna. Chinese President Xi Jinping has criticised sanctions for stoking global economic pain. In a speech at the BRICS summit in Beijing, Xi did not explicitly mention the US, but said some nations are politicising and weaponising the world economy and causing suffering. Xi also pledged to meet China's economic targets for the year, the first official reference to them since a Politburo meeting in April.
politicizing, instrumentalizing, and weaponizing the world economy using a dominant position in the global financial system to wantonly impose sanctions would only hurt others as well as hurting oneself, leaving people around the world suffering.
The Taliban's supreme leader has made a rare public appearance to plead for international aid after a devastating earthquake hit Afghanistan. At least 1,000 people have been killed and hundreds more injured after the 5.9 magnitude quake hit the southeast of the country. The disaster risks a new humanitarian crisis in a country already facing hunger and a crumbling economy. European Union leaders are planning to give Ukraine the green light to become a candidate for membership of the bloc. It follows an intensive campaign by Ukrainian President Volodymyr Zelensky. A draft statement seen by Bloomberg says the EU is also granting candidacy status to Moldova. The formal decision is set to come at the EU summit, which starts today in Brussels. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Mark, Anna.
Laura, thanks very much. Laura writes here in London. Now, coming up, we talk about the Fed and the outlook for Treasuries with Stephen Major from HSBC. Plus, later, we're live in Brussels, where we will speak to Ihor Zovkva, who is the Deputy Chief of Staff to the Ukrainian President, Volodymyr Zelensky. This is Bloomberg.
The 700th anniversary of Dante Alighieri's death has triggered the work of many institutions and offered a very rich schedule of events. Today in Santa Croce, we present one of these projects that suffered a difficult start because COVID-19 has stopped the project that was shared by the Opera di Santi Croce by the Franciscan community from Florence municipality and the Fund for Religious Building of the Internal Minister. Today, Felice Limosani's project is finally enjoyable. In the Pazzi Chapel, the marvelous architecture by Filippo Brunelleschi, the most important images from the Divine Comedy created by the French illustrator Gustave Doré. Through these images, we can live the violent emotions of hell, the weight of purgatory, and the sublime joy of paradise.
The digital humanities are a cultural occasion to exploit. Summing up, it's about merging humanistic disciplines with new technologies. I find this to be an innovating and modern tool to update culture. Cultural heritage becomes something to hand over to the new generations and not to be put aside, so it's about using technology, pixels, and binary code with a human and humanizing content.
Welcome back to Bloomberg Markets Europe. 50 minutes until the start of cash equities trading, and this is a picture on European equity market futures. They look weaker, down 0.4% broadly on European stocks. Now, Fed Chair Jerome Powell has given his most explicit acknowledgement yet that steep rate hikes could tip the U.S. economy into recession when he was questioned by the Senate Banking Committee.
Do you agree with the perspective that if interest rates go too high, too fast, that it could drive us into a recession?
It's certainly a possibility. It's not our intended outcome at all, but it's certainly a possibility. And frankly, the events of the last few months around the world have made it more difficult for us to achieve what we want, which is 2% inflation and still a strong labor market.
Joining us now, Stephen Major, HSBC's Global Head of Fixed Income Research. Stephen, very good to speak to you. Really nice to have you with us. So we don't want to decide what you think about bond markets or yields or Powell or recession before you've told us. So tell us what you think about what you heard from Powell yesterday and all the broader chances of recession in the US, because I imagine that's going to feed into your Treasury view.
Yes, fair enough. And the context is important because there's been a narrative that's starting to shift away away from inflation and peak hawkishness towards worrying about slowing growth and recession. So he was speaking to an audience that was ready to hear him make comments on it. And I think that the subtleties and the nuances suggest that they are now starting to think about it. And to me, it's semantics whether there's a recession or not. For some people, it's going to feel like one. For the lower income groups with debt, it's really going to feel like that. So just the direction of travel is starting to shift. And I guess over time, people are going to draw charts and they'll put a finger or a spot on that Powell testimony from yesterday, and maybe that will be the turning point. I don't know. We'll find out in due course.
Stephen, are you kind of relatively confident that we have seen the cycle peak in yields? And if so, what part of the curve? Because obviously that's a bit of a general statement.
Yeah, I think the forwards have taken us there. So the forwards are in line with the dot plot. The dot plot has got a peak for yields above 3.5, and 3.5 is 100 basis points above the Fed's measure of equilibrium, and that's already quite a lot. So the market has priced in what the Fed wants the market to price in, and that is that we're going to overshoot by 100 or so that we can get back down to 2.5.
Do you not think that Fed measure of equilibrium might possibly get challenged in this cycle?
No.
Okay.
And I think that they are a customer of the equilibrium. I don't think much they can do can influence it. It's driven by factors that go beyond the next 1 or 2 years. So we're talking about aging populations and debt levels and wealth inequality. It's not something for the cyclical data. And for me, if it's so obvious that you have to hike to 3.5 or above to get back down to 2.5, why don't you just stop before? So it seems to me that they've got the market where perhaps they want it.
So you think the market is pricing in too much tightening?
Well, the Fed is well served by keeping some hawkishness there, because if they appear that they've reached the peak, then financial conditions will loosen and the policy won't work. So that they need a couple more months of this, and I think that by maybe August, September, it's time for the formal shift to take place. The markets are smelling it already.
So, Stephen, on your kind of base theory that we're probably seeing the peak in yields roughly, and we're going to turn down, as a direction of travel rather than pinning a point. Where do you think headline CPI is at the end of this year in the US? Like, what is the narrative that you think lets the Fed kind of stick with that and not suddenly panic about yields?
Yeah, well, as you know, they have chosen to look at core PCE.
Well, they said headline
as well.
Powell brought attention to headline last week, so that's why I'm curious what you think about that.
But their mandate puts them on the core. But the reason the headline matters is because real people in the real world are influenced by it. So this year it's still going to be uncomfortably high, and I think that an honest communication, maybe it comes at Jackson Hole or sometime in the next few months, but an honest communication would be, we're not going to hit our target, and it could take several years. And I think that would help, because look, we've had a 2 to 3 year pandemic, and now we've got a war. I think it's a reasonable thing to say that we're not going to hit our target this year or next. So well, everyone knows that, by the way.
So for anybody, so for anybody thinking or still asking whether this was going to be like Volcker, you think no, it's not?
No, it's a completely different context. And the interesting thing is, we pass the data, we look at each cycle, and when you get into it, you realise that each cycle has a different context, and you're trying to infer reason from what you've seen before, but it's just so different each cycle. And so I think a more candid assessment is that this is going to take some time.
So, Stephen, where are you looking for the lead indicator that you're wrong? As in, the inflation expectations have become unanchored. We've got an entrenched inflation cycle, and as you say, it's not really about this year. It's not really even about the early next year. It's at the end of next year, we've still got 4 or 5% inflation, and therefore the Fed stopping at 2.5% or 3.5% or wherever you want is ridiculous in that kind of climate. What are you looking for?
The central assumption on everything I'm saying is that independent inflation targeting central banks are still there in the next few years. Now, if you tell me that isn't going to be right, then we haven't got an anchor. And so the single measure or data point that tells us that we've lost independent inflation targeting central banks is difficult to imagine. But You're calling lack of credibility on central banks. It just seems to be lacking any substance. The anchor is very much in place. Now, the market might be wrong, but there's a lot of weight and money in the bond market. The market tells us that the forward inflation expectations are very close to target, but they're slightly above, right? To me, that is a measure of anchor that we can use. The curve is flat. Now, the market could be wrong, but there's $100 trillion of bonds there. Are they all wrong? So to me, we have to start somewhere, and I'm making an assumption. I could be wrong. So governments might change, they may change the central banks, and the targets could change, and we could be moving to a more kind of emerging market setup at the Fed. I don't think so. But that's the scenario.
And so to go back to where we started about Powell and the significance, do you think we could look back on this and think that this was a period where we pivoted from the first half of the year, which was all about inflation, to a second half of the year that was much more about recession?
Yeah, I mean, I've been calling it a game of two halves, and that the narrative shift comes in the second half.
I like the football analogy.
Yeah, so we're 1 or 2 minutes to half time if we adjust in terms of minutes rather than weeks. So the manager of the losing team is thinking about changing the formation, and the team that is winning 2 or 3-0 is maybe a bit too comfortable. So things are slowly shifting, but it is a bit like that.
And everyone's exhausted.
There's no certainty, Mark, that we're there.
It's the manager of the losing team gets sent off during the halftime break for having a rant to the referee.
That could also happen. Yeah, that could happen. Right?
Stephen, thank you. Stay with us. Stephen Major, HSBC's Global Head of Fixed Income Research, with us this morning on the programme. Now, coming up here on this programme, Ukraine takes one step closer to becoming a member of the European Union. Don't miss our exclusive interview with Ihor Zovkova, President Zelensky's Deputy Chief of Staff. That is shortly after 7:30 a.m. London time. This is Bloomberg.
When your small business needs financing, you need a fast, secure way to get the right loan at the right time. We're Smart Biz Loans, rated the #1 online marketplace for SBA loans. We'll help you pre-qualify for both low-cost SBA loans and affordable fixed-rate term loans through our bank partners, all with one easy application.
It was way easier, way faster, and at the end, we got the loan.
So go to smartbizloans.com today. Apply now.
Sleep hot.
Or cold.
No problem. The Sleep Number 360 Smart Bed is temperature balancing, so you both stay comfortable and can help you get almost 30 minutes more restful sleep per night. And now the Queen Sleep Number 360 C2 Smart Bed is only $8.99, only for a limited time.
Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrell. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
And I would even say with the announcements, with the right announcements of the central banks now to increase the interest rates, and that I think quite in a steep way, in particular when I look at the steps announced at the Fed. And again, I support those steps clearly. I think that it's always hard to put a percentage, but at least I would say we have a 50% likelihood of a recession globally, but also in Europe.
You really get a deep downturn when things in the financial system break and the ability to supply credit to people becomes impaired. I don't expect that to happen this time. So I would expect a mild recession like 1990 or 2001. not a deep recession like 73, 74, or of course the great financial crisis.
Former Federal Reserve Bank of New York President Bill Dudley there saying the U.S. economy will experience a mild downturn, and Deutsche Bank's Christian Saving giving his view on a global recession. Welcome back to Bloomberg Markets Europe. Still 40 minutes until the start of cash equities trading, and futures point a little lower. Stephen Major is still with us from HSBC, Global Head of Fixed Income Research. A lot of gloomy voices then, a lot of this mention of the recession word, Stephen, and a lot maybe has been changing through 2022. One viewer wrote in to ask about how your thinking in 22 has changed, pointing out that you had a forecast for 1.5% Treasury yield for 2022, but obviously for 10-year Treasury, obviously that evolves, and it evolves very quickly when things that you don't expect, such as war in Europe, take place.
Yeah, so our current forecast is 2.5, which is still a long way below the spot and the forward, and way below consensus. The circumstances kept changing, and having a 1.5% forecast was untenable once it became clear that the policy rate was going to go above that, because that would have meant forecasting an inversion. And so, look, it became very clear earlier this year that the Fed was on a hawkish path. And so once we were clear that the policy rate would go above the level of our forecast, we had to shift it up. So the Fed's put a floor under the yields for us.
And what was it about inflation that maybe, well, I mean, a lot of people didn't see, maybe that your forecast didn't reflect?
Well, I think that our inflation forecast went the same way as many others. And if I had been here 1 year ago, we would have been saying, yeah, we probably got peak inflation around 5. And in fact, we were completely off. But I look back at the forecast and I see that many others were the same. Of course, some people got it right and some got it right for the right reason, not that many. But there's no point in looking into that anymore. I think we know the sources of the inflation pressure. We know that central banks have no choice but to act, and even if that increases the risk of the recession.
Can I ask specifically, where do you think there is most value in the US curve right now?
Yeah, it's the long end. And
30 year.
Yeah, and they're you're most resilient to the changing pace of the rate hike. So the 30-year is really driven by the peak rate in the cycle, and we think we've established that already. So the Fed's dot points to 3.5 or something above. But the speed of the hikes, the 25s, 50s or 75s, this could go up or down. I mean, the Fed has changed already several times, and that moves the front end. And so I think that at some stage, and it's not today, it's maybe a few months away, the trade is to start receiving the 2 to the 5 year segment. And that's what you're thinking. Because if there is a recession risk that is central to the policy, then the market will front run it. And people will receive the front end and the curve will steepen. Right now, it's, we're seeing the transition. I think it's just a little bit too early, and I don't think you can go too far wrong by holding 30-year treasuries.
Can I ask you about another risk, and that's here in Europe? And we've spoken a lot. I said the word fragmentation a lot more than the last few weeks than I've ever said it before, I think. A new word in our vocabulary. Where do you see, are you surprised to see how the words that we've heard so far from the ECB have calmed down BTPs or not?
Yeah. And the word is anti-fragmentation. That's another one. A bit of a mouthful. We're going to have to get used to that. I think that the ECB might have missed an opportunity at the June meeting to deliver more on this new tool or new policies. It's easy for me to sit here saying that, but it's important to separate the decisions on spreads and fragmentation risk from the rate hike. And I know that they're linked, but it's just that July is the rate hike. And so maybe they weren't quite ready, but the problem now is that the tool isn't ready when the market moves. And the Eurozone has a history of responses to market moves. It would be good if the ECB had the tool in place that stopped the market move happening in the first place. So it's fiendishly complicated.
Stephen, very quickly, because we're running out of time, but just given your your view on treasuries, and I know you're mainly focused on majors. You must be pretty excited, at least from a personal investment point of view, about some of the EM opportunities out there.
Yeah, I think that's a very good point, Mark. And quietly, it's been happening. And you look at some of the LATAM markets and how high the real rates are, and how they actually adjusted policy in front of the developed markets, central banks. So I think you're right. There are some EM opportunities starting to open up.
Okay, Stephen, thank you very much for your time. Really good to see you. Thanks for joining us. Stephen Major, HSBC Global Head of Fixed Income Research. Coming up, how about working a 4-day week? Does that sound appealing? We have a conversation for you if that is the case. This is Bloomberg.
Junior achievement is where dreams take flight. We are helping students connect what they learn in school to future work and career success. We are teaching them how to manage money to achieve financial security as adults. And we are showing them that starting a business also means changing lives and communities. However, we can't do it alone. Find out how you can help.
This feeling of certainty comes from inspiring your customers and expressing heartfelt thank yous with promotional products people love from the experts at 4imprint. Enjoy that feeling of certainty at 4imprint. 4imprint, for certain.
How do you foresee crypto impacting the world order?
I think it's interesting. I have a tiny percentage of my portfolio on it to diversify, but it is a very vulnerable incident because they can track who is operating on it. It can be tracked. It'll be outlawed probably by different governments, and in terms of its size, it has issues. So I think too much attention is spent on crypto, or somebody might be a gold bug, or somebody might be, I don't know, they hold gems or whatever they do. But I think that we're now in an era where we're going to have different types of money, and we're going to be questioning what are the right storehold of wealth in the value. And you're going to see around the world not only the digital versions of that take place in many forms, you're going to see other forms of that competition, I think, in the years ahead.
Life doesn't always give you time to change the outcome. Prediabetes does. 1 in 3 adults has prediabetes, but with early diagnosis, prediabetes can be reversed. And you can change the outcome. Take the 1-minute prediabetes risk test today. Go to doihaveprediabetes.org.
Welcome back to Bloomberg Markets Europe. Half an hour to go until the start of cash equities trading. Here are your top stories. Jay Powell tells Congress a recession is possible as steep interest rate hikes will make a soft landing very challenging. He appears before lawmakers once again today. US and European stock futures lose ground. Investors fret over the economic outlook. And candidacy status. EU leaders plan on laying out a path for Ukraine to join the bloc at a summit today in Brussels. Welcome back to the program, everybody. Half an hour away from the start of the European equity trading session, and futures have been pointing downwards through much of this morning, and that continues to be the case. Futures in London, in Frankfurt and in Paris all down by 0.3–0.4%. Mark is here in London once again, and so a good time to ask you what is on your mind after having a few days to think about it. And commodities clearly screaming out something new to you this morning.
Yeah, very much so. I came back really excited about copper, but then I stole my own thunder at the top of the show by getting excited already. But it's worth talking about it again. and you know it's 30 minutes ago. So I want to draw attention to just how much copper has collapsed recently when we get the chart on the screen. It's down more than 20% from the peak, and I think this is really, really important because copper is the most important industrial metal. Finally, we've got the chart there. Fantastic. So, look, I think this is a chart of the last 3 years. Now, we can see from March 2020, just a really, really incredible gain in copper. But we've kind of broken down recently. We've broken down below. That red line is the August 2021 low. We're now back to the lowest level since March 2021. And this is a real change in sentiment. So this kind of plays to several themes I want to draw attention to. One is, this is about recession. Now, we've zinc, aluminum, tin, they've all had their moments in the sun this year. But really, the most important industrial metal by a million miles is copper. It's kind of used in absolutely everything, and it's about the electronic transition. So the fact that this is coming down shows that recession fears really are alive, and the fact they're breaking down means that recession fears are really mounting. I think that's the theme we're going to play for the next few weeks. The next thing is the green transition might be put in delay. We can see that with the amount of excitement about using coal again, but really copper is all about using an electronification of the global economy. And the final theme, this is really also about China concern around growth, despite what Xi Jinping said today. China is the biggest consumer of copper, and the fact that copper is breaking down shows there are real fears about the Chinese economy mounting. So basically, Anna, I'm quite excited about copper. Don't have much more intelligent to say. Back to you.
A lot of really interesting things, though, you did say. And also the copper-gold ratio. I know your team's been looking at that, which is something to keep an eye on as we watch for sentiment indicators around the global economy. Now, European Union leaders are gathering in Brussels, where later today they are expected to grant candidate status to Ukraine, along with Moldova. Let's bring in Bloomberg's Maria Tadeo, who has a guest. Maria.
Yes, Anna, good morning. And we're now joined by Ihor Chovkwa, who, of course, is a diplomatic advisor, to President Zelensky in Ukraine. And, of course, Mr. Chovkwa, today looks set to be a big day for you. Tell me about this candidacy. Do you take it almost as 100% this is a done deal?
Well, today, really, there will be a great day for Ukraine, a great historic day. We'll keep our fingers crossed. Definitely, 100% can be guaranteed only after the end of the summit. But we have all very good positive trends on having today a positive decision for Ukraine. We have a very positive decision on the Commission. My president, over the last several days, spoke to practically each and every leader of the 27 members who will be present today at the table. Of course, he's not finalizing his call. I have to catch up with him in a few minutes. But I think today, every argument, all the proofs are telling to us that Ukraine should become a candidate country for EU membership and then move further on the path to the integration with the European Union.
And of course, this cements the shift that you've taken, trying to move away from the Russian sphere of influence into Western Europe. But I wonder, between the candidacy and the real accession talks, how do you see that going and happening? Because a lot of people out there say this is going to take a long time. You're in the midst of a war. There are issues around rule of law, at times corruption. You know all of this very well. How long do you think this is going to take for you to become a real member of the EU?
Look, we've got several recommendations by the Commission ahead of opening accession negotiations for us. We will do them. It's possible to do them even by the end of the year. Then we are hoping to open the accession negotiations. Negotiations might be tough and difficult, but I would not speculate now decades or years. Much will depend on Ukraine. Definitely much will depend on the victory of Ukraine in the war. But we will be doing the reforms with the same path with which we filled the questionnaire. You know, we filled in the questionnaire within 1 month instead of 1 year. This same path, this same speed will be with our reforms. We've already done much of the job. 70% of the acquis is in the legislation of Ukraine. 63% of the association agreement is done. So be sure Ukraine will be moving with this tremendous speed. We would like Brussels and other member states to move at least with the half speed Ukraine is moving, and that will gonna bring us to the membership to the EU.
And sir, the obvious question, however, is do you fear retaliation from the Russian Federation? I mean, they've said it very clearly. They regard some parts of Ukraine as Russian territories. Do you fear retaliation from Russia in the next few weeks as a result of this candidacy?
Well, everything possible with Russia, although we heard Putin, who said that he has nothing against membership of Ukraine to the EU. As far as the territories are concerned, we will not make any secession to Ukrainian territories. The Ukraine, in its whole integrity, in all the territories as of 24th of August 1991, will definitely be part of the EU sometimes.
And I have to ask you, there's a lot of talks and tension also too on the food situation. The other day I was struck by the comments of the editor of Russia Today, who said the best hope for Russia is to trigger a hunger crisis so that would lift sanctions. Where are the talks between Ukraine, Turkey and Russia in terms of unblocking some of the ports?
We are talking with the UN Secretary General. We are talking with the leadership of the EU, Charles Michel personally, and member states. My president spoke to the African Union members. So obviously, I will not reveal you the part of the talks, but Ukraine is doing everything. It will provide its grain. It's ready to provide its ports, provided that they are unblocked. But Russia is stealing now Ukrainian grain in the Ukrainian occupied ports. So we are hoping on the joint efforts of the international community to prevent this food crisis. Ukraine is ready on its part, 100%.
But for the time being, in terms of even the broader negotiations on the peace talks, it does seem from the outside that this has completely stopped, that is dead. Do you see a diplomatic way forward, or this is still a military situation for Ukraine?
Definitely not today. As far as the diplomatic talks are concerned, Russia is fighting in Ukraine. Russia is not withdrawing troops. Russia is not making a ceasefire. Provided that Russia can do these steps, at least have the troops withdrawn as of the line of 24th of February and make the whole and general ceasefire in Ukraine, we would be ready for the diplomatic solution. We were ready from the beginning, but Russia was not ready. But for the time being, the main diplomatic talks are on the battlefield.
And just as a very final question, have you had any communication with anyone around the circle of Vladimir Putin? At one point there was talk that Roman Abramovich was helping with that. Has there been any talks between your president's office and that of Vladimir Putin for that meeting to materialize?
To the best of my knowledge, no.
No meeting between Zelensky and Vladimir Putin for the time being. Well, Mr. Shovkwa, thank you so much. We appreciate your time on Bloomberg TV. And of course, best of luck to you on what seems to be like it's going to be a historic day for your country. Of course, it's for a very long campaign to get this candidacy. Thanks for your time. Anna?
Thanks.
Thank you very much to Maria today for bringing us that interview. And as she says, an important day for the EU and the decisions it makes in incoming days on that subject. Now, coming up on the programme, we will get to that conversation about a 4-day week. How about working a 4-day week? Imagine if this was the last day of your working week. More than 3,000 workers in the UK are on a trial to see if such a scheme is feasible. There are other trials going on globally, and we will dive into the pros and cons next. This is Bloomberg.
If you think eating heart-healthy food to support your blood pressure has to take a lot of time and hassle, then you need to try Super Beets Heart Chews, the first and only heart chew with unique polyphenols that make supporting your healthy blood pressure convenient and delicious. Super Beets polyphenols are nature's way of helping reduce oxidative stress and supporting circulation, so you feel more energized.
It gets me going. It gets my circulation flowing, and I have that energy all through the day. It's just fantastic.
I can stick them in my bag and keep them in my car. I love that I'm taking something that's healthy for me, and it's maintaining healthy blood pressure.
What makes Super Beets polyphenols so different from other antioxidants? In a leading clinical study, they were shown nearly 2 times as effective at promoting normal blood pressure as a healthy lifestyle alone.
In my 31 years of helping people maintain healthy blood pressure, I've never seen a polyphenol compound this effective. Super Beets antioxidants help support healthy blood pressure and help your body produce more energy.
Now I feel like I have this wonderful reserve of energy. My blood pressure is even more healthy. I'm loving it.
Now you can try our top-selling Super Beets Heart Chews risk-free. Call to find out how you can receive an extra 30-day supply of Heart Chews free with your first order. And for a limited time, we'll also send you a free 30-day supply of our brand new Super Beets Memory and Focus Chews. The only chew for brain health support to contain unique polyphenol compounds, clinically studied to promote healthy blood flow to the brain, while also supporting memory and focus so you feel more alert. This offer is not in stores, so call today. We'll even include free shipping, free returns, plus a 100% money-back guarantee. That's over $30 in total free gifts. Take your cardio and neuronutrition to an entirely new level. Try Super Beets Chews today. Love your results or your money back.
Call 1-800-577-2994 or visit trychoose.com today. That's 1-800-577-2994.
Welcome back to Bloomberg Markets Europe. 20 minutes ago until the start of cash equities trading for this Thursday, and you can see that European equity market futures point a little lower this morning. Now, today might only be Thursday, but some of you may already be looking forward to starting your weekend. Now, earlier this month, 70 companies here in the UK, involving more than 3,300 workers, began working a 4-day week as part of a pilot project. The organisation spearheading the 6-month trial believes that working fewer days for the same pay helps both workers and their companies. Similar pilot schemes are being carried out in other locations, other countries, including the US and in Australia. Joining us here on set this morning, Charlotte Lockhart, Managing Director and founder of the 4-Day Week Global. Really good to speak to you, Charlotte. Thank you very much for joining us. So tell us, you've set up this UK pilot. Other schemes have been running for some time. What are the early findings? Is it possible to say at this point, what are the early findings? What are you taking away from these experiments?
Yes,
hey
so
guys,
we have a global piece of research run out of Boston College, and the early findings from one of the large companies that's doing the US pilot is that the numbers are all absolutely in the right direction. So all the employee engagement, the productivity, the reduction in time off because people are unwell or for other reasons that we take time off. There's mental health days that we have. So yeah, so far the statistics are backing up our theory.
So one of the things I'm curious about is, like, obviously the vast majority of viewers are going to go, brilliant. This is, you know, everyone, this is an obvious win here that we all want. So from the cynical point of view, why wouldn't this be the future in 10 years' time? What are the big stumbling blocks that you see, apart from employers some employers don't want it?
Well, it is going to be the future. I mean, the reality is this is a train and employers can choose to be on it or follow in the dust. But actually, what we are talking about is not necessarily a 4-day week. What we're talking about is a reduced hour workspace. And so, therefore, you know, because not every company can close their door on a Friday. A lot of the early adopters, that's exactly what they've done. The name is on the tin, and they close on a Friday or a Monday or other days. But for other businesses, that's not a reality and it's not possible. So what we encourage businesses to do is look inside themselves with their employees and find ways to change their productivity measures, the way that they run the business, so that people can take time off.
So are you finding that very different ways of doing this work for different sectors, different types of company? Because in some sectors, yeah, it might make sense for everybody to be out at the same time. Other businesses might require cover, you know, almost 7 days.
Yeah, well, you know, there are plenty of businesses that are 24/7. So, you know, closing for a day isn't a reality. So this is about reducing work time.
One of the problems is that a lot of big companies tend to work in this policy that there's no real set hours anyway. You just have a job to do and you keep on doing it. So whether you're working 3 days or 7 days, you're kind of online all the time. I know this, I've been off the last 5 days, but like obviously have I? Exactly. Yes. But then the flip side is that, like, those companies tend to kind of dump more on colleagues that can cope with more because that's the way that it works. So one of my worries is that we go to this 4-day week and the people who are already taking on a disproportionate part of the workload end up taking even more because they're the ones who never really switch off, while it gives the people who are already maybe underperforming, maybe a rude word, but maybe, you know, performing more sensibly, having a better work-life balance, getting an even more extreme work-life balance, we get a greater divergence.
Yes, so, I mean, this is a really valid question. And so what we find is that when employees have a true conversation about what their productivity is and what their purpose within a business is, that work is more evenly distributed. But it gives people the ability to say no, and it gives employers the ability to say, you've done your bit, stop, finish. But with the right to switch off and all sorts of other things that we have within the labour market already, actually are just so unevenly applied. And so this is about, you know, creating a business and going, you know what, we're going to apply this evenly. So it's a grown-up conversation.
Well, I mean, that's what I wonder, though, is whether it's the changing the hours or whether it's a conversation about what works for people that really makes the difference.
It is.
Because for some people, it might be going from 40 hours to 32 hours. For other people, it might just be the opportunity to say, this is what to reassess, to take stock and to have their business take them seriously as far as their wishes are concerned.
Absolutely, and it might be going from 60 hours down to 50. You know, so
one of the things I wonder is that, like, this all seems to make sense, but it sounds very idealistic. I worry. And one of the things I worry about is that we've got the hottest labour market probably ever. I mean, record unemployment in the UK, Europe, US, and we know that's changing quite rapidly, going to get more bleak. And I just wonder, like the return to office versus work from home conversation, where employees have all the power right now, whether if we go into a global recession in a year's time, does this all change and this gets put in the back burner for another 20 years?
But see, don't forget, this is a conversation between employees and their employer. It's a conversation. And so therefore what you're doing is you're looking at how can we run the business the best way that the business can be run. And therefore we can work time out based on that, not the other way around, because otherwise everyone's just employed to turn up to work, whether they turn up or not.
Are there some sectors that need the infrastructure around them to change before they can change? Like I'm thinking about anybody who's attached to financial markets. They typically work 5 days a week, don't they? So
they do.
You know, that if that were to change, that would be a big shift in a major part of the economy, but I'm not sensing that's going to happen anytime soon.
I'm not sensing that will happen anytime soon either. And so this is why it's so important that businesses work within themselves to find the ways to reduce work time. Look, it does seem very idealistic. The reality is, though, that our society has broken down, and I get that this is, you know, the audience here are very financial markets, but our society is breaking down, and the statistics that we are having don't work, but we can have both. We can have productive businesses and the ability for people to have the right sort of time, and they are more productive when they're better rested. Burnout is a thing.
Yeah.
You know, we have that. It doesn't exist in isolation from the amount of work that we do. We don't burn out.
Thank you very much, Charlotte Lockhart, Managing Director and founder of 4-Day Week Global. I might just not come into work tomorrow. I know that's not Charlotte's plan. That's not the way the scheme
tomorrow anyway. So, you know, if I'm here alone tomorrow, you know, Anna's immediately adopted this plan.
Yeah, exactly. Unilaterally, which is not what Charlotte is advocating. But thank you very much to Charlotte for joining us. Now, Elon Musk says Tesla's new plants in Germany and Texas are losing billions of dollars as the electric vehicle maker tries to ramp up production. Let's get more on that story. Laura Wright has details for us. Laura.
Well, Tesla trading to the downside in after hours, partly in response to the release of a video interview where Elon Musk stated that Tesla's new gigaplants are gigantic money furnaces. Look, demand is hugely outweighing supply at Tesla, which is why the new gigaplants in Austin, Texas and Berlin were opened, but it's taking more time for them to become fully online. Both plants focusing on Model Y production. Eventually, the plan is that Austin, Texas will also make the much-awaited Cybertrucks. That said, Tesla's still recovering from March when its Shanghai plant shuttered for 3 weeks because of rolling lockdowns in China. That's led some analysts to downgrade their price targets. In recent days, Musk admitted to Bloomberg that Tesla will be cutting their workforce by 10% within the next 3 months. That gave the share price a pop on Tuesday, now back above $700. But overall, analysts don't want to see Tesla's goal of 50% average annual vehicle delivery growth impeded, because that would signal that the electric vehicle maker cannot promise on that future delivery of growth.
Laura, thanks very much. Laura Wright with the details on what's going on at Tesla. Coming up on the programme, we'll get back to your stocks to watch, including Banco Monte dei Paschi, as the Italian lender seeks $2.6 billion of fresh funds for its revamp plan. That's next. This is Bloomberg.
I'm going to name a couple of your babies. I don't know if I'm asking you to choose amongst your children, but, you know, some of the most recognizable buildings by you, of course, the Millennium Bridge, London City Hall, the Reichstag, and the Great Court British Museum. What was your favorite project to do?
The Reichstag does stand out because, first of all, it's an energy manifesto. So it transformed something that was dependent on fossil fuels. It uses all the technology to produce something which is essentially carbon neutral. And as a public building, that's a statement. It's a symbol of a city. It's a symbol of a nation. It incorporates works of art. It's recycling an existing building, which, as I mentioned earlier, is the ultimate in sustainability. If you can give a new life to a building, it also creates public space at the roof level. It's the most visited parliament in the world, so it puts the public above the politicians who are answerable to them. And that, of course, was made possible by the politicians. So it's a demonstration of democracy in action.
Welcome back to Bloomberg Markets Europe. 9 minutes until the start of cash equities trading. Let's get to the stocks we're watching. Danny Berger joins us with a breakdown of those. Danny, let us start with the Italian banking sector. I feel I've talked about revamps of BNPS a number of times.
Yeah, exactly. Look, it continues on. This time, the focus is on Monte dei Paschi, talking about a new equity offering. It's going to be about 2.5 billion euros. It's all part of their 2026 strategic plan. And part of the reason we've been talking about Italian banks so much is, of course, the stress that they continue to be under. So this is all part of a plan to increase profitability and to cut costs. As part of the cost cutting, they're going to cut about 4,000 jobs. So replenish capital, boost profitability, and really try to increase the revenue from its commercial bank.
And Danny, you're also looking at fast fashion retailer Boohoo. What's the story there?
So this is some executive changes coming into the fore. A new CFO, this CFO, Sean McCade, he's stepping down from Trainline.com, and he'll be joining Boohoo. Apparently, he'll be doing that in September. Jeffrey says that this transition seems to be smooth. It makes sense. He has a lot of experience online as well. And also says that the current CFO at Boohoo is going to stay on the board as well. So he is not going anywhere, helping with this transition as well.
Okay, and then let's get to private equity and listed private equity, 3i.
Yeah, 3i, they're listed in London, of course, a British private equity firm. According to a local outlet, they are going to be selling a natural health product maker, Havea Group. They're going to be selling it to BC Partners, which, of course, is a very big, active private equity firm in the EU as well. Again, this is just reported at this moment. There hasn't been any official comment, but apparently they're selling this at about 16 to 17 times valuation, times EBITDA, I should say. So still a richly priced asset, but interesting considering that just private equity action has been slowing just a tad, but clearly still going on here in Europe.
Okay, Danny, thanks very much. Bloomberg's Danny Berger with a look at the stocks that could be on the move this morning. Mark, just a few minutes then until the start of the European equity trading day. Commodities, we've talked a lot about commodities from different angles. I mean, oil down 0.9%, once again weaker on Brent. And this seems to have been a theme since Friday. We've lost, just yesterday, we were talking about losing 11% of value on oil since Friday. And that seems to be something that's still in train. A lot of people wondering if we break back down through 100.
As you know, I'm one of those people who thinks this long-term excitement about oil prices is going to be a little bit disappointed. I do think we finished the year slightly lower. And one of the theories that we've talked about before in the show in the last couple of months, the White House brought up yesterday or overnight, and this is this idea that maybe more Russian supply is actually going to hit the market than people think. So just because US, Europe, UK, etc. have very tight sanctions, there are some very, very key oil buyers who don't have sanctions, and that's China and India, two of the biggest energy importers in the world. And they might just say, we'll take all of Russian oil at a discount. It suits them, it suits Russia, and therefore all the calculations based on Russian oil coming off the market might be a little bit misplaced. Now, I think there's probably a little bit of nuance in this story, but I think that's a dynamic people are coming awake to now.
Okay, and that could put some pressure on these prices. Let's stick with energy, because we just got a red headline across the Bloomberg. It says Germany is to trigger phase 2 of a 3-stage emergency gas plan. We knew they were in phase 1, and yesterday we had a story about how Germany might go to phase 2, which is the alarm phase, and that basically means that they just get to share the pain a little more with consumers and with businesses, and that pressure that we've seen on wholesale gas prices gets a little more spread around the German economy. I mean, this just ties into the, you know, how does Europe prepare itself for a winter where they must face up to the risk that gas could get turned off, and that is a risk that everyone is becoming aware of.
I'm only on top of this story because you flagged it early to me yesterday, thankfully. But look, I think this is reminding everyone that the energy crisis isn't over, and we're going to another winter where it is very valid, and some more drastic measures are going to be seen. It's like the windfall tax we've seen, we've talked about, and ultimately this is a burden that's very real. It's going to stay there. It's going to stay pressuring higher inflation. But as you say, those costs are going to be shared more and be spread more.
Yeah, and we just got another line just a few minutes ago, so, well, half an hour ago, worth mentioning as it ties in. Qatar saying that they will demand that Europe signs a 20-year gas deal if they want the fuel. So, you know, if you're going to want that insurance away from Russian gas, then it's going to come at a price. Thanks to Mark for spending the past hour with us. The Open is up next. Futures have been pointing lower and continue to do so. European futures, that is. US futures point slightly lower. This is Bloomberg.
Choose proven quality sleep from the Sleep Number 360 smart bed because it can gently raise your partner's head to help relieve snoring. Ah, that's better. And can help you get almost 30 minutes more restful sleep per night. And now the Queen Sleep Number 360 C2 smart bed is only $8.99. Only for a limited time.
I'm Sienna Miller, and I am a Global Ambassador for International Medical Corps. Our teams have been in Ukraine since 2014. Now we are expanding relief efforts inside and outside the country to provide medical and mental health services, protection for women and children, and clean water. The needs are immense. You can help. Please visit internationalmedicalcorps.org to find out how.
In the past 2 decades, China has built large infrastructure projects in almost every country in Africa.
African governments themselves said, we are tired of aid and charity. We want to do trade, we want to be treated like partners. The Chinese came along and said, great, we don't do aid and charity, we want to do business with you.
Global Gateway will mobilize 300 billion euros till 2027.
Now, the US and Europe are answering back with their own infrastructure initiatives to counter China. But African experts are skeptical.
China has been that guy around the corner with, a bouquet of flowers to Africa, of the US, Europe and the UK have time and time again said, be careful of the flowers you see out of the window, they have thorns on them.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrell. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
Welcome to the European Market Open. A minute to go until the start of cash equity trading. I'm Tom McKenzie in London, and here are your top stories. Jay Powell tells Congress a recession is possible, as steep interest rate hikes will make a soft landing very challenging. He appears before lawmakers again today. Stocks and futures lose ground as growth fears occupy the forefront of investors' minds. Oil continues to slide. And Elon Musk says Tesla's new plants in Berlin and Austin, Texas are giant money furnaces, losing billions of dollars just days after clarifying to Bloomberg that he plans to cut 3.5% of Tesla's global workforce. Okay, let's check in on these markets then. The futures pointing to losses of around 0.6%. Jay Powell saying that, yes, that path for a soft landing is very narrow indeed, and there is indeed the risk of a recession as the Fed pivots to try to tackle inflation. The FTSE 100 is currently just down 0.1%. We continue, of course, to keep an eye on what's happening within the energy space and basic resources. Xi Jinping of China, the president, of course, coming out and saying that they are still trying to hit those growth targets of about 5.5% for the year of 2022. Of course, most economists think that is going to be very challenging, if not impossible. Economists have downgraded, in fact, their forecast for growth out of China to 4.1%. The FTSE 100 now down 0.5%. The Spanish IBEX down 45 points. Over in Germany, seeing losses of 0.4%. You saw a big squeeze and a big move lower in the auto sector yesterday as well. Just keeping an eye out that in Germany. The CAC 40 over in France lower by 36 points. Let's switch it over and see how things are playing out then. Again, there was initially some modest optimism when Jay Powell started to speak, and then that turned lower again on the recession fears. The futures now stateside pointing to losses of 0.2%. We know that Treasuries has bid as well as part of this kind of modest risk-off mood that we're seeing in the session. Euro dollar keeping an eye on on this, we've got PMI data out of a number of Eurozone countries throughout the next 2 hours, which will kind of flesh out the economic trajectory for the Eurozone. The implications, of course, for the single currency. 105 as Madame Lagarde commits to hikes in July and September, currently gaining 0.1%. Brent remains in focus, $110 a barrel, down 1.4%. We've seen volatility in the oil space. Are we starting to see signs of demand destruction? Iron ore, 113, higher by 5%. Linking that to what we heard from Xi Jinping, recommitting to those growth targets. Is it really sustainable, though? OK, let's check in on some of the individual corporates that have taken our attention today. The Italian banking space and Banca Monte Paschi just up a little over 0.1%, planning to cut 4,000 jobs. And there's a recapitalisation as well at play as they lay out their 2026 plan. Nordex winning a deal in Poland, currently unchanged. We'll check in back on this stock in the next few minutes later on in the show. Winning an order in Poland for 11 turbines, it seems. And Total, just bringing to your attention what's happening in the oil space again, continues to be relatively under pressure this week. We continue to watch, of course, what happens around Brent and WTI, currently down 0.8%, just one of the one of the oil majors we are focusing. Let's get out to Mark Cudmore, Bloomberg's M Live managing editor, for a look, a deeper dive into what's happening within the commodity space on these growth fears. And again, Jay Powell saying that, admitting that there is now a risk of recession. What does that mean for the commodity space, Mark?
Yeah, good morning, Tom. I think everyone's very focused on WTI this week and generally the oil prices, and that makes sense. But I wanted to draw attention to copper, which really is the most important industrial metal. We have had zinc, aluminum and tin have their moments in the sun some points earlier on this year. But overall, it's all about copper for a best judge of the economy. We used to call it Dr. Copper. That might have been a slight exaggeration of how powerful was an indicator, but it does still matter. Now, it is down at a 15-month low. It's 20% off the highs, and this is because the world is getting really excited by the idea that there are going to be recessions in several major economies, perhaps a global recession. And an extra angle is particularly in China. China is the biggest consumer of copper, so the fact that we're getting more negative in Chinese growth, and this clashes with the story overnight that President Xi Jinping reiterated the determination to hit their growth targets in China and that they'll provide more policy support. We've heard that positive rhetoric before, and traders just don't believe that, and copper shows that. And that means that many people are going, hey, maybe this idea that the whole world's going to be electric and we're going to need endless copper forevermore, maybe it's an extra few years down the line and we need to change our demand calculations. The important thing to draw attention to here, though, is this is not a supply story. This is about a demand story, and at the moment we're very, very negative on that demand picture, and I think it can retrace even lower again.
Yeah, the negativity around copper on the breakdown of what's happening in ESG, and of course the question marks about that demand growth picture out of China. M-Live managing editor Mark Cudmore, thank you. OK, speaking to lawmakers yesterday, then Fed Chair Jay Powell gave his clearest acknowledgement yet that a recession was indeed possible in the US.
Ongoing rate increases will be appropriate, expeditious progress toward higher rates. We know we need to have restrictive policy, and that's where we're headed. The American economy is very strong and well positioned to handle tighter monetary policy.
If interest rates go too high, too fast, it could drive us into a recession?
It's certainly a possibility. The other risk, though, is that we would not manage to restore price stability and that we would allow this high inflation to get entrenched in our economy. Price stability is really the bedrock of the economy. We must restore price stability, and we will. The public should believe that we will get inflation back down to 2% over time. We are strongly committed to restoring price stability. We do understand that it is the thing that we need so that we can get back to the kind of labor market that we all want.
OK, let's get into the key market drivers now with our M-Live editor, Eddie van der Walt, and Didier Borowski as well from Amundi Asset Management, head of Global Views. Eddie, let's start with you. We saw this in the presser as well from Jay Powell, edging closer to conceding that a recession is becoming more likely. And he seemed to clarify that in his statements to Congress. What is your assessment of where things stand in terms of how Jay Powell, the FOMC, are thinking about the recession risks now?
Well, look, I think what Powell was really saying, that a recession is a price worth paying for, if you pardon the pun, price stability. I think he's saying that, look, we really need to get inflation under control, and if that means a little bit of a hard landing, so be it. because the one thing that he said over and over again that we heard from that clip was price stability, and I think that's their absolute primary goal at this moment in time. And I think that therefore they will accept a little bit of softness in the housing market. Obviously they don't want to crash the economy, but I think they will settle for a couple of periods of negative growth even in the US, if that means they can put price pressure under control.
Okay, and you talk about the housing market, and we're seeing, of course, mortgage rates in the US get to around 6%, and, of course, sales starting to soften as well. Didier, let's bring you in at this point. What is your assessment of the recession risks in the US? And if you do see a recession, as Will Dudley, of course, formerly of the Fed, says is looking inevitable now, if you do see that recession, what form does that recession take in your view?
Well, we don't expect a recession, I would say, in the best case scenario. That said, we fully agree with what Chair Powell said yesterday. It's a distinct possibility. The first sequence in terms of monetary policies to anchor inflation expectations. It's a very hawkish stance, so they will continue to hike rates aggressively in the short run. And if you look at the yield curve, for instance, it's likely to invert by the end of 2022, early 2023. And the fear of a recession will remain there. Not immediately, I would say, but for late 2023 or 2024. So my point is that from a financial market perspective, that's true that it is a sword of Damocles if financial conditions start tighten too rapidly. That being said, I think we must be clear. It's quite easy in the short term to be very hawkish when inflation has not peaked and growth fundamentals remain quite solid. The first sequence in terms of monetary policy has not ended. It's very hawkish, and the Fed will continue to hike rates aggressively in the coming months.
Well, that comes down to the point, doesn't it, which you've illustrated, which is the stomach. How much stomach does the Fed have to drive down growth as they try to tackle inflation? And do you think in the market pricing, because we're starting to see now markets pricing, that maybe you get to peak rates towards November this year, and then possibly you get a pause or you get some kind of drawdown from the Fed? How are you assessing the kind of rate trajectory on that, Didier?
So first, 0.70, like 0.075 in July, and after the Fed will diminish the pace of rate hike, 0.50, 0.25, etc., reaching 3.5 and 3.75% in early 2023. My point is that at some point the Fed will probably adopt a hawkish stance. We organized our Amundi Global Investment Forum 10 days ago, and there was a key question that was raised. Is Jay Powell likely to be Arthur Burns, like the Fed chair during the 70s until 78, 79, or someone like Paul Volcker? He seems to be someone like Paul Volcker in the short run, and we agree. That being said, we disagree that he will continue to hike rates as aggressively in the second half of the year.
The market is pricing the possibility of demand destruction, but we are seeing that US consumers and others, are attempting to drive less. Of course, it's very hard to drive less when people need to go to work and so on. But right now in the work from home environment, people have the option.